morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
I didn't get the army green memo today.
Kind of weird, right? Because how many times have you seen me in green and we didn't talk?
I wear green a lot. So.
I don't.
Yeah, no, it looks nice. Yeah.
Yeah, I don't like to do it if I'm home because I figure the green screen, but that doesn't matter anymore.
Oh yeah, you got to be careful with that.
Sometimes you just get a floating
tone
head.
Of green though. I think that's okay.
Mikey did his like lime green during COVID while we were all like remote, and I remember that.
That was a disaster.
Yeah, that got a little.
I mean, it's fun if you know how to use Photoshop.
Yes. And we have some peeps that are good with Photoshop.
Yes,
Yeah.
I suck at Photoshop.
Put all sorts of things on his chest.
The good old days. I suck at Photoshop. Now you can be great at it. I mean,
Hey, you just plug it in ChatGPT. It'll.
No, AI. I use the AI editing in Lightroom all the time.
Unbelievable.
It saves
really
me
is.
hours.
It's gotten too good. Did you see? I didn't research, so maybe I'm just taking it for what the person wrote there. But they wrote a whole almost like a
with Google.
Yeah, like with Google. Yeah, like it almost looked like the car game that the kids play and stuff like that, or the.
What are you talking about?
Well, I can't get
It's boomering it a little bit.
Yes.
I think it's Google.
GTI. GTI? Was that what
GTA.
GTA, sorry. there you go.
Grand Theft Auto.
Grand Theft Auto.
Yeah.
Google has a program that they're coming out with. I think it's called Genie.
Okay.
You can basically like create your own games. I don't know how extensive the games are going to be, but it was
sure.
The guy said it took him 10 minutes, and he made a game where he jumps into a car, drives around, runs over a human.
Okay, those details were missing for you. You're like,
yes, no, I know.
All right, so there we go.
This is how the news cycle starts.
I was like, girl, what?
Yeah. All right. If you two found it, then it would have been fine. But I found
all the video game stocks were getting hammered.
That's
Friday.
the point I'm trying to make here.
Unity was down like $10.
That's the point I'm trying to make.
EA's like in a buyout talks.
Yeah, well, that buyout talk is
Take-Two.
That's like when you want to buy a house, and then all of a sudden, you find out that there's like a storm coming, and the storm always comes down your street or something like that, and then they find something wrong with the house. Like, I don't know, I think there's radon in the basement or something like that. And you walk away from the deal.
Well, we wouldn't know that because home ownership.
That's something you'll be able to do, right? Even though you both own a place. Yes, I got it. Crying with 2 loaves of bread under both your arms. God, it never changes. The beat never changes.
What's happening? How was your weekend, Nikki?
It was good. Did
you go ice fishing?
I did go ice fishing.
You didn't die?
I didn't.
Will you be going back?
I didn't see any pictures on the gram.
There was no reason for them.
What happened, girl?
What happened was
we were pretty much skunked for an 8-hour session.
You mean high or no drunk? What do you mean?
Skunked at, there was copious amounts of drinking. But that's like what you do for fishing.
Sure, great.
That's basically why you're out there. Mm-hmm. But the fishing aspect, the actual getting the fish out of the water was not successful.
You're a conservationist.
Yeah, we were.
They had sonar. I mean,
we had everything.
They were in 4 feet
LiDAR.
of water. They were in 4 feet of water. They had sonar. They had.
No, we were all over.
I know. I'm just figuratively speaking.
We were everywhere. We moved a couple different times. I mean, we had.
How many elements?
We had 6 guys, poles in the water.
What? Excuse me? I read a book like that. I'll tell Chrissy.
We had 6 guys fishing the entire time for 8 hours. Plus, we had 2 or 3 passive lines that we had in there. All sorts of bait. We had minnow heads. We had worms. We had lures. We had all the stuff.
Sure.
For 8 hours.
Wow.
I think we caught 10 fish.
That ROI.
It's
10 fish, none of keeper size. That
was about the friends you made along the way.
That's what it was. It was about hanging with boys. It was a great time.
He's known these friends for 30 years. I mean, there was no new friendship.
Okay, but that's good.
It was pretty
cold,
demoralizing. I mean, it actually was the nicest day we've had in about 3 weeks.
It was sunny, and it got into the teens.
Yeah, it was like 20 degrees. It was not.
Oh yeah.
It was better than.
It wasn't negative.
But we were pulling all the stops, moving. we're drilling holes everywhere. That was probably the most fun I had the whole time, was just using the auger and just drilling holes everywhere. I mean, that was a lot.
You felt like surgeon.
Yeah, it was great.
Just getting drilled with the boys.
You really like this, Vanna. You're reading too much smut, okay?
Never.
Dipping his pole in the water.
But yeah, it was it was, the funny part was that we'd put our hooks in and the bait would be on the hook for 45 to minutes to an hour. Like there wasn't even nibbling.
Not even a
like
nibble.
It wasn't even that I was a shit fisherman and I couldn't pull them in. It was, they were nowhere to be found.
Was it crowded? Like, were there how many other huts? Maybe was that the issue, that there were just too many?
No, there were huts all around. I mean, like it was pretty.
See, I could have told you.
But we went over to the other groups and we're like, "Are you guys getting anything?"
No, I could have told you it got cold way too fast, and the barometric pressure of the lake.
What?
The barometric pressure of it made the fish too lethargic. And I could have told you this, but
this is actually
you didn't ask me.
Kind of the situation. Like it got very, very cold, and the ice got very, very thick very quickly.
Yeah.
Pressure.
Yeah, the pressure on the fish. They don't move. They don't bite. They don't eat. They probably go into sleep, like hibernation. I could have told him all this and saved him a lot of hours. Now, he told me all that later in the day.
Yeah, I know. I told you all that.
That's interesting, though.
Not when you're freezing your arse out.
Yeah, not when you're sitting there like wiggling the rod. Don't go there, Vanna. These are...
Hey, it's not the rod. It's the wizard.
You can't set me up with this. I'm sorry you didn't catch anything, but I mean, I'm glad that you had fun though with your friends.
It was fun, but it was tough. It's tough. I mean, you're out there. We got out there at like 8 a.m.
So that's already too late. No,
and went until the sun went down.
Yeah.
Oh, really? You stayed that long?
Yeah, we were there a full 8 hours.
Wow, like a job.
Yeah.
Like outdoor, like you committed a crime and you were doing outside.
If it was our job,
labor.
we would come home and not be able to cook dinner.
You wouldn't be able to feed your families.
Yeah. It was an unfortunate situation, but it was fun. Got to hang with the boys. You chit chat, you drink some beers, have some fun.
You had some good whiskey too. Don't lie. I saw a picture of some fancy whiskey.
Wait, what were you drinking?
We had. I have a friend that has a little insider at Binny's, and we had a Blanton's Gold.
Oh, Blanton's
Gold, not just the regular.
Wow.
Yeah.
None of the Johnnies like him can get this.
I can't.
Yeah,
I have about a dram left of it. Yeah, I've had it for a while.
Yeah.
So, that'll keep you warm.
It does.
You guys were just drawing out. You just drinking right from the bottle, probably just
on the lake.
Oh yeah,
like a bunch of
heathen thieves that you are. Yeah. Good for you. Good for you.
But it was fun. It's unfortunate.
Not as fun.
I would like to have like a picture of 80 fish. You get a bunch of them and stand over them. And,
that's what AI is for.
Right, or you go to the fish store and buy some, like we used to do as kids.
Oh, it was so funny. One of my buddies, he hit one of his kids loves walleye, and he's telling his wife, don't worry about going to the grocery store to get walleye. We're gonna come back.
Baby girl,
we're gonna have 2 weeks full of walleye because we told him we're like,
clean out the freezer.
All the fish we catch. You can have
it all.
I'm not going to take
Hey.
He told his wife, he's like, don't worry about getting the walleye this week.
You got 8 guys, 2-3 fish a piece. You got a loaded freezer.
Yeah.
You got to move the body. Yeah, for sure.
Hello, Domino's.
So we told him, we're like, on your way home, you're going to have to stop at the store and get some and tell the wife that it was our catch. But unfortunate.
Anyway, how was your weekend, Bat?
A lot more fruitful than my friend across the pond over here. We finally beat Loyola. They did win 2 out of 3 games this year, but we finally beat them in an overtime shootout, 3-2. So we're very happy, and they didn't even shake our hands after the game. That's how.
Oh, the audacity!
Yeah.
Oh, the scandal!
The man upstairs would not approve of their attitudes after the game. Not very nice. It was really good. So it was good. So that was our day. We're going to meet them in the playoffs again. So they'll have maybe they'll have revenge. But it was fun. Very good. That was my whole weekend. That was because it's Loyola. They do all these games like halftime stuff and everything. It was another 11:30 night on a Saturday. Started at 8:10 and got home at 11:30.
Ugh.
Yeah, long night.
Unbelievable.
Yeah, that was.
You also said that you tweeted you watched the Miracle movie on Netflix.
I did. It was outstanding. It was really good, and it's nothing like it's Miracle on Ice is like the 40th anniversary. I believe.
It was the 1980, so it would be like 46.
45.
Yeah,
45 years,
whatever,
46, whatever. 45, I think. Anyway, everybody knows the story who's watched it one time. There's nothing new to add to it. But seeing the old players and seeing their reaction to it, and you go back into 1980, and you had the oil embargo, and you had a lot of current events. The world was kind of divided. The country was kind of divided the way it is now, and how it brought everybody together. Maybe just watching it again can bring us all together again. It was really a powerful, good movie for everyone. And watching those guys.
Is it a documentary or?
It is a documentary. It is a documentary. It is a documentary. And then because they talk about their families, like how it affected their families, and it was just because
they were all
really
college
heartfelt.
kids.
Say again?
They were all college kids.
They were all college kids. They were all college kids from mostly Minnesota and Boston, and you had that dynamic on them to become a team in only like 6 weeks. You know what I mean? You got like an East Coast kid for a bunch of mostly Midwestern Minnesota kids. It was really cool. It was really well done. If you haven't watched it or you haven't seen something about the Miracle on Ice in a long time, you should watch it. It was really.
I'm sorry, but the new season of Bridgerton just dropped, so that's what I was watching.
After you binge watch that and you got an extra hour or so, hour and a half, it's just one.
I will watch it. That's
cool. It was really cool.
I mean, it's before like our times, but I'm familiar with.
Brought people. I think it's going to bring
story.
people together. I think it's nice.
All right.
That was my take on it.
That's great.
That was good.
Are we going to sing Kumbaya now, or is that going to be later?
We could probably use it. We could probably use it. Yeah, I don't mind that.
Hey, we got to
use Kumbaya for gold and silver, and even the market itself last night. We could have used a little Kumbaya.
Crazy.
We got a great show for you today on this magnificent Monday. At the top of the 8 o'clock hour, we have a little options jive research corner. Kai's going to come in and present his outlook for the week ahead. Then at 8:40, Dr. Jim in the house. The Skinny on Options abstract application. I think, in all sincerity, it might be colder in Florida this morning than it is here in Chicago. Like, the iguanas are falling out of the trees. They are stunned. Yeah, I watched all the videos. Like, you could just drop them off in this place, and like people have like barrels full of iguanas, and the alligators have like stuck their nose through the snow, and they're just like Florida's a weird place, man.
Yeah, I mean, I'm below the frost line, and I think it's going to be freezing temperatures there now. I mean, 36.
Yeah.
I mean, that's right around the lows.
But in Fort Lauderdale, like it was like 30 and like 30 mile per hour winds. Yeah. But there was like, of course, one guy still with the top down on his convertible. He's like, damn it, I'm going to do that. But be safe out there. And like a foot of snow in Carolina.
In Florida. Yeah.
Well, North Carolina.
Yeah.
Yeah, that was.
But it'll be gone the next day.
But it hasn't been. It's been so cold for so long that it's causing a lot of problems because they don't have the infrastructure. No, they just don't have.
DC kids took 3 or 4 days off when their snow hit.
Yeah.
So it's not just.
Yeah, I think schools are still closed. Yeah, in the DMV. Yeah.
It's all over the country. That being said, net gas is off of its $4 print, $3.60. In net gas. So it's down about 17-18% this morning. Can't figure out anything anymore.
Well, then market measures, 9 o'clock, a 0DTE breakdown, January performance, special guest appearance doing the analysis.
Yeah.
Kai.
Yeah.
The General.
The General. It's another really good one. We're going to look back at January stats. It was a very good month for 0DTE, so we're going to break down all those metrics.
Ooh.
Really cool stuff.
Now past months are not indicative of future results, but
of course.
Usually the market doesn't know it's February 1st or 2nd and different than January 15th. Usually it goes for a while, but we'll see.
And then we have live from the trade desk at around 9:20 with Quentin counting down the top trending tickers over at tastytrade, and Ryan giving us some insight to the dumpster fire that is crypto right now.
Yes.
So there's a lot happening.
Yes, there is a lot.
You mentioned it. I know we'll talk more about it all day long with crypto, but crypto has been spot on the way it's been behaving. We talked about it on the show a lot, how it has not caught a bid with everything, with all the good news bites about it being regulated, going here, BlackRock buying all this.
Yeah, no good.
No good. The futures were telling you no good.
Yeah.
Well, that is our run of show for today. Let's get this show on the road. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire.
This just in.
Top stories. Jump in.
Today's headline. This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is February the 2nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. It's Groundhog Day, you guys.
Oh, I didn't know that.
Oh.
Is it really?
Yeah, Puxatani. I don't know if he.
We still
I don't
do
know
that?
if it's out yet. Yeah,
What's the groundhog's name?
Puxatani Phil.
Yes.
I don't know if he's already done his thing because it's like on the East Coast, so he probably. I guess I could look
He's got to
up.
be getting old. He's been the same one for quite some time. Or do they do like they just get a new one and then they name it the same thing?
Yeah.
Is that it?
Yeah, I
They
think
rename
so.
them?
They're not
Puxatani Phil did see his shadow, which means 6 more weeks of winter are on the way.
Damn.
That stupid
Come on.
rodent.
What does
I love
Pennsylvania
animals.
know anyway?
That's crap, but I kind of believe it. Well, that super sucks. But if you're a fan of the Groundhog movie, you can see a lot of where it was filmed right here in Woodstock, Illinois.
Yeah.
And they do festivals around it. So if you come on to Chicago, go to Woodstock, Illinois.
Where Vinny might have to go on February 9th to get his license, Woodstock, Illinois, because there are no
Appointments?
in the surrounding area here.
What?
Yeah.
That's bonkers. Why'd
Mommy
you send
might
them
be-
down to 95th and King Drive?
Yeah. You should do
I
that.
bet they're open. Come on down.
Mom might have to take him out of school
Vinny,
to
I'll
do
take
that.
you. Vinny, I'll take you.
Yeah.
Anyway, earnings for today, Mr. Bat.
Palantir is probably
Yeah.
going to be the one that
That's
everybody's
the-
on
that's the
everybody's
one.
lips. You do have Disney, PayPal, Merck, maybe a plethora of other stocks, but I don't think you'll be interested in them. I think Palantir, which has been weak as of late, PLTR trading at 140, 149 this morning, closed around 146.5. That's a low that it hasn't seen since the summer of last year. So definitely off its highs of around 200.
Getting to today's headline, looking forward for the month of February. In the week ahead, investors' attention will be focused on Friday's jobs reports. Economists expect the U.S. economy added around 65,000 jobs last month. In the corporate world, you're going to get earnings from the rest of the Mag 7. So that's going to be Google and Amazon. You're also going to have Palantir, like you mentioned, Bat, and AMD. What are your thoughts? There's a lot going on this week.
There is a lot going on. I think earnings and these earnings, as we saw with last week's earnings, are kind of independent events and really typically have no bearing on what the overall market is going to do. And this market, I think Nick said it well last week, the ick.
Ew.
Getting the ick.
I mean, E-minis were down 95 in the overnight session. They're not on 30. Vol was at 21.
Now it's 19.
Now it's 19. I mean,
Bitcoin 74.
That's a good buy the dip, but it just does not. It feels like
Gold 4,400.
We'll get to it.
No, I know. I mean,
Yeah.
it's got an icky feeling.
Yeah.
an icky feeling.
Keep it tight, I think.
The January barometer for stocks comes with a big asterisk this year. It was tough to say anything was typical about this January. Normally, you're like, hey, however stocks move in January is kind of the barometer. But crowded trades felt sharp moves up and down. The dollar hit like a 4-year low. Microsoft was off 11%. Apple was off almost 5%. Tesla dropped almost 4.3%. So I guess it's saying investors already priced in a lot of upside to stocks.
I know the Baxter is off of all-time highs too. I mean,
Sure.
like, you got to put it into context here. Yes, down 5% off of all-time highs, and they're up 25%. I mean, this is like we said. I agree with you. It seems like it's on unstable footing. I think we went nowhere for January. Actually, a little bit higher, right, in the overall market.
Something like that. I mean, we've been sitting at like 69.50 for.
We're 69.34 on the even the S&P.
Yeah, that's where we've been.
I think we started around 68 and change. I will.
So I'm going to look it up.
Look for the year here. Let's see. January 2nd. It looks like we were right around here. Yes, 69.40 something. Yeah, we went nowhere. It was
What a violent way to go nowhere, though.
Violently unchanged.
Violently unchanged.
Yeah.
He's been texting me that
Violently
for the last 2 weeks or so. Violently unchanged.
Yeah.
I think that's a good way of January. With volatility relatively unchanged too, maybe a little bit higher. 19th, a little bit higher than where it's been.
Well, good news. The dollar clung to its gains on Monday as investors weighed what a Fed Reserve under Kevin Warsh might look like with his preference for a smaller balance sheet. The yen was also back on traders' radar after the Japanese Prime Minister Takashi over the weekend talked up the benefits of a weaker yen in a campaign speech. Let's talk currencies.
Yen off of its lows of 63, off of its recent highs of 66, sitting at 64 and 5/8 right now, down small-ish. The pound is down also. The euro is down, but again, more in the middle of its most recent range where they all caught a bit.
They're huge moves.
Huge moves.
They're
not typical moves.
Yeah,
Icky moves.
again, icky. Yeah, the bounce in the dollar is nice for my positions, but I'm still so far behind.
Sure.
It's just a slight reprieve for a couple days.
Getting to the big elephant in the room, gold and silver's $7 trillion wipeout delivers a painful lesson about risk. If safe investments like gold and silver can crash in a single day, investors need to reconsider portfolio hedges. Okay, thanks. But what the hell, metals?
Yeah, what the hell is right?
It's been on Friday, the gold-silver ratio moved from like 45 to 55.
Whoa.
Which is $10,000
on the little contract.
On the little one, 100,000 or
no,
50,000.
50,000.
5x.
Right. Yeah.
It's a huge move. It's still.
It took back the whole month. It started the January 1st around 56, 57, got down to around 45 and closed at around 57-ish, right? It's 59 right now. A whole month in 2 days.
But
that's how big the moves were on.
What's causing, because this can't all just be because of the Fed
I listened to Ilya and Chris last night, and their macro views haven't changed. And I got these emails too from people, complaining. First of all, there are no stops on silver. So, people, I got the emails about, this manipulation. There haven't been any stops. There's never been any stops on silver. There are no circuit breakers, is what I meant. Circuit breakers on silver, unlike the market. It's no conspiracy. There's never been any. There are none. So it's a big contract for a reason. And we talk about staying small and $100,000 in notional value set aside for these type of products. They're just big products. But when the leverage works, everybody's very happy. When leverage doesn't work, nobody's happy. Usually it doesn't work to the downside for most retail investors. What's happening this? Well, I don't know what changed in 48 hours about the macro view. What happened was the big unwind. I talked about it last week and I said, it just has that feeling like it's become, we talked about it, it's a meme stock. We said it on Thursday or Friday before these moves. Like, it feels like meme stock movement in these futures, and it's just not sustainable. Now, I didn't know it was going to stop in gold at 5,000 or 8,000, but it just seemed like it had that feeling of crash-like numbers, and that's what you've had in these metals, crash-like numbers. You had crash up and you have crash down.
And volatility exploded in both gold and silver, and you looked at the ETFs as well, the option prices. When you get
I got caught in gold a little bit too. It's not, I sold it nicely, and you don't plan on having, the biggest move ever in the ETF's history that day. I didn't think it was going to be a one-day event.
When you get situations like that where volatility explodes in that fashion, you need the continuation of that move to sustain that volatility. And when the volatility comes out, all the hedging unwinds because your option that's a 40 delta that's 10 points out of the money, turns into a 15 delta, 20 delta, and you have to unwind that hedge that you have on it, and it adds fuel to the downside.
I'll
It's the same thing we saw with GME and all the other
Yes.
meme stocks, where that unwind is really violent.
Yeah, I'll use percentages just so far this morning. Silver was up 6 or 7%. It's
not over.
Down. Oh no, I know. I mean, it's just overnight. We haven't even opened yet at 8:30 Central Standard Time. But it was up 6 or 7%. It's been down 4 or 5%. It's up 2% right now. That's all over last night.
Yeah.
Just now, since we've been on the show in a half hour, it moved 4%.
7-hour range, yeah.
Yeah,
Which is incredible. I mean,
No, thank you. I'm so scared.
yeah. It's icky. It's the ick.
It is icky. It is icky. And if you've applied leverage, it gets even worse. Like these futures, and I think they raised the margin on these futures.
Yeah, and like in that inverse one, like you just got to be real careful.
We talk about staying away from inverse products. The leverage on them is wonderful when it works, and then the buying power when it doesn't work really bites you. And I hope it doesn't hurt a lot of people.
ZSL, that's the one.
Yep.
Oh, yeah. The double.
Yeah, the
short.
ultra short.
Yeah.
Leverage costs.
Yeah.
Anyway.
Yeah.
Just be careful. Hey, in other commodity news, oil prices fell 3% as President Trump said over the weekend that Iran was seriously talking with Washington, signaling de-escalation with an OPEC member after risks of a military strike drove prices to multi-month highs. What are we doing in oil?
He's got a guy. Oil heavy rank of 82, back down to under 62. It got up to 64 and change.
Yeah.
It started the year at 55. So it's had a huge range relative to its implied volatility. Now implied volatility is a lot higher. Maybe something to do in there. Go ahead.
I had a call spread in the 15-day. So we have an iron condor out in March. We did that last week during like fast market or what's your assumption? And then I had that call spread where I've been kind of scalping on the put side. I sold that put spread, took off the put spread into the rally, got a little bit of a down move today. So I just closed that.
You haven't been playing the ranges because the ranges have been so big, but you've been playing the moves.
Yeah.
So like if you were short a call spread and the call spread was kind of getting in the money and really starting to hurt you, you sold a put spread, and then it went higher, you covered the put spread, or if it went lower, you covered the call spread. You've just been trying to play the moves. Yeah. It's been defensive moves.
Yeah.
In other news, Bitcoin fell below 80,000 over the weekend, continuing its decline as liquidity worries mount. On Friday, Bitcoin fell as low as 81,104, but over the weekend, it got down to, 78, 77, 76. What are we doing in Bitcoin?
In the doghouse.
Yeah.
Bitcoin and
But explain
crypto.
this move then.
It's funny because that's not being talked about because it's just not in it's not in everybody's mind right now. But this is the same sort of. I mean, it's just inverse to what we saw with.
Yeah, I actually nibbled on some at 77 and change, just over 70.
How did you do?
I just bought. I don't use any leverage in Bitcoin like iBit or any of the others. I just go right into the Bitcoin Cash BTC /USD. It's trading at 78 right now. It got down to 75 after I bought it.
Yeah.
I mean, it's not just small. We talked about it all of last year with the prior administration that, if it gets into the 70s is where, we were guesstimating it might get to. That's where we would nibble on a little bit. So I nibbled on a little bit. It goes down to 72 or 73. I'll nibble on a little bit more and then I'll be done.
I forget the exact strike price, but I think this is very close, if not went through Michael Saylor's strategy strike.
He's no longer a genius, right? I mean, have we put that to
when it's in the
bed?
70s now. So
I hope we put that to bed.
do with that.
But very, very, and MicroStrategy is 138. It closed at 149 and change, so down $10. We talked about how Bitcoin had every reason to rally, and it would rally, 1%, 1.5%, and didn't really move. And the handwriting was on the wall in hindsight on these. Now, I would have been looking to try to buy a dip in Bitcoin. I had no idea that it was going to go
be
of this magnitude.
30, 40.
And I might have done it earlier if there weren't other things that had my attention, like gold, like silver, like even the market itself has been worthy of your eyeballs. I mean, 90-point move on the E-mini S&Ps last night. now down 30. I mean, you don't think about Bitcoin when you have gold and silver moving 30%.
Yeah.
Sure.
Market moving, 2-3% a day.
Disney topped analyst estimates on both revenue and earnings when they reported early this morning. The experiences division, which includes Disney theme parks, resorts, and cruises, crossed $10 billion in quarterly revenue for the first time. Cruises are a scam. But Disney also looks to maybe be close to picking Parks chief tomorrow as the next CEO.
Why do you say cruises are a scam?
I don't
Not a
know.
cruise person?
I don't know. It just seems like a lot of money to pay to eat bad food with
That
too
cafeteria
many
food?
people. Yeah, I don't know.
I don't know.
It just
Listen,
seems
Jenny
like
would
they'll
think
nickel and
otherwise.
dime you for every other little thing that you want to do. I don't know. I've never been on a cruise. It's not good for me.
Oh, so then you can't talk. I've
not
been
good for my
on a
nervous system.
cruise. I've been on a cruise because I could say it. You're 100% correct.
Yeah, it's a scam.
Disney 111, maybe 11-ish.
Inside move.
Inside the expected move, yeah. Closed around 112 and change.
But it was also just weird that they had their earnings like early on a Monday. Like how
Yeah, it
rude.
was-
Like
Yeah,
weird.
yeah. You're
Like,
trying to hide when you
Yeah,
do stuff,
right?
stuff like that. I mean, at least it has that hiding feeling to it. Disney been going sideways.
Yeah.
Oracle says they plan to raise 45 to 50 billion in debt to build additional capacity for its cloud infrastructure. The company, chaired by billionaire Larry Ellison, said they plan to achieve their funding objectives using a combination of debt and equity financing. What are you doing in Oracle?
Good, because I'm short some puts in Oracle. It might give me a chance to get back close to even with Oracle trading 172, and I'm going to round up. That's up about $7 or so. So whatever the reason might be. Now, Oracle is one of those stocks that's been a dog in this whole thing. So I really was trying to catch a falling knife here. Oracle, I'm leaning with a little bit of long delta just because of stock price. Getting lucky this morning. But getting lucky to get back to even. Now you have to decide what do you want to do. Do you want to sell some calls and make it an iron condor? Or do you want to sit with it? I'm probably going to sit with it. But it's decision time now.
Yeah.
How about you, Nikki?
This has been like one of the overhangs.
By the
I
way,
feel like-
gold futures are down now. They were
they're basically unchanged. It's
They were up 100. GLD went from around, it closed at 445, trade up to around 448. Now it's 433.
Yeah, the Oracle stuff is like the last little Momo that's been happening. Like every time they have like this raise, Amazon's going to invest, XYZ is going to invest, and then you kind of stop the bleeding in the market because all those stocks kind of catch up a little bit. That's sort of what is happening this morning. You have Oracle up, $7-8.
Yeah.
I think Nvidia was up a little bit too. No, it's now down. So I don't know. I have long delta. It doesn't look.
Nvidia down 3.
It doesn't look great.
It doesn't look. It hasn't been great. No.
Amazon, they have earnings this week. They've asked the FCC for more time to meet a deadline that requires the company to deploy roughly 1,600 internet satellites by July of this year. The company needs to bring more of its satellites online so it can begin offering a paid service to customers. The company has earmarked at least $10 billion to build out the network in a challenge to Starlink, which is owned by SpaceX, which is part of the Elon cinematic universe.
That's good.
Amazon trading 237 and change, down about $1 or $2. But you got the NASDAQ down 7/8 of a percentage point, down 270.
Sure.
The S&P's down 35. Russell down 11, Dow down only 50. Dow the strongest of the group relative to the other three that I just mentioned. But all these stocks you would imagine are going to be a little bit weaker this morning if we stay here.
Yeah.
GameStop CEO Ryan Cohen says he hopes to pull off a very, very, very big acquisition of a larger consumer company. I don't know how CEOs are allowed to get away with saying stuff like this, but I guess the SEC don't care.
The game has changed. I remember when they weren't able to say anything.
He didn't say whether or not the company would sell off GameStop's Bitcoin to try to pull off the deal. But
Can't sell it now.
if Cohen can grow GameStop to $100 billion market cap, around 10 times his current value, he stands to reap a massive payday. So he says this acquisition will be transformational, not just for GameStop, but ultimately within the capital markets. Again, wild thing to say, my guy.
Yeah, I think it was Reagan who was labeled with voodoo economics. I mean, this guy takes Reagan to a new level here. GameStop's actually up on this news, up around 50 cents or so.
On this chicanery.
Yeah. Sounds a little weird, not going to lie.
I don't know. I feel bad for anybody that's been sitting in GME since that unwind.
Yeah.
There's been 100 other opportunities along the way.
Yeah. Ivy rank at 21 kind of signaled that.
Google's Waymo is seeking $16 billion at $110 billion valuation, fresh off knocking down an elementary school student in Santa Monica, which they said, my bad.
Yeah.
The company says they're now worth $110 billion, and they're hoping to raise $16 billion. Alphabet owns Waymo. So Google has earnings this week.
Google has been unstoppable. I mean, even into the down moves that we've seen in the market, Google moves $3 or $4 to the downside. Like it is.
Which is exactly what it's doing this morning. Yeah, right off the
very
highs.
clearly the strongest of the group by far.
What are you going to do in there for earnings?
Earnings February 4th. I think upside's going to be muted. I would
That's
think.
what you would think.
I don't know. Call ratio spread. I know it's going to use a lot of buying power. Maybe a broken wing butterfly use a lot less buying power.
I've been legging into butterfly, so I'm in the 340 to 370 range is like the spot for me in the February expiration. But I agree with you. I feel like it feels like it'd be an inside move either way. I don't think there's a big downside move, and
I hear you.
Certainly don't think the upside is going to be a tail. So
Yep.
We'll see what happens.
yeah.
India's government on Sunday handed a major win to Apple by allowing foreign companies to provide machines to their contract manufacturers in certain areas for 5 years without any tax risk. Apple has been growing in India in recent years as they try to diversify beyond China and getting to do anything for any amount of time without tax liabilities or burdens.
Apple,
It's like, even though they're worth like trillions of dollars, they're like, yes, let's give them more tax breaks.
Yeah. Apple was a weird one on Friday because on earnings was basically unchanged, kind of sold off throughout the day. Towards like maybe the last 2 hours of the session, Apple was up like $3. Like it was
its own entity.
It was its own entity on a really weak market day. And it was just, again, things are kind of all over the place, which makes me hesitant.
Yep.
But it's down $2 or $3 this morning.
Yep, 256 and change, almost 257, down about $2.5 this morning. Ivy rank at 18 in there. I don't know. It is the market, one of the market leaders that's been relatively weak, going from around 280 to about 240-ish and change, now 259 or so.
Yeah.
Earnings are passed. I think it's going to be a directional play.
Okay. SpaceX revised its Starlink privacy policy to allow the use of customer data for AI training. Oh, no. I actually know a fair amount of people who have Starlinks. Like if you have an RV or camper, you live in a rural area that doesn't get good service. I know lots of people that have Starlink. Just be notified now that they are using what you're searching for to train Elon Musk's AI. Okay, thanks. Bye.
Yeah, I imagine everybody's taking everybody's data. I don't
That's your response. You're like, well, everyone's doing it.
I don't think this is much different.
They're not first.
Sure.
Yeah, they're not the first.
They're not the first to do this. I mean, I think Empower and all the other ones have gotten the leaks to our data, and UNH, I think, had a leak of our data.
Everybody.
There's a difference between a leak of data from a cybersecurity and then a deliberate
I'm a little sus,
and a
as you
deliberate
kids would say, since we're using the word ick. I'm a little sus about all those too. So
and a literal using your data to train AI. You realize those things are different.
Starlink's amazing, though. I mean, the fact that you can get internet basically anywhere.
Free.
Yeah.
It's crazy.
It's not free.
Not free.
It's not free. It's $199 to like $250, and then like $150 a month.
Yeah.
What's those? Then I apologize. Then there's two walkie-talkie type products that you can.
I don't know. Whatever janky stuff you're getting on from from China.
No,
If
these
you're
are
worried about this tracking you, that stuff.
These are from boaters. No. Anyway, Tesla down around $8, $9, 421
Wild
and
journey.
change. Off its highs of 500, off its lows around 380, sitting at 420. And so about the middle of its range. Ivy rank only 6.
Ugh.
Directional in there too.
Yeah.
Palantir set to report earnings after the bell. What are you gonna do? Palantir beat analyst revenue expectations by 8% last quarter, reporting revenues of 1.18. That was up 62% year on year. What's the strategy?
I have a put ratio spread that's in the 4-day, like this week, which gives me a break even down at like 130-ish. Stock's up a couple dollars this morning, which is good. But
Palantir's a stock people love to hate, right? I mean,
love to hate, but they love it. You know, there's people
I mean,
that,
it's always in our top 10.
it always is, and it's
got good volatility.
Yeah.
It moves.
Yeah.
You know, it just
What's the expected move?
Stock's trading closer to its lows that it hadn't seen since last August. It's got a good vol to it. Ivy rank of 32, February 2nd. That's today after the market closes for earnings. I think Palantir will be a big earnings place for a lot of people. Markets are good in there too.
Yep.
AstraZeneca has announced it's investing $15 billion in China, but it's also announcing it's going to list shares on the New York Stock Exchange today, ending their ADR share program. The pharma giant will list on the exchange. That's pretty big news.
Yeah. I don't know.
Yeah, so
Pharmaceutical
it
companies
was
not
easy
our jam.
Yes.
And then, so that was the ADR.
Yes.
Do we know the new ticker? Well, I imagine maybe they just have the same ticker.
Yeah, and then it gets moved over.
don't know.
I
don't know.
Yes, I think so.
New news to me. New news to me.
Yeah.
I don't know.
Okay.
I don't know. But you can check on Eli Lilly because they have earnings this week.
And Lilly's always one of our biggest movers on a percentage basis, at least. I mean, on a net change basis, at least. It's $1,000 stock, $1,037. It's actually up $4 or $5 today, trading $1,042. Earnings are February 4th, before the market opens. Lilly's untradeable. So unless you're just buying or selling stock and at $1,000 plus a share, I don't know how many people are doing that. I think it's just a directional play. The options you can't trade.
Sergio saying the back gets his Starlink from Temu.
Yes. That's my Temu Starlink is
Temu
free.
Starlink is free.
Yes.
That's the free one.
That's the free one. Yes.
Hey, Peloton, who also has earnings this week, announced that they had cut 11% of its
What year is this?
had cut 11% of its employees as it aims to reduce costs amid turnaround efforts. It's still turning around. It's been turning for a long time. Spokesperson said on Friday, widespread layoffs would mark another major move under CEO Peter Stern, who took charge of the fitness products maker last year.
It's a $5 stock.
I was like, what?
Yeah, no, it's a $5 stock. You're going to sit long it if you're liking the upside view, or you're probably not going to trade this.
I will say part of their turnaround plan, they are now offering Magic Mike as like your spin class because it's been all over my TikTok, and I was like,
Is it like an
I might
AI
need to get a
Magic Mike?
Peloton bike. Like they have the men in the studio, and they're all like, oh my,
Wow.
wow.
I don't know.
Wow.
Smart move.
Spicy, yeah. Hey, I saw this blow up everywhere on Twitter, but it was in a select limited amount of locations. Costco on Friday released a Nike sneaker collab, and resale prices are skyrocketing. The Costco Nike SB Dunk sneaker is a light gray sneaker. It's got the Kirkland signature logo. And according to third-party websites like StockX and eBay and GOAT, pairs are retailing for between $400 and $5,000. What? They cost $135 for people that were able to get them, but I think they were only in like 8 locations. It wasn't very many, and it was only like in Oregon, Nevada, and like California.
World's gone crazy.
I was going to say, we got some Costco peeps here that if these were available.
You would think Jason would have had them.
Jason would have
None in Chicago.
Yeah,
None in the like east of the Mississippi. I think it was all West Coast. But
Yeah, Jason probably would have gone like 150 miles.
But do you think
least.
he's
Either
gonna
direction.
spend like $1,000 to buy these on like eBay?
No.
No.
Okay.
No. No. But when
I
they go down to $12, he'll buy them for the whole
don't think-
the whole trade desk. I know they're never going to.
Yeah, that would be great though.
That was
Put 'em in
the
bulk.
sweatshirts that he.
What are Costco, Nike doing?
Costco would be a big story if the markets weren't taking a big story that we've talked about already. I mean, this stock last month went from around $860 up to around almost $1,000.
Wow.
Back down to $940 where it sits right now. So Costco would have been a story. It has to take a back seat to the rest of the market. Gold was just down $50.
No, it's insane.
It's now down $20. I mean, there are so many other things to trade than Costco right now. Not the greatest markets in Costco either. Kind of wide.
Lego has a new set that will be available for purchase starting yesterday. The Legos Icons Golden Retriever Puppy. No, look at his little face. Is now for sale. It joins the Tuxedo Cat and Dalmatian Puppy. The piece is over 2,102 pieces and recommended for adults 18 and over. If you know, like I know, Legos are hella expensive. The set retails for $139.99. And you can get it on Legos.
I don't want to date
website.
this boomer again, but I remember when Legos at $50 or $60 were expensive. They're twice as much now.
Yeah. Legos were great.
Legos were great.
I look at that and I'm like, that looks like a 3 or 4 hours of just pure enjoyment.
That's 2,000 pieces. That's
Oh, it's
longer
more than
that.
3 or 4
that's-
hours. It's more than 3 or 4. It's 3 or 4 hours for me to fix the mistakes that you would make
No,
on it.
for me.
Yeah. Don't say that. Somebody has to come up with, and I'm sure they already have, what to do with the old Legos after you build them. Like, you can't display them for so long. You know, the child grows out of them. What do you do with those Legos? There has to be something you could do. It must be a place you can donate them or build something, or there must be something that you can do with them, because
Sure.
I got a closet full of them.
Yeah, I'm sure you could donate them. Prediction markets are going to allow trading on Super Bowl commercials, but that prompts insider trading questions. Kalshi and Polymarket are offering contracts on which companies will air Super Bowl ads. Trades on events where the outcome is already known by a group of people lead to questions. Like, so if you're the graphic designer or the editor, you know what I'm saying? Like, if you worked on a brand campaign, like, you're like, oh yeah, I know. Tabasco is going to have a Super Bowl ad, and then you put all your money in, and then, I don't know. This whole thing seems like a scam.
Yeah. It's a little, the idea is that you arb this out, like that if if you have enough liquidity, it gets arbed out.
Sure.
I just don't, there isn't that liquidity. So I don't
Well, I don't know.
Hey, somebody's gonna-
Liquidity might be coming to the market. Your 16-year-old brother, is betting on the Bad Bunny song that's going to be played. So, if it's reached the high schoolers.
But there are also bets.
You watch those credit card charges.
No. He's
They're
got
going-
his money,
his own.
and that's
Got his
it.
own. Where did he get it? It fall out of the sky?
He works.
Got his own.
He works.
But there are also bets on like which celebrities will appear in ads. So again, that's some things
Yeah,
you
I
can
don't
take bets
know.
on.
This is Wild Wild West.
Yeah.
It is Wild Wild West.
Yeah.
Hey, it's Monday. It's Groundhog Day. The stupid groundhog saw a shadow. We are a long ways away from summer, it feels like. But I saw this viral clip of just two people just jamming out around a campfire, and pretty good, man.
Yeah.
Shout out to this lady on rhythm guitar. Pretty good, thank
That was
you.
me and the boys.
Yeah.
That's what we were doing when we were fishing, just jamming out.
Some guy in the comments was like, I have a guitar. It doesn't sound like that.
I know anybody can learn the guitar, I guess, with enough practice and stuff, but I am so envious of the people that can do it. I don't have that thing, whatever
That can
it is.
shred that,
Yeah,
yeah.
I mean, that is
Shred gene.
that's a talent. Whether you're just doing Kumbaya, the song you mentioned earlier, or you're doing something like that, that's a talent I will never have without without years of practice. So I am completely jealous and envious. Good job out of them. Good job out of you. We're
Yay.
going to take a quick 90-second break and come back. We got more Tasty Live, and we certainly have a market, which we are going to talk about right after this. We'll be back in 90 seconds, plus confirm and send.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with, confirm and send. But before we do, let's take a look at the market. And to take a look at the market, we have to talk about last night's action, too. Even the S&Ps, as you can see them right now, 69.40 and change, just about 20, 25 handles off of their highs. But you could see this big candle lower here. We were down to 68.64, 80, 90 handles lower than where we are right now. Last night's action, and I'll get to the rest of the market here in a minute, was, ominous in my view. I watched it all, most of the night. I mean, you got to go to sleep at some time. We got all the way to, we opened down around 30, 40, 50.
Rallied all the way back within 30 minutes.
Almost to unchanged. I think
almost
we were
unchanged.
to down
Like
3.
10, 5.
I think I saw us down 3 because if we went positive, I was looking to sell them just as a scalp, and I don't think we ever got there. At least when I was watching it. Quickly down 50. A half an hour, 40 minutes later, hour later, and then oscillated all back, made new lows. I was sleeping, and then we've rallied back into that crazy move. NASDAQ down 150. It got down to 25.1. You could see by the bars here.
They're huge.
They are huge, with volatility finally upticking, flirting with 21.
Yeah.
Now, I always have this kind of feeling that the market has to, when it makes these kind of moves in the overnight session,
you got to kind of test it again.
I do. Like that's
I feel the same way, but it's been just so the
test it again in the open market, like
when
like now,
comes
like
back.
an hour. Yes, yes. Huh?
I feel that way too, but it's like we haven't gone anywhere.
Equity markets haven't gone anywhere.
Every dip has been bought. Every face ripper to the upside has been sold, and you've netted out basically nothing.
Yeah.
And that's what it's been all year pretty much.
Yep.
Yeah.
Unbelievable. Russell down 4, Dow up 18. I can't believe the Dow is actually up. One of the 4 indices are up. If it's market from yesterday. Volatility, which I was just touching on right now, 1905, still elevated. Look at almost a $2,000 move in the futures last night.
Yeah.
Big move in volatility. Again,
I took some off in 1977, and then I was kicking myself because we got to 21. And I was sitting there, I was like, oh man, this is it. I caught it.
Well, that 1980 area was the oldish high. I think we traded over 20 for a second in the regular. So I would have been looking, if I had VIX futures, I would have probably been lightening up there too. I mean, that seemed like a gift from the gods. And then we went a full point higher than that. And again, I think we got to see that volatility back up there again before this capitulation or back and forth movement that we've had, or violently unchanged market.
Well, now you got vol down 0.5%.
Unbelievable.
It's crazy.
Bonds traded down to 114.21. I woke up this morning, they were over 115. They were 115 and change, but bonds a little bit weaker too, going nowhere also though, right? Violently unchanged without the implied volatility that the market has had. All right, let's get to these. Bitcoin's become the new Shiat coin. Trading.
Is that a scientific phrase?
Yeah, trading down to 75, just under 75 on the futures right now. They're down 5,000. I know the cash says it's up 2,700. The cash doesn't. The futures are where we should be looking for what's trading. Cash does trade 24/7. Does mirror the futures market. But that's why one looks lower, one looks higher. Ethereum's doing the same thing here, down 13%. Bitcoin down 6.5%. Big moves there. Oil down 3 and change to 62. I think that's a little surprising. The magnitude of the move, almost a 5% move, lower move in oil. And now we got to get to gold. I mean, gold's already had a $500 overnight move, top to bottom, from 49 to 44 and change. Gold down $16 doesn't tell you the whole story because it's got the futures close in there. You look at GLD, it closed at almost 146. It's trading under, 446. It's trading under 433 right now. Silver, another big mover, although it is to the upside, basically unchanged here at 81.60, although it is up $3 on the futures. Look at SLV. To get the closing from Friday to Monday, and you can see that it's actually down about $1.50 on its move. Net gas, big move lower, 18%. This is why I always say I'm the world's worst commodities trader, because the magnitude of the moves are so big to the upside, so big to the downside, and they seem to have a trendy personality to them. Unlike the market, which has, in my opinion, a little bit, doesn't have the extreme moves. You get a market crash that'll have an extreme move, but you usually don't get a 10% move followed by another 10% move followed by another 10% move, which you in the same direction, which you will get in futures and commodities. So for me, that's why I'm the world's worst commodity trader.
I'm adding back some of the MES and NASDAQ that I took off last night, basically at this price, because I too feel
you're getting the ick.
The what?
You're getting the ick again.
Yeah,
but I think you'll have opportunity on both sides here to do something. I think if you stay nimble. I mean, we're going to do a piece on 0 Day today, and 0 Day had one of its best months. So
yeah,
we'll get to that. All right, let's get to let's get to a little bit of confirm and send. You want to?
Yeah, let's do it.
And we'll keep an eye on this market. What would be your order of importance for the Greeks? Do you consider any of the second order Greeks in day-to-day trading?
So I would say the most important would be Delta. I think I would go Delta, Vega, Theta, Gamma. I think Gamma is important to understand, and looking at the number day to day isn't going to tell you all that much, but it's important to understand on what side of Gamma you are. I think Delta is the most important. Your Theta and Vega, are kind of in the middle there for me. Theta being important to understand that, what side of the decay curve you're on and where that number is coming from, whether it's longer duration trades or short-term trades. Vega is important in that, you should understand your volatility exposure, but there isn't really a common denominator for it. So it's kind of like, it's position by position. So that would be my order: Delta, Vega, Theta, Gamma. And Theta and Vega, you could switch. They're basically the same. I would go 1, 2, 3 kind of, and lump them together. As for the second order Greeks, again, fun to understand. Dr. Jim's going to talk about Vanna. That it's good to understand those things. I don't really consider them on a day-to-day basis.
I agree with you. Dr. Jim will be on the show later today because nothing says Monday like Dr. Jim and the
skinny on options.
The skinny on options, abstract applications, yes. But he'll look at some of the second order Greeks. They're not on the platform for a reason. I don't look at them. I like your order. That's the way I would stay.
Yeah. I think Delta is the most important one. You need to understand Delta. You should have an understanding of the range of Delta that you're in. When you get to too much Delta in either direction, you should have that number in your mind.
Sure.
Because that'll allow you to mechanically adjust your positions, reduce your overall exposure. If you say, okay, my upper bound is 300 deltas in either direction, and you get to 350, you got to go look at your positions and make some adjustments.
Totally agree. That one you can control. The rest of them you really can't control. You can only really control them with size.
Yeah. Although I have a beta-weighted portfolio of 0 and a positive theta decay of 40 for my $20,000 account, I've noticed I have minus 60 Vega. Okay, so your short Vega, long, your delta is basically flat. Your short options, so you have a positive decay. Your short Vega as well. This leaves me vulnerable to any increase of volatility in any of the positions I have, of course. What is the best course of action to reduce my negative Vega?
Why would be my...
Yeah, you can't...
I mean, here.
You can't be short options and not be short vol. Unless you do like
a diagonal type spread that you could. So here's what I would say. Your next positions, if you're looking to continue selling premium, like I would be looking to continue selling premium, especially volatility's going higher. The way volatility's been going higher as of late, not right this second, as it's down 15 cents, which is amazing.
Unbelievable, below 19. It's a $2.50 range of volatility.
$2,500 on a small future, big. I mean, we've been getting 40, 50 cent moves in volatility for the whole day. Anyway, maybe I'd be looking to not sell as much premium. I might be do like a diagonal spread or even just a iron condor type spread, which will have relatively no Vega to it if that Vega number is too big for you. But that's the game you play. It's like trying to say, I want to eat all the desserts, but I don't want to lose, I want to lose weight. I mean, you can't have it both ways. You have to. This is the life you chose, and what you're hoping is that you put these on with high implied volatility, so that Vega actually helps you. That it can't expand because volatility is high; it actually contracts, and you make money on your position.
Or that it doesn't go higher.
Time goes
selling
by.
High implied volatility, so it's less likely that it goes higher from that.
Yeah.
This is just the name of the game. You can't have zero. Zero just doesn't exist. You're a neutral delta or a flat delta has to be some sort of range. And if you're, the metrics that you have here, it's very flat.
Yep.
You're very flat.
Yep.
Oh, that's a fun one.
I would like to start trading gold and silver. Okay. But just stick my toe in the water. So they want to trade it small. Is there something close to boring I can do with the vertical spread? What product should I use? Who should I follow? And what video should I watch?
I would say, obviously gold and silver are taking the attention right now.
Sure.
It is a tough point to start trading them right now. I would say with, probably gold is probably better. Gold and silver are both okay from a vertical spread standpoint. I would do both sides just because you have so much volatility here. Do wide iron condors, in the standard, 30 to 45 days. That's where I would go. Dipping the toe in the water is different for each person. I would start with that, with just doing iron condors, go as wide as you feel comfortable with, and trade the volatility of those two products right now. Like that's how I would go about it. These spreads are going to move violently. There's tons of volatility, tons of price action. If you are a new trader, I would say go to something else.
Yeah.
If you're looking to start, trading in metals that you don't normally trade, go with the iron condors, how I would go.
Yeah, so I'm gonna take it from the back end and bring you up. So what product should I use? Who should I follow? You probably shouldn't follow anyone. I mean, you certainly can look at what we do and take it under advisement and see if.
But I'm all over the place. I've had
you are, but you can look at any of the videos that we do on any equity product and apply it to gold and silver. Now you will look at GLD markets. First thing you'll do, and you'll see that they're way too wide for a new trader who's starting to trade something. And I would think GLD, you can go to GDX or GDXJ, which are gold miners, kind of different than gold and silver. Gold products, GLD being the most widely one, markets are way too wide in my opinion, for a new trader.
Yeah.
SLV actually had decent markets throughout this whole move. And if I was looking to do anything, the first thing I would say to you, which I normally wouldn't say under normal circumstances, go into SLV right now because they have better markets. And then the videos you should be watching are those with defined risk on any equity trade or anything else we've done, and apply them to SLV on your market opinion, whether it be bullish, bearish, or neutral. All the products are the same. Just keep it as small as possible. And I think right now, all things being equal, SLV is a much better trading product for a new trader than GLD. Just because of the depth of the markets, meaning the difference between the bid and the ask. Next one, please.
When choosing a portfolio beta-weighted delta, I've heard tastylive speak about staying neutral or equivalent to 0.1% of the portfolio. So if it was a $100,000 account, 0.1% would be 100 long deltas. So for a 20K account, would you at most lean to 20 deltas in either direction? What determines how much you lean? So, how do you measure neutral in your opinion?
It's hard because, like you said just a moment ago when you were talking about another question, like you said, if your delta is $300, your beta weighted delta is 300 deltas, one way or the other. When you get to 350, you have to do something and look inside the positions you have and probably look to reduce delta because you've gotten too big on one side. Now, it always seems to happen always going to happen when you're selling premium that you get too big delta when things are going wrong, not when things are going right.
Yes.
You're not getting 350 long deltas as we're going higher. You're getting 350 deltas as we're going lower. The market's not cooperating with you. So it's a very, disciplined thing to do. But I think that's the answer. You just have to look at your positions. And I think your 10%-ish, which they're looking 20 to, 20,000 account with a mostly, negative 20 in each direction. I think that's
you're pretty
tight.
You're pretty tight.
That's pretty tight.
I think the easiest way to think about delta is just if you were in cash. So if you were just long cash, the market, SPY, what are we trading at?
690. Oh, SPY?
Yeah, SPY. We'll just say 700.
Sure.
So, $150,000 account, you could buy 200 shares of SPY and your cash secured.
That is correct.
You're
That is
cash
correct.
secured to the
And
market.
that's probably what you have like in an IRA type account that's managed, or if you were going into
So that's on the
mutual fund
low
kind
end of
things.
where, like, if you incorporate leverage and option positions and the
Right.
dynamics of that, you should think to yourself, okay, in a $100,000 account, if I'm long, 100 deltas, that's basically cash secured. It's
Sure.
probably under cash secured.
Sure.
So you should think of that, that's kind of how I look at it. So, but it also depends on your own risk tolerance. Like if you are somebody that doesn't like the risk, you're probably more towards that 100 mark.
Yeah.
I'm more 200 or 300 because I like the risk and I want the risk. So that, that's kind of where you have to be too, where you have to figure out your spot.
Awesome. Good job out of you. Gold, because we just mentioned, is basically unchanged, actually up $1 right now. Even the S&Ps haven't moved quite as much in this short period of time that we just answered those confirm and send questions, down 23. NASDAQ, right where I quoted last time, down around 145. Russell down 5. Dow's still up. Volatility in by 10 cents. Bonds are down 9. Bitcoin trading at 78,000, just about $3,000 off of its lows, down 7%. Ethereum down 13%, almost a $370 move. Oil down 4%. Nat gas down 18%. Big numbers across the board. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a nice option jive for you. You're going to like this one. It's
Research
the one
corner.
on zero. Is it?
No,
No. That's
0
coming
days, market
at 9. Yeah. We'll be back in 90 seconds. We got more Tasty Live after this.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
It's option jive. It is time for an option jive. Even the S&P is down 20. They're up 3 from last time I quoted them. Gold is up about $5.
Amazing. Vol. below 19.
Below.
Who would have thunk it?
Not I. I didn't
Not
have that. I didn't have that on my radar screen when I went to bed.
I thought we were going to be
S&P
taking
down
phone calls
50.
all day today.
Yeah.
Last night I was looking, I was like, tomorrow's going to be a bloodbath.
Yep.
And nope, just buy the dip. So?
The equities seem to be the flight to quality right now.
Yes.
That gets scary too.
Yes.
All right, let's see what we got here going on with the little option jive research corner.
Cool. All right, so just a quick little weekly summary. We had the FOMC meeting. Fed kept rates unchanged. You had Kevin Warsh be the next leader of the Fed. Oh, he's here. I guess you could say that rattled markets a little bit, but I don't know if we can blame that, the move in the markets on that. You had craziness in gold and silver, which we'll talk about. Silver saw the largest pullback in history. It was down 31% intraday, and closed at down 25%. I mean, that's just a historic move. Major commodities and currencies have been super volatile, from crude oil having a $5, $6, $7 weekly range. You had natural gas going crazy. You had the dollar at the lowest in 5 or 6 years. The euro was above 120. The gold and silver stuff was nutty too. Bitcoin isn't even on here, but it was a week of outlier moves, I think, in basically everything, with the market violently unchanged.
With the equity market violently unchanged, you look underneath the surface of all these other products.
Yeah, Microsoft down 20%,
No big whoop.
No big whoop. Crazy.
Yep. Crazy indeed.
Just looking at the week ahead, so we have ISM manufacturing PMI today, the jobs report on Friday, and then you have any sort of ongoing news headlines. You have Iran in the picture, you have Warsh and the Fed, and all sorts of stuff. I saw Trump's making a critical metals basket of some sort, the 10, 15, 20 billion, the numbers just all over the place. So all sorts of stuff happening this week, at least on that front too. So you got to keep your head on a swivel. I think that's what we've learned this year, if not the last.
Yep. I don't think. Hold on tight. This isn't over.
Yes. Mm-hmm. And just to go with the violently unchanged, you can see the S&P 500 basically a zero after the last 2 weeks. Down 4%, up 4%. It doesn't exactly work out to be zero. We're still a little bit lower just because of the numbers. Mm-hmm. But it just tells you that we've chopped. And you see the chop in the NASDAQ. The Russell has really been the weakest of the group. It was down 2%.
And you pointed that out last week too. When you were talking about the Russell. So you've been mentioning this and seeing it, but yeah, you look at this.
It's nothing. It does.
This is normal action.
This is normal action. This is 1 day action.
It's 1 day action.
It's 1 day action. The VIX at where it is right now at 18 and change. You should be moving 1% a day. That's what the VIX at 18 is, 1%.
That's correct.
Up or down, day to day. And we're moving 0.5% in a week. It's not there.
It's a nothing burger for those who want to have a drink early this morning.
There you go. It's quote unquote not volatile.
Right.
This has not been volatile.
In the YouTube chat room.
Even though it's been volatility underneath the surface.
Yeah. You can't take the numbers just for face value. You actually have to watch what the market has done.
Yeah. Been wild.
Mm-hmm.
So in terms of expected move here, the same kind of story here. We have a little bit of a higher VIX into this week. So the expected move is a little bit wider. But again, nothing crazy. It's kind of the same sort of expectations for this week as we've seen the last couple weeks.
Mm-hmm.
See, plus or minus 1.6% is our range for the week. The last 2 weeks have been well inside that. So, just more of the same.
More of the same. More of the same. That's really what it looks like. More of the same.
Yes. When we look at the major assets, seen a lot of volatility underneath the surface, or at least starting to percolate a little.
Look at these numbers.
Everything's up. Volatility is up across the board. Equities have gone pretty much nowhere. The rest of these have had huge moves. I mean, talking about gold, IVR of 89 does not come along very often. Same with silver.
Gold down $30. Just in the last 2 slides, it's moved $30.
Crazy. Natural gas, 100% implied volatility. You're seeing Bitcoin volatility increase. Volatility is poking its head up. But it gets smacked down every single time. You got vol futures below 19 now.
Yeah, I mean, we talked about how volatility being low previous to this last week or so, last 2 weeks or so, volatility was extremely low. And when volatility is extremely low, you get these bigger moves when volatility is low. Now we have volatility high, and you're getting these bigger moves too as volatility has started to expand and contract intraday. Now that's representing the market. Here you have other things than just the S&P 500, but volatility is elevated everywhere. So if you've been on the sidelines or you've had less money in the market than you normally would have, now might be the time to look at things, bullish or bearish, where you might want to look at things to kind of ramp up your positions, not necessarily the size of your positions.
Yeah.
Next one, please.
Some of the biggest movers, I think the memory stocks are probably the top story of the week in the equity world. SanDisk up 22%. It was up $120 or so after earnings. It sold off to basically unchanged by the end of the day. Again, these moves are...
It's up 14 or $15 this morning, and you are right. I mean, you just mentioning...
It was almost 700 at one point. It got to like 675.
High.
It got to 675 and then closed at 576. And we're up, $10 or $12 right now. And
it went down to 530. I mean, it had a $140 move top to bottom intraday. I mean,
STX the same story. I mean, that stock was at going from 350 to 450 and then back to 400.
Yep.
So you talk about huge moves underneath the surface here. On the downside, you had like a lot of the healthcare names, UNH, Humana. You had like Carvana had a short report that came out, and that stock was down significantly. It bounced the next day. Palantir has been really weak. Microsoft isn't even on this list. It had a huge move. So there's been some big moves in both directions throughout the last couple weeks. And it's netted out to basically nothing. But they're huge single name moves. The single name volatility has been, the realized volatility is felt off the charts.
Yep.
Getting into the big story, or the bigger story, I guess the memory stocks were a big story, but silver closed down 25% with its largest intraday pullback at 31%. The only comparable events were the Hunt brothers back in the 1980s with a 30% price pullback.
But that was market manipulation.
Yeah, that was different.
I mean, and it was a different level of leverage being used. I mean, I think it was 10 times the leverage that's being used today.
Yeah,
back
even
then,
with
2 people controlling it. Yes. I mean, it's a completely different animal. The move is whatever it is. Like that, that's what who cares about the why? Like I always say that, an option price is $10. Who cares how they got there? It's basically pick them. What do you want to do? Buy it or sell it? What strategy do you want to use? What strategy do you want to use here? It's always the same. Like, what strategy do you want to use to benefit from your assumption?
Totally. But it's, that chart is just,
it's the largest. I mean, it took out a month of biblical proportions to the upside.
It's still high.
The downside.
I mean, silver, when you look at it a year back, it's still a double, if not more.
Yeah, if not more.
Yeah.
And again, going to the macro view, I don't know what's changed in 48 hours, and that's why I find that macro view a little bit hard to base my opinion on, as opposed to what the market's doing itself.
The next slide here, the gold and silver ratio, it was getting close to its long-term lows. I know I've been talking about my peeps, Malachi, and some others that have been sending me the emails. 40 is the 100-year average. When you look at, the more recent...
Yeah, pretty close at 45.
Yeah, they're right there.
Yeah.
The recent average, this has certainly... It's been a swift move to the lower end of the range. I mean, we're talking like 2 weeks, and it's back, and it's there.
Yes.
At the lows here. So this is just an unbelievable chart. When you're thinking about this from a percentage move, it's $5,000 per percent if you're doing the big boy futures of 2 GC to 1 SI. If you do the micros, it's $1,000 per point. So these are astronomical moves.
And it took a month to go from around, it's trading around 58 right now. So I'll use 58 because when I got in trouble, I bought it at 56. That was the first time I got in trouble. Watched it go down to 45. So it's gone from 58 where it is right now last month, the beginning of the month, to the end of the month where it was around 46, got as low as 45 and change, but let's just call it 46. We'll throw out the lows. And it's back to 58 in 2 days.
Wow, the low of the session, 1885.
Wow, the low of the session, 1885, down 25 cents.
I think I'm going to buy one more. Gross. Just going to let that.
Put it on the bid, you'll get hit. Next question, please.
So just looking again at the earnings, these are some of the biggest movers to the upside, the downside. Again, the memory stocks have been, kind of the biggest movers recently. You have UNH in there, Meta as well, which had earnings. It had a big move to the upside. It felt like it kind of saved the market that day with Microsoft down, a comparable amount to what Meta was up. So just some big moves across the board here. On the next slide here, the earnings. Again, my favorite slide to look at because it's just the same every single time. It's basically 50-50 in either direction. The average return of 0%. It's unbelievable how this works out. It works out like this every single time, despite your own thinking of what earnings have been, because that's influenced by the ones that you actually trade. Because sometimes if you trade them and you have, you trade 3 of them and they're all big moves, against you, you think earnings have been crazy this year. When you take the whole basket, it's been nothing, which is, it looks like that every single time.
Yeah, it's been a big nothing burger, but it really has been big trade.
Next slide here, just to finish off, got a bunch of earnings coming up this week. You got Palantir after the close today. You got, AMD in there, PayPal, Uber, Lilly, Alphabet. You got Amazon at the end of the week too, Reddit in there too. So definitely still in the earnings season.
And which you would think volatility would stay bid just on these facts, right?
You would think so, but I don't know. There's no volatility cannot. It gets the speed at which it is smashed down is pretty unbelievable.
Let's turn those machines back on. We'll do that in about 2.5 minutes. You listen to Tasty Live. We'll be back with the opening bell next.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. The opening bell here is imminent in less than a minute, so I'm not even going to quote the market because it's probably going to change in that minute or two after the market opens. Then I'll quote it. I will give you gold, which is basically unchanged, but that doesn't tell you the whole picture if you're on the equity side. GLD is closer to 434, down around $11. So gold closed closer to 4,900 on Friday, and then the gold futures open again over the weekend. Anyway, we'll get to that momentarily. What's on your radar for today? Dow just turned red, down 13. Volatility sitting tight at 1885. I know you sold some futures here in MES. right where we are, just $1 or $2 around. where we are.
I think this will be an interesting open because we've had kind of a rally into the open, which it's rallying right now.
Yeah.
The first like 30 or 40 minutes, and there we are at 69.50.
It's almost like exactly what we did last night. We opened lower, down around 50 handles, 40, 50 handle on the E-mini S&P's rallied to almost unchanged. Disney really taking it on the chin, down 8 for earnings. It was significantly higher in the pre-market.
We're going to add a little bit more.
Even the S&Ps down 11. That's about as high as they've been all morning. NASDAQ only down 30 and change. Let's see what's moving this market.
And they just smashed volatility. Look at vol. 1873.
Yes.
It just moved 30 cents in a blink.
In a blink of an eye.
In a blink.
Yes, it does. Let's see what's moving this market. I'm not going to talk about these inverse or leveraged products. I'll go to the first one. That's the market. Tesla down around 13. GLD down around $10 or $11. MSTR down 11. Carvana down around 8. Disney for earnings down around 8. Coin down around 7 and change. Hood, the once beloved Hood, down $5. It has earnings coming on the 10th. Ivy rank of 30. Microsoft continuing a little bit of its slide, down $4. Ivy rank of 26 in there. Nvidia down $4. I mean, these are pretty popular names to the downside on the high option volume list. Let's see what's going to the upside. SanDisk up 37, AppLovin up 16, Eli Lilly up 10. It really is crazy. MU.
It was down 100.
What are you talking about?
AppLovin was down 100, now up 30. It's just
and now up 17.
It's crazy.
Jack be nimble, Jack be quick.
It's not.
Palantir, which has earnings coming after the close today, up 3 or 4. AMD up 3 or 4. I mean, it really is a mixed bag of tricks when you see the futures here. But volatility down 50 cents now.
It's amazing. It's amazing. You have 100-point interest. USAR, I just sold out of the stock. I had that long stock position. We did a covered call. I think I'm basically flat on that trade. I was playing
up 3%.
The government portfolio.
Yes. You basically took a leg here, right, on price. I mean, you got out of your covered call. The call reduced your basis, which allowed you to get back to even. Still a crappy trade, right?
Yeah. Look at vol now, down 3%. You had it. I mean, this is crazy. You're back to basically the lows of the middle of last week.
Yeah.
We've had a range from 1850 to 21. That's a what? A $2.50 range?
Yeah, it's huge. It's huge.
And markets are basically flat.
Markets are basically flat. You are correct.
Crazy. 69.50. We have not moved from this spot, despite all the craziness that has happened underneath the surface.
It really is wild. I mean, it really is when you think about it. It really is just unbelievable. What else do we have here? You just got the Russell turned green by small, 30 cents or so.
Just took off some calls that I had in Hood, a call diagonal spread. We've got a put ratio as well, so we're a little all over the place there. I think I should probably...
Oracle, the best laid plans of mice and men. Oracle is up 70 cents after trading 171, opening right there around 171. It's 165, not down $5, but $5 off its highs in 4 minutes. Yet you have volatility at 1855.
Have those puts moved?
What's that?
Because we had short puts in Oracle. Have those moved at all?
They really have not moved. I mean, they're losing trades, but they have not moved.
See, now I'm all over the place in silver, SLV. Because I have leftover puts that I did those butterflies, and then I would leg out of the shorts. So I have these juicy at the money puts. I'm long the 75, 80, and the 83 puts that are, $10. They're
Ivy rank of 90.
I have the put ratio up, and I also have my position is short.
Mm-hmm.
But I have a spot kind of around 90 where I had puts and put ratio spreads I was doing right there. But I basically have butterflies now. I have butterflies right here with downside skew to them. Do you take the money and run on those positions in the shorter duration, the 18-day duration? They're basically lotto tickets to the upside because there's like not a lot of risk there. If we fall out of bed, I'm long extra puts.
Sure.
I'm short.
Right.
But I have a spot if we bounce kind of back to like 80, 90 where I could make a little extra on them.
I think you probably sit.
Do you take off some of the calls?
You can look at take off half or something like that. Yeah. For sure. You could. Right?
Yeah, I'm going to take off some of these calls.
I mean, why not?
Yeah.
Right? I mean, that's the way I would look at it.
Look at this. We're about to go green.
Green on the market. Even the S&Ps are down 2.5. The Dow is already up 120. Man, look at this. The NASDAQ, which was down 150 or so.
Look at volatility, 1841.
Yeah, it doesn't lie.
It doesn't lie.
Doesn't lie. I'm really just surprised we made this move, and I really hate that we made the move overnight when the equity markets really aren't open to trade.
You wanted to see kind of a washout.
Yes.
Vol stay bid.
Yes.
Then you scoopy.
Yes.
Unfortunately, in today's day
now you're
and
sitting
age,
and watching like a schnook.
In today's day and age, 30 minutes, that's your dip.
Yes.
Yeah, you miss it, you're out.
Yeah. I'm a schnook. I'm eating egg noodles and ketchup right now.
Unbelievable.
Yeah.
We sell one more here. I think we'll keep it going.
Volatility doesn't lie.
I know, it doesn't lie.
Trying to teach you a lesson.
I know.
But it doesn't lie.
I mean, I
live by it and die by it. I get it wrong too.
Yeah.
But I live by it and die with it. And right now it's telling you that.
It's funny because this is right where like my average is though. Because I was trading these on Friday at much higher prices and held them. I mean, I scalped them on the way down, but now I've been adding on the way up. Now they got me. They got me here, right where we're at.
Wait.
What else do we have here?
Give me some more. What do you got?
I don't have much. The natty gas position hasn't really moved. Took off the oil position.
Took off oil positions. Natty gas hasn't moved. You got some big movement all over the board here, across the board, just about everywhere.
Yeah.
Talk to me, Goose. All four indices are now green. Even the S&P's up 2, NASDAQ up 39, Russell up 12. That's your leader in the clubhouse. Dow up 120. The gold-silver ratio is sitting steady at 58. Gold is up $60.
Visa up like $9, $10 after being down on earnings. I had a call diagonal spread that now is $100. Like it's like a decent profit, so I took that off.
Mm-hmm. I mean, yeah. Yeah, why not?
I mean, is there anything? Anything that interests you?
Yeah, I missed everything that interests me, right?
I know. It's like we're unchanged here.
We're unchanged.
Violently.
Unchanged. Yeah, finally. Violently unchanged. Volatility in by 60 cents. I think you just have to sit at this point. Yeah. I mean, I don't know what else to say.
Yeah.
And I think you just sit. I mean, you if you had proper position management, you've got a little bit of a reprieve here in gold. I mean, it's rallied about $5 off of its lows in GLD. Again, I'm looking at the markets in GLD in February. They're quite wide. So
I bought in the risk on the put ratio in Palantir.
Mm-hmm.
So that nets me. I have the 45, 40, 35, 30. So a pretty wide butterfly in terms of range wise.
Mm-hmm.
On the downside here for a 60-cent debit.
Yeah.
Small little debit into this move. I mean, it's up $3 this morning. Maybe we go into something else in like February and you go to March.
I think March probably warrants a trade here with the way volatility is behaving. I mean, if it was higher, I think you could go shorter dated.
I want to just do like a 20 delta for 30.75.
Sure.
$8.
Sure. Sure. Yeah, you could do something like that. I don't have a problem with that.
All right, 884.
884 it is, my friend. Oof. It's just amazing the market, how it's moving.
I know.
It really is. It's crazy. I guess you got to put a bid or an offer in at your price and look to get filled there, right?
Mm-hmm.
That's the way I would do it. Even the S&P's up $1, gold up 60, silver up $3.40. That's a 4% move and a 1.5% move for gold. You want to take a quick 90-second break?
Sure.
We've got. I don't know what to say. You have basically an unchanged market here. I mean, I think you have to lay into them a little bit, but volatility.
But hasn't worked the last 40 handles.
Has not worked the last 40 handles. Yeah. No, it has not.
But this has been the same thing that we've seen all last week.
This has been the same thing that we've seen.
The first hour or two have been a chop to the upside, and then that's when you kind of whack them. So I don't know.
Let's take a quick 90-second break and come back. Nothing says Monday like this, man. Dr. Jim and the Skinny on Options abstract applications. Maybe he can bring a little volatility to this market. Volatility futures trading about 10 cents off of their lows, 18.45. All four indices in the market are green. So is gold and silver at the moment. Bitcoin 79 and change. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Dr. Jim, the Skinny on Options abstract application, and Monday morning slapping you in the face. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important. At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, nothing says Monday like this Miniskinny on options, abstract application, because this is not your normal Monday. Dr. Jim, how are you, my friend?
Why is this not a normal Monday? Is something special about today? No, I'm serious.
It's true.
I mean, we're doing it, right?
Yeah, we're doing it and doing it well. We're doing it.
I mean, it's Monday, it's leg day, like it's just every other Monday. It's just the same type of deal. Now I know that this is Monday of Super Bowl week, and so let's make sure we lock this down. Let's make sure we're all on record. Where are you guys at? I need picks. I need predictions. Where are we at?
I like the Seahawks. I
think, the Super Bowl seemed to be a blowout. It's 4.5. I think I would lay the 4.5 and take Seattle.
I don't know. If it starts another Patriots dynasty,
it's going to be hard.
It's going to be hard.
I have enough going on with the metals and volatility and the market that I don't need a Patriot dynasty coming at me again.
No more of that.
No more of that, please.
No, I agree with that.
This is perfect. This is perfect, gentlemen. This is perfect. I will stand alone.
Okay.
I will walk into the corner and pick up the pile of cash that is the Patriots plus 4.5.
Of course.
I figured you would. You would.
My man Drake May, isn't he hurt? Isn't he injured? I heard something. He's hurt, right?
I don't know. He's a young guy.
He is a young guy. What's hurt?
Okay. Yeah, he's okay.
Yeah,
he's all right.
Yeah, but Brady's just a phone call away.
That's true.
Right? Let's bring him back for number 8. Let's go.
Yeah. Okay.
All right, so there you go. Okay, so you got a couple of Johnny Publics over there in the Tasty HQ laying the points. I'll take it.
Okay.
Take my Patriots at 4.5. So
I hope you remember this conversation at some point.
No, it's going to be all long
Never
gone.
happened.
When the Seahawks win by 17, it's going to be long gone. Long gone. You know what's funny, though? So watching the opening bell this morning, it was so interesting, Nick, because you were commenting so much on volatility's movement and how volatility was contracting so quickly, right? And it just got me to thinking, and this is not what I'm going to talk about today, because obviously the segment was already prepared, but I did want to point out, it's really cool to see this happening and talk about it and highlight it, because is that not what we do? Like, that is exactly what we do, right? Volatility spikes, it's elevated, we see opportunity, we get in, we sell that volatility, and then when it contracts quickly, we get paid really, really quickly.
Sure.
And so it's kind of cool to see that happen, because it really supports all the things we've been doing for so many years.
It seems like it's moving faster than ever. I mean, the market and volatility and just things.
Yeah, this boomer thinks it's moving faster. I thought maybe you young guys would think that this was just normal.
It has become more normal. I mean, I think the swings have become more normal. I think that's a function of access and news and just, the way the world moves. It's just way quicker than it was even a couple years ago.
Yeah.
But this last month has seemed really quick, quicker than it has been.
Yes.
But
So
maybe
you're
this is a
talking.
new
So are you
normal.
referring to the equity specifically, or because I mean the metals? Obviously, the metals. I mean, this is historic, right? It's like this is like
It is
legitimately
historic, yes,
once in a
for sure.
lifetime stuff.
Yes.
I think it's across the board.
Once in a lifetime, that happens like a half a dozen times per decade.
I mean, it feels like it happens.
This is the 100-year flood that we have every other year. Right?
Yeah.
That's what it seems like to me, at least.
Yeah, it's just been quick, and there's so much like headline risk, and it's all very fast.
Yes,
but that's
Well,
good.
I just want to take
trade.
a second. Yeah, no, I mean, I don't disagree with you, but I just want to take a second and highlight, premium selling as the foundation. Like a lot of traders out there doing a lot of different things. I mean, we're even experimenting with a lot of different things too. I mean, trying to grow and challenge ourselves as a network and all those things. But as a foundation, selling premium high volatility, it's like, man, this is kind of what you want. You want the volatility spikes. You get in, you sell whatever you sell. You're selling strangles, you're doing ratios, you're doing verticals, whatever. And then the volatility, deflates. Quick little shout out to Deflategate. Then that's good. Like, that's obviously a good thing where you get paid pretty quickly.
Yeah.
So there you go. What's up with Belichick not getting in? Can we talk about that for a second? Like, is that not crazy? Come on, guys. Like, what are we doing?
I don't get the whole voting process thing. Like it's not even ex-players. It's just like media personalities, and I don't know all those.
I tend to agree with you on that point of view, but the other point of view is it's a personality contest, which I mean, part of it is a personality contest, which it shouldn't be. I mean, you should just treat them on their football athletic ability, whether it's coaching, if that's what you're judging, or anything else. And how can you not? I mean, success at the end of the day, your P&L at the end of the day here, your success wins and losses there. I can't stand the man because he wasn't my coach for my team that I like. But I mean, you can't argue with his success. I mean, if he's not a first ballot, who is?
Exactly. That's exactly my point. It's like, I mean, you know.
Oh,
it's
I get your point, and I agree with it.
Yeah, and it's like okay with Bonds and McGuire, like okay, whatever, like I got it, like I don't agree, but it's like okay, whatever.
Sure.
But this is like, I mean, come on, man, like it's like at the end of the day,
come on, man.
He's not in.
Yep.
I don't know who's in, but anyway, gentlemen.
Jim, I before we get started, I do have a question about the iguanas. Do you have any in your backyard? Have you been out there yet to see the
iguanas? Is there an iguana problem in Florida right now?
They're freezing. They're all freezing and falling from the trees.
Oh, I haven't seen any falling iguanas from the sky. No, I have not.
Okay.
I have not. Every once in a while, I mean, you'll see a gator walking down the road, but that's just normal. Like they're fine. Like they'll take care of themselves. But the iguanas, haven't seen too many iguanas in Paris.
All right, that's good to know.
That's good to know.
Maybe I'm getting fed fake news.
No, I mean, I'm giving you the St. Petersburg update, right? I mean, are there some iguanas in peril in Bradenton? It's possible. Like it's very possible, right? I did see. You know what's crazy? I did see something this morning. It's actually colder in Orlando, or at least it was this morning, than it was in Alaska.
Wow.
So the low in Orlando this morning was like 23, 24, and the low in Alaska was only like 30. And I'm like, I don't know that that's ever happened before. So there's another once-in-a-lifetime event for you there, Tony.
That's it. There we go.
Add it to the list.
Once every 100 years, it happened again in my lifetime.
There you go. All right, let's do some finance. I'm ready, man. Let's
do it. I'm ready too.
Man, Vanna and volatility. Have you guys ever heard the line, at a certain point when volatility gets so high, every option becomes an at-the-money option? Have you guys ever heard that line?
Sure. And for that person who asked the question this morning about second and third tier Greeks, here you go, ladies and gentlemen. I said Dr. Jim talks about it from time to time. I got a feeling he's not talking about Vanna White here.
Yeah, I was going to say, no Price is Right.
Yeah.
No Price is White. No, it's Wheel of Fortune. You didn't even get
is it Wheel of Fortune?
Yeah, it's a wheel. You're not a wheeler?
No, wasn't it the one with the like, we should walk across the stage and... No, it's the word one.
It's the word one.
Yeah, that's Wheel of Fortune.
He's right.
Price of Right.
Price of Right is with Bob Barker in the old days.
Yeah.
Come on down.
Yeah. Sorry.
Yeah.
I'm not.
He's unk status. He's getting just as Stunat. He's getting just as Stunat as me now.
Yeah, I'm not that
I'll tell you
old.
what. Like, so, guys, have you guys ever seen those pictures of like?
Unk yells at cloud. It's going to be the next.
No. This is good. So have you guys ever seen those pictures of like presidents? I mean, there's a really classic one about Obama. There's another classic one about whatever, where they show a picture of him like before he was president, and then a picture of him like right after his presidency.
How it ages you.
And he just looks like 80 years older, right?
Yeah.
Nick, that's kind of how you look.
Oh,
like
thanks,
I'm looking at
Jim.
you right now.
Thanks, brother.
I'm just saying, like the hair, the beard.
Wow.
I mean, there's a lot of white and gray.
I know.
I'm just saying, man.
I know. Trust me, I know.
But it's all happened. But in your defense, it's all happened in the last 3 months.
Yeah.
And so what has been the big change? I mean, look who's sitting across from you.
Yeah.
That's true.
Yeah.
I mean, that's what, it's not even your fault, man.
Right. Well, it rolls downhill. It happened to me. It's going to happen to you.
That's true.
That's all I can tell you. Sad
all right,
but
so
true.
let's do some Vanna and volatility. Okay,
I'm ready.
So anyway, every option is an at-the-money option when volatility gets so high. The funny thing about that line is I actually, Tony, I heard you say that line some number of years ago at the studio, and I was like, that's really interesting. And so I wrote it down, right? Because what I would do when I first joined, the Tasty Network and I was at the studio, anything Tom said, I would write it down and then cross it out. I'm like, I don't want to say that. That doesn't make any sense. But anything Tony would say, I would write it down and I would circle it. And I'm like, I should probably look into that a little bit more. Good. So I was like, okay, that's a really interesting line. There must be a mathematical foundation for that. Like there has to be some mathematical kind of, basis for, the intuition and the experience that Tony is kind of laying out there. And so that's actually exactly what we're going to uncover here this morning.
All right, let's do it.
And so Beth, go ahead and hit us on the intro slide there. So the Wheel of Fortune, as active traders, we're constantly monitoring and analyzing the Greek exposure of our overall portfolios and individual positions alike. And as primarily volatility traders, we're especially aware of any changes in IV and the impacts those changes can have on our strategies. Given this, it might be worthwhile to better understand just how Vanna works in relation to Delta. Because Vanna is a second level Greek, it is a second order Greek. It is the mathematical foundation for that line, Tony. When volatility gets to a certain point, every option becomes an at-the-money option, and we're going to better understand exactly why that is this morning.
Okie dokie, let's do it.
All right, let's do it. Okay, Beth, go ahead and hit us on the next slide. So here is the equation for Vanna, which is no small feat. I mean, even if you pump this into your AI bot, it's going to struggle a little bit this morning. It's going to make some stuff up and give you some wrong answers as it tries to figure out, what all this means. But if we kind of, hone in on the part of this equation that matters, I think we can understand some things. So Vanna shows you how delta changes when implied volatility changes. And that link, that connection is the key to understanding how the probabilities or the moneyness changes when volatility changes across the option chain. And everything, if you were to really work through the derivation of this equation and understand the different terms, you would see that it's that final term in the equation, like that sigma squared t over 2 minus the natural log of, s over k minus rt. That has kind of a Black-Scholes feel to it because a lot of them are drawing on kind of similar relationships. But that term at the end of the equation is what is driving how, when implied volatility changes, how the deltas across the option chain changes, because that last term determines what the sign of Vanna is going to be. And the sign of Vanna is essentially going to impact how the deltas change when volatility changes. And as we're going to see, it's different for calls, it's different for puts, it's different for out of the money options, and it's different for in the money options, but they all kind of concentrate on a similar relationship that explains that line when volatility expands, every option is an at the money option.
Okie dokie. Explain to me, that's that mathematical equation that you're showing off?
You know this one.
I forgot what this one was.
You know
That's
so
how much
many
I've known
things
it.
about trading, you forgot this one.
Yes.
I mean, Tony, he was working this out in his head in the pits. It's just this.
You created this.
Yeah, you know how I worked it out in my head? I would be, say, at 6 1/4, somebody would go 5 in the order's bid, and I would go, all right, at $6, and they would go, all right, buy them. And then I'd realize that the value for all the Greeks in math was $6 because that's where it was trading.
There you go.
Mm-hmm.
There you go. See, that's what I love. That's what I love about Tony. He skipped right over all the math and the theory. He just went straight to the streets, man.
Yep, the wins and loss, like Belichick. That's right.
It's all that matters. Bill Belichick, right? Mm-hmm. It's all about results. No, I love it.
Yep.
Okay, so Beth, hit us on the next slide. Okay, so what does this mean? How do we understand this? Okay, so here's, there's obviously a lot going on in this slide, but I wanted to keep it as simple as possible, believe it or not. But I wanted to make sure that we could clearly kind of identify out of the money and in the money, and then calls versus puts. So let's work through kind of the graphic that's on the slide here. So the call options are on the top, the put options are on the bottom. On the left-hand side of each, you see out of the money options, and on the right-hand side, you see in the money options. Okay, if I'm looking at an out of the money call, that final term that I had in the box on the previous slide, it ends up being positive, which again, remember, that final term determines the sign of Vanna itself, which is incredibly important for determining how the delta is going to change. If the final term is positive, the Vanna is positive, that means that volatility changes and delta changes are going to move together. So if one goes up, the other one is going to go up. If one goes down, the other one is going to go down. They're going to have what is called mathematically a positive relationship. So volatility increases, delta is going to increase if I have an out of the money call. Okay, but what if I have an in the money call? So if I have an in the money call, I'm going to see the reverse. I'm going to see essentially the inverse relationship. Now the final term becomes negative. The Vanna becomes negative, which now means that they're going to move inversely of one another. So volatility increases, the delta is going to decrease, and vice versa. If volatility were to decrease, the delta would increase. But again, we're focusing specifically on volatility increases right now because that is essentially what is going to cause this flattening out effect across the option chain. Now, if I look at a put option, I've got an out of the money put option. You're going to see, obviously, put options are very much like a mirror image of a call option. So all of this is kind of flipped around. The final term is negative. The Vanna is negative. Volatility increases, delta decreases because, again, the negative Vanna is driving this inverse relationship between volatility changes and delta changes. And then if I'm in the money, I'm going to see the positive relationship, right? The final term is positive. The Vanna is positive. Volatility increases, delta increases. Okay. So this is the explanation of the math that we just saw on the previous slide. But this still doesn't necessarily give us something that we can use as traders just yet. That is on the very next slide. Are you guys ready?
Ready.
Let's go, Beth. Next slide. So this is the key point. As implied volatility increases, the option Vanna pulls deltas on both sides of the moneyness equation closer to 50. So if you were to sit down and actually sketch out a couple of examples, right, pen and paper, like old school, like, I mean, that's like 2011 stuff, man. That's like 1998.
That's real old school.
Right? I mean, that's real old school, right? Get out the chalkboard, right? Just kind of scribble some notes down. What you're going to see is the out of the money deltas increase. So your 30 deltas become 40 deltas. Your 40 deltas become 47 deltas, and so on and so forth. The in the money deltas decrease. So what was a 70 delta becomes 65. What was a 62 delta becomes a 57, and so on and so forth. So what you're seeing is the 50 delta marker kind of has this magnetic effect. It's pulling both sides into itself. It's lifting up the out of the money options and it's dragging down the in the money options. And so when you look across the option chain, you know, I mean, just make note right now of, you know, the VIX is, where's it's 18 something, right?
Volatility
right now,
1841.
1841, down 70 cents. Markets up 13 on the E-mini S&Ps just for the gold watch. It was just down 30. It's down 16 right now. Silver, which has been green all day, unchanged. I'm talking about the futures.
There you go. Right. So when volatility futures spike to 22 or 25, which we all know will happen at some point. Nobody knows when, of course.
Sure.
But when that happens, just make note of how flat the option chain looks. Mm-hmm. You're going to see just a lot more options kind of around 50 before you start to get out to, you know, your 40s, your 30s, your 20s, and so on and so forth.
Yeah.
And so this is the mathematical reasoning for when volatility spikes, every option becomes an at-the-money option.
Well,
it's because of Vanna.
We just saw that in silver and gold. I had a number of emails from people looking at, you know, out of the money calls in silver with a 54 delta. Yeah. And this goes into skew, which is another discussion.
Of course.
But you just saw with SLV and GLD, you know, options that were you would think would be a 10 or 15 delta turn into a 30, 40 delta option because the at the money becomes such a wide range, and that's an effect of volatility.
That's exactly right. And Vanna applies to the metals too. Like, I mean, it's not just the equities. Like, I mean, the option pricing models are going to essentially apply to every asset. And so SLV, GLD, for, you know, all the platinum traders out there, like whatever it is, you put it into the model, it's still going to give you the theoretical framework. And so this explains why, because, you know, gold volatility and silver volatility have been basically pinned at 100 now for what, like 3 months?
Yeah.
I mean, it's been crazy.
Yeah.
And so you're going to see this super flat option chain. That's right. I'm glad you brought that up, Nick. You can look at this right now in SLV or GLD, and you're going to see this exact same phenomenon. That's right.
And it's the second part of the question is like, okay, I'm going to roll. Should I roll to this option or that option or this one? They're all basically the same.
Mm-hmm.
You know, all the options are at the money options now. So whether you're at the 75 strike put in silver in SLV or the 70 strike or the 65, it's all pretty much the same. Like they're all kind of the same delta because that volatility is so high.
So when that happens, then I'm curious. So as a real tactical strategy, I mean, in this type of environment, I'm going to be more apt when I roll to give myself even more space.
Yeah.
Because I can go out further, correct, at the same delta. Even though I'm losing a little bit of premium, directional bias reduction remains the same, so I want to give myself more space.
The difference in premium is minimal, though.
Right,
That's the whole point.
Right. We played Delta, and we played Delta on an opening trade, and we played Delta on a new trade. So you're talking here, and you're saying about it being minimal, and I'll just use it for figuratively speaking, a product like gold. You might see the 25 Delta option trading at 6, and you might see the 15 or 20-ish Delta option, the one that's further out of the money, trading at $5.50.
Yeah.
That spread is so cheap between the two because the spread trades cheap, but the individual options trade expensive.
Yeah.
So you really go with Delta. If you stick with Delta all the time, you stay consistent. Sometimes it reaches your strike because the Delta being so accurate the way it is, and other times it doesn't, and you collect a little bit more. So it really is just staying consistent. It's when you pick and choose,
then you get caught.
Yeah.
Yep.
Feast or famine.
Yep. No. That's really, really good. Those are some words of wisdom right there, right? Those are
don't have many of those words left, to be honest with you.
That's some real wisdom right there. I mean, the stuff about the
Doesn't seem
Seahawks
like
earlier, you kind of fell on your face with that, but you really redeemed yourself with what you just said,
Thank you. Thank you, Dr.
role.
Jim.
Yeah, you're
Appreciate it.
All right, let's get them a few takeaways, man.
Let's do that.
Get some market measures. We're always aware of our Greek exposure, as this monitoring can show us certain risks we're exposed to, and option Vanna offers a unique demonstration of how deltas are affected by change in IV, where the entire option chain tends to flatten out when volatility is on the rise and IV spikes. So use that to your advantage by potentially creating even more space with your trades and staying focused on delta. I love it.
I love it too, my friend. Good job out of you. Good job out of the team supporting you. Great job out of the E-mini S&Ps.
Unbelievable.
I mean, flirting with 7,000. They're 69.90.
Again, nothing's happened. We've been right here.
Volatility in by 80 cents. Down 4%. Big move in volatility. Big move in the NASDAQ, up 150 and change. Russell up 16. Dow up 200 and change, as I said. Big move in gold, just down 30.
I was trying to buy it. It moved 15 points before I clicked the review and send button.
You talking about gold?
Yeah, it's moving 15 to 20 handles within
on the futures,
within a clicking time. You can't even click the button. It's unbelievable. You got to kind of maybe just put the orders in.
You got to listen, guys, we got to be ahead. Guys, hold on. Before we get to market measures, listen. We got to stay ahead of the curve, right? We got to stay ahead of AI. We got to stay ahead of robots. So how are we going to do that? We got to get the Elon Musk neuro chips. So we just need the thought. The thought. Now I'm long gold. Now
that's coming soon. We'll have the Oculus there where you could just look at something.
It's got to be inside our brain. The Oculus, there's too many points of friction. It's got to go in the noggin.
Sure.
It's the only way.
I agree.
You two are nuts. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We got a market measure next. It's Tasty Live.
A good one, 0 day.
Mm-hmm.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. We got this man, Kai, in the house. How are you, my friend? Market Measure sponsored by the SIBO.
I'm doing great. How are you?
Doing very well. And we're looking at 0 day today. Is today 0 day?
Kinda.
Kind of. It does. Yeah. It's 0 day in volatility because it's only moved in one direction. That's to the downside. It's 0 day in the market because it's only moved one way, and that's to the upside. I'm talking about the equity markets.
Incredible.
And it's been two-sided action in the metals, really going nowhere.
The metals are moving a mile a minute.
A mile a minute is a good way of saying it. You are correct. They are moving a mile a minute.
They are flying.
They are flying. And going nowhere.
Yeah.
Nowhere fast right now.
Yeah.
0 DT, you probably should put after whatever the PMI numbers announced. Because I put on Iron Condor 831. Mm-hmm. Right now it's already in the money on the call side. Yeah.
So it hasn't been good today so far.
Not yet.
I like your.
It could be good. Yeah. There's been a lot of. I mean, you've had two-sided action, so a lot of these trades, like you've gotten bailed out.
Oh, that's right. Yeah. But tiny to the downside.
Yeah.
Mm-hmm.
For the SPX. Mm-hmm. Yeah. So I already took off the put spread because it's worth nothing right now.
Right. Well, that's why you do both sides and not just one, right? Yeah. So you get a little bit more credit and maybe you have something to manage, but you're still a losing trade no matter what.
Right now, yes.
Mm-hmm.
Yes. Yeah, I trade small.
That's the way to do it. Mm-hmm. That's the way to do it. All right. I'm ready for you. If you're ready for me, let's get to the first
I'm ready.
Slide here.
So last week we had a summary. Past 2 weeks we have a summary of what happened in 2025 and
sold some more Russell.
Okay.
Chasing.
This is what happens when you play for a team.
You got bonds down.
You do have
rates up, and you got the Russell up. The Russell is the strongest of the group.
What's the percentage right now?
1% move to the upside in the Russell. Yeah. E-minis are just under 7,000. They've said. No big
flight to quality.
No big deal. 100 points to the downside. No big deal.
Yeah, Russell has been the most volatile index in the past couple of months, or maybe even a half year.
And 8 straight up days.
Yeah.
It is crazy.
So if we remember what happened in the research corner in the past 3 weeks, SPX has been up or down less than 0.4% every single week in the past 3 weeks, but Russell's like up 2%, down 2% is always the most obvious one in that table.
Mm-hmm.
Wow.
So this time I want to do a January performance analysis to see what happened in the past 31 days or 20 trading days.
Okay, let's take a look.
All right, so let's take a look at the market condition because I think the market behavior itself impacts 0 DT performance a lot, especially the trading range, realized volatility also is a kind of one direction move like this morning, or is kind of a swing in between a range. Mm-hmm. So in the past month, we had a relatively, it's kind of a normal. So we're up only 1.1%, roughly 1.1% monthly. But the first week, we were up like 1.5+%. And the next 3 weeks, we're pretty much down a little bit. Every single week is 0.4%, negative 0.4, negative 0.4, and positive 0.4%. So you can debate this was a kind of a calm month in January.
Yes, most definitely.
Yeah.
Yep.
Yeah, but we have.
Minis just got 7,000.
They did just hit 7,000.
We have gone
7,050. And it went to 7,000, went right through those stops at 7,000 to 7,000.50. Now to 69.98. It's over. Volatility down 90 cents. I did not have this on my bingo card today in the equity market.
Think it was a possibility. I thought we'd sell at 69.50 was going to be the spot again where you could lay in.
My only thought was, am I going to load up with the E-mini S&Ps down 100, or am I going to trade it small to the long side? That was going to be my thought. Not, do I sell them here at 7,000? I never had that on my bingo card today, especially at 9:15, 45 minutes into the day.
Unbelievable.
Go ahead, Mr. Kai. I apologize, and I apologize to the SIBO because you're doing a great job here. So let's get this January market overview.
Yeah.
We went violently nowhere. So what does that tell you?
I like that one. Yeah.
Well, it was my son coined that.
Violently
unchanged. I kind of piggybacked what he said. I stole it.
Yeah, we have a couple of.
Good morning, you knuckleheads. I stole from Vanna. Basically, my best ideas I steal from everybody.
It's okay.
Go ahead.
Yeah, so we definitely had a couple of large moves, especially we started with the down day and revert all the way back. We probably have at least 3 big reversal days.
Yeah.
And overnight moves is kind of big too, but from weekly perspective, it didn't move that much. And so next slide.
So what do you, in your own trading, like I don't look at the weekly move. Like to me, the weekly move is I look back at it. You know what I mean? Like I don't look.
Right.
I don't. Like I trade in a 45-day-ish time frame, somewhere between 21 and 45 days. Sometimes I always go to the 0 day if I'm looking to do something in SPX, and then it just becomes a binary event that day. I don't take the week into consideration. Do you, in your own personal trading, look at a week?
No.
Okay.
I just found out that pattern is kind of interesting in the past month.
Yep.
Right. We have some volatility in between, but from weekly basis. Whenever we summarize it, almost zero.
Yeah.
It's definitely not important to the zero DTs. And also, you made me nervous. Well, I realized I lose money in the SPX zero DT over there.
You're locked in here.
Okay, next slide. So a little bit more in-depth analysis compared to this January versus all the Januaries in the past 10 years. And compared to all the months in the past 10 years, we definitely see this January was a relatively quiet market.
Yeah.
So even though we've experienced kind of a large reversal, but over the long term, this is a relatively a small move. Yeah.
Relatively speaking, very small. Yes.
We look at the realized volatility, intraday range, VIX, and everything is much smaller than the long-term average. Yeah, so it's normal January, quieter. And so how does that impact our zero DT performance? So let's go to our classic 20 delta, $20 watt hour and condor, manage a 25% profit target and with no stop loss. And this is what happened last week. Every single day we're
profitable.
Yeah, profitable.
But obviously and this shows it too. You have some pain in between this time frame. Like it's
exactly, yeah.
It has had some bounce backs, and a lot of this has been like kind of that upside bounce back where we sell off 70 handles.
Yes.
By the end of the day, you're violently unchanged down 20, and this trade has been perfect. I mean, but there's been some P&L volatility here, but this is incredible.
Yeah, so pretty much I looked through all different kind of strategies. Most of the painful days are concentrating in these 3 or 4 days, especially the last, except the very last day, the 27th, 29th, we had a pretty painful day. These 3 days, we have a very strong, like one direction move to the upside. Mm-hmm. Eventually, they actually reverse back a little bit inside the trading range, but you can see that takes much longer for you to take the profits off, mostly after noon, right?
Yeah.
But for majority of the trading days, 17 days, you're able to get it off before 11. So within 2.5 hours maximum for majority of the trades, which is pretty good.
Yeah, for sure. Very good.
And also the average P&L is 166 for just $20 wide iron condor, 25%. This is amazing. Compared to the long-term average, we only have less than $30 on average, including every days. So
Wow.
this is great.
As good as it gets. I think a lot of people would have thought last week would be a bad time.
I would
DT because of the bigger moves intraday, but they ended. Most days we ended basically flat. So that's
right.
really what
Just got to go to the bar.
Yeah,
I mean, just got to go to the bar. Is what it comes down to.
Mini is up 38 now. 703. Volatility at 1816. Like we might get a 17 handle and
volatility really pegged it.
Just incredible.
Yep.
But to achieve this, you have to manage these mechanical at 25%. Yeah.
Yes.
You don't wait or you don't go to the other place waiting for 50%. But I'll show you 50% results later in the slides.
Cool.
So next one. So this is some other metrics. We have the January 2026 compared to historical average with the win rate, with the average P&L per trade, and also average premium at the order entry. We can see the January actually collected almost the same average credit as the long-term average, so nothing special in terms of implied volatility or the premium at the order entry. But we have a really good success rate. We have very good duration. We have higher efficiency, dollar amount in every hour. Everything beats the historical average.
Yeah.
So just an amazing month across all metrics.
Amazing.
Good one.
Yeah.
Good slide.
Next one. So this is something interesting and highlights from this January. The first one is because we have 100% success rate, the accumulative P&L for that month was almost $31.55. That's 700% of the average month performance in all data.
So it really overperformed, and it kind of goes to very hard to pick and choose, when to put this on and when to take it off. If you're going to do it, you almost have to stay mechanical almost
just keep doing it every day and try to control risk by managing
a little bit wider, keeping your size the same. Just because it's working, don't ramp up the size.
And this also, with the VIX metrics, you had two-sided vol.
You did.
Like you had pops and vol, it contracted. You had pops and vol, it contracted. Like you had
point.
basically the split here. And I know we only have one high above 18, but you can see that there was two-sided changes in volatility.
Of course,
where it wasn't just, low vol grind the whole time.
Yep.
Yeah, so this is actually second best month in all the data we have, and the best one is actually last November, which achieved like $184 per day on average, slightly better than this one, but January was still very strong. So the second point I want to show is the VIX, the implied volatility, and also the realized volatility, historical volatility, is actually in the medium or kind of elevated range, but not crazy. And we don't see like a quick and a crazy VIX pop in majority of the trading days. This is actually kind of perfect world for selling premium, not only 0DT, but also the long-term 45 days too. So in this type of environment, now we see the positive correlation between the VIX and realized P&Ls perfectly. It was the higher VIX, the higher P&L, lower VIX for lower P&L. So one of the worst days, actually, we only have 1 day VIX jump above 18. The market was down like 2.05%. But that day, actually, not only we make the most of P&L, and also that trade is actually coming in within an hour. One of the fastest one we can collect.
Oh.
Which goes to just how fast volatility has been moving.
Yeah, I guess so. I mean, I wouldn't have thought about it like I wouldn't have known that thinking back, but you're right. It's because of the way volatility has expanded and contracted overnight. I mean, not even during the trading day, overnight itself. I mean, just look at volatility last night, got up to, let's round, up to 21, a number that we haven't seen in
for a month, right?
In months.
Last month, the highest one was 20.
Right. We did it overnight. And then to open, with volatility at 19 and then go down by another $1 or so, it's just unbelievable.
Yeah. So next one, we want to compare. We want to compare different profit target. So this is actually a perfect slides. We can compare different profit targets. We want to be greedier or we want to be more conservative. So 25% is kind of more conservative. We'll take it fast. We want to sacrifice some of the P&L before lower risk toward the end of the expiration cycle. So you can see we have the average P&L, we have the win rate average, holding duration, we have, what is the other one? And the largest loss, we can see pretty much managing 50% actually performed well in terms of the P&L compared to 25% in the past month, in January. But in the past 2 or 3 months, we didn't see that. 25% always outperformed because we have fewer losses.
And you can see it here with your biggest loss. That's the biggest drawdown for managing at 50%. You're going to take a little bit more profits, but your losses, you're going to have these tail type losses, which is
right. So this is why it's a good debate, is because you probably can make more money by choosing more aggressive strategies, but eventually the volatility can hurt you.
Yeah, sure.
Yeah. So this is how you're going to control the volatility toward in the later half of the zero DT trading.
Great slide.
Yeah.
Really good work.
And last one is a lot of people curious about the trading puts or rarely naked put, but put spread. So I compare 4 more standard put spread with the 20 delta and 30 delta, $20 wide or 30 delta wide. The $30 wide. So we have 4 different combinations. So we can see, yes, from P&L wise, some of the strategy can beat Iron Condor, but still Iron Condor managing 25% without stop loss is still one of the most stable strategy with lower volatility. And if you can look at long-term performance for zero DT, the Iron Condor are actually good at the premium. Because you sell both sides, so you can collect more premium, and you are good at return of capital because your buying power is slightly lower than most of the put spread, and you have higher premium. So the return of capital is great, but put spread excels at the market rallies.
Yeah,
like today.
Yeah,
we have 3 years of data, and it's been a very upside skewed market.
Yeah,
it's been.
Exactly. Just like today, whenever you have like 10 minutes or 15 minutes market rally, you take it off. So that 25% or 50% comes in much, much faster. So if you're able to bet on the right direction, yes, the P&L efficiency is much higher on the put spread.
Yeah.
Very good. Very good. I mean, it really says business as usual here. And you can't predict what volatility is going to do, and you can't predict what the market size is going to do either. It really shows you how to manage your winners here too. Put that into consideration. You got yourself a nice strategy. Now, if it works better when volatility is higher than lower. But does it work? And you put a little bit of market awareness in there. That you put your spread on pretty much right after the market opened, which if I was doing, we would have done them too. Now we've talked about putting them on. 9? What's that?
You normally put on 9?
8:45 to 9-ish. See what the market has done in that time frame, and then see where we put it on. Right at 8:30, it's a little bit more hairy. Markets are a little bit wider, and sometimes you get a little bit of movement right then and there, and then it kind of settles down. It doesn't take the market a long time to settle in, and you can see that here today so far. So anyway, gold down 40 was just unchanged. I'm fascinated with
the ick. Are you in the ick zone now?
I'm in the ick zone. I was in the ick zone the last time we got up here. Yeah. Go ahead. I'm sorry.
No, I'm done.
No.
That's it.
Good work, Kai. Really a lot of information in there on zero day. I wish I had the intestinal fortitude to put it on today with you, although I'd be crying like you. Let's take a quick 90-second break and come back. We got more Tasty Live. You're going to have a chance to manage it for a win. You watch. Even though volatility is in by 80 cents. We're going to have a quick 90-second break. We're going to come back. We got Q and Ryan coming in here. Even the S&Ps, I have to go over the market here because it's been quite a market. Even the S&Ps are up 30. Look at this overall move, 135, almost 140-point move on the even the S&Ps top to bottom. They're up 30. NASDAQ up 200. Again, doesn't tell the whole story here. A $700 move in NASDAQ top to bottom last night into today. Russell up 27, been the leader of the clubhouse. Dow up 325. It was the first one to turn green, whatever that means. Volatility up 18. Volatility 1825, down 85 cents. You would think Volatility would be lower with the market up 30. You wouldn't think it'd be in by 4.5%. That's a big move of volatility, especially after trading up to 21 last night. Look at where we are in volatility. Right back
dead. It's over.
Into the low zone. Yes. Be careful out there. Bonds down 17 as bonds go lower. Rates typically go higher. Bitcoin down 5,000. It too has had a big move. $4,000 move top to bottom here. Ethereum that's your biggest mover by 11%, down 310. Oil down $3. Big move in oil after a big month in oil to the upside, down almost 5%. Here goes gold down 60 some odd dollars.
I just bought it at 4,700.
Better than you wanted to buy it the first time you wanted to buy it when you couldn't move it, right?
Yeah.
I mean, it's amazing how much it's moving. You really do have to put your bids and offers in where you want. Like right now, I'd be putting an offer in wherever you want to, whether it's $50 higher, $20 higher, like $120 higher. I don't care where you put it in because it'll move that quick if you get the move that you want there. Gold down $63, not telling you the whole story, about $250 off of its lows from last night. Silver, which has been the strongest metal of the group, up to 88, down to 71, trading 77 right now. Net gas is down almost 20%. Look at the moves here in net gas. Again, I don't think too many people trade net gas, but big moves there. We're going to take a quick 90-second break. We're going to come back. We got more from the tastylive trade desk with Q, and we got Ryan. He's got some explaining to do on crypto. We'll be back.
Like he controls it.
Of course he controls it. He's the closest person to controlling it that I have here that I can bitch at. We'll be back in 90 seconds. This is a Tasty Live. Good job, Kai. Great job on the 0 days. Peace.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people wanna buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. Tasty Trade World Headquarters, your friend of mine, Mr. Q. How are you, sir?
Fellas, how's it going? I'm doing well.
I am doing well. Talk to me about the trade desk today. What's your most talked about? It has to be the metals.
I mean, clearly the metals. Yeah, I mean, silver, that had to be the craziest move I've personally ever seen. Down.
I mean, you're not 100 and something
that
years
had to be
old.
the biggest daily red bar on a chart that I've ever seen.
It wasn't really. Where were we at when we went to Q on Friday?
I think it was down like 10 or 15%.
It wasn't at the lows. Like
it was not even.
It was
close.
not even close.
I think it was even less than that. Like I think it was like 5%, and gold was like unchanged or something. Like it wasn't. It didn't look that crazy when we called into Q. That
it was a very
towards the end of
orderly
the day.
down move too. You had that one move down where it went lower by about 2, 3, 4 points and then rallied quickly back. But on a whole, and I'm just talking about the SI futures right now, it really was just a stair step down. And the option markets were pretty good in SLV. Couple pennies wide, just about every option class, unlike gold. GLD had markets that were $1 plus wide at one point, and they still seem to be that way right now.
Yeah, I mean, that would. Yes, it was like stair step down, but that person was running down the stairs.
Yes.
You know?
It was 2 at a time.
Yeah, right. Yeah, 2 at a time.
2 steps at a time for sure.
Yeah, yes.
Yeah, but that has to be by far the craziest move I've ever seen. I think that beats like anything during COVID in terms of like 1 day move. I mean, that red bar was that's the biggest red candle on my screen that I've ever seen.
Yeah.
For sure.
No,
yeah, that's all the talk on the trade desk. A lot of people managing their silver positions.
Well, you got some veteran traders on the trade desk, unlike a lot of other trading platforms and brokerage firms. I mean, every year that goes by, I think I've seen everything, and then everything shows its face again.
Everything changes.
Yeah, everything shows its face again. There's another, I said, the 100-year flood that comes every year kind of thing. It's just amazing when you think you've figured it out. The market really teaches you haven't figured out anything. You know what we figured out, and what has saved me the most? Size and time. Yeah. So people realize, I hope people realize, if you were trading shorter day options in gold and silver, and the magnitude of these moves are so great, take that position and move it out to the 18 or the 40 some odd day options. Volatility not as high in the 0 day, premium just as rich, because you go to a 0, 2, 3, 4 day option, week option with a 60-70% volatility, monthly implied volatility, and you go to the back month, 18, 40 some odd days with a 40-50 volatility, it's almost the same thing. It's about a week's worth of premium difference, but it gives you a little bit of time to sit back. If you're also thinking about like buying power effect, like you may have been short puts that now you got stock, and you get stock, depending on your account side, it could be 50% of overnight, right? It's a $430 product. You could be using 50% in margin. Am I correct? For stock, 10 times as much premium, 10 times as much margin as you were using, or buying power that you were using on the option. Take that stock, sell the stock, sell a put in the back month. Collect a little bit of premium. Take back that. Take back that buying power that you're using. Take it back into your account. Make it. You do intelligent things as opposed to looking at something and saying, I have to blow out this position. Kind of thing. Does that make sense? Because the buying power is too.
Yeah, and that's something we see a lot of customers do when they're trying to manage positions when it comes to a crazy move like this.
Yeah.
You were able to get really far out of the money though. If you were, like in this case, like the put side got tested, right?
Yeah.
If you were selling puts, you're able to get really far out of the money to where those options are probably now maybe even like just at the money or slightly in the money.
They probably haven't moved.
Yeah,
because
they probably have not
volatility
moved nearly as much as like you would typically think, right?
Yeah.
And so because the volatility was already so high, because the move to the upside was just so insane. And then so now if you move that out in time, you want to give yourself a little bit more time, that's a perfectly fine strategy to do if that's what you want.
Yeah, just to put it up there right now in GLD with the stock at 430, the 30-ish delta options are around 460. The 25-ish options, it means a 50% chance of a touch, just rounding here, or almost $8 and change. That's a lot easier than just having long stock. Like if you sell the put, like, you got put stock that you didn't want to. When you sold the put, you were happy because it was an out of the money put. You said to yourself, I'd be happy to own GLD here. Now it's $30 lower than where you were happy to own it, and you've got maybe using too much buying power because you're just naked long stock. Sell stock with one click, in my opinion, to reduce buying power. If you want to reduce buying power, sell the stock, sell the in the money put. You'll be reducing your delta by around 25%. If the call has a 25 delta, the put's going to have a 75 delta. Instead of being long 100 shares, you'd be long 75 shares. And believe me on this, when it gets back to or above the price that you would like to have owned it when you sold that original put, you'll be one happy camper. Right?
That is very true. Yeah. And then also another thing is like when it comes to owning stock, if you got put it, there's potentially like margin interest with that as well. So the options can sometimes be more efficient trading products.
Yeah, margin interest is high. It's higher than the 3 or 4%, maybe it's 4.5%, whatever it is in BIL that you might have cash sitting in.
Oh, for sure. Yeah. And it depends on like how much you're borrowing as well. But typically the rates are, I mean, not just here, like at any firm, right, are much higher than like the Fed funds rate, or something like that. Or like
4.75% in BIL right now. I'm sorry.
Yeah, exactly. Yeah. Like the margin rates are going to be way higher than
8% or something like that, whatever they may be.
Yeah.
It's not the intelligent place to be. You've been parking some money in BIL and you did take in stock like in a GLD just because you mentioned or you did take in silver. Look what that margin is on that and sell some of your BIL stock, and then you can keep the stock if you want to. All I'm saying is be intelligent, make good, sound, logical decisions on how you reduce buying power. It has nothing to do with what you think the market is going to do one way or the other. Then you could make decisions on what you think. Maybe you want to do that and buy an at-the-money call spread. You know what I mean? Like, like take it to that degree.
Yeah, take that like asymmetrical risk. The spreads are trading cheap if the volatility is high.
In my example where you sold stock, sold the put, and you lost 25 deltas, you had 100 deltas, now you only have 75 deltas. Buy an at-the-money call spread too. Now you're going to have basically one-to-one risk for on that call spread. A $10 white call spread, you buy it for $5. It's a 50-50 shot. It's a defined risk trade. Much more intelligent trade, especially for someone who's having, buying power issues on their account. They're probably too big.
Yeah, and that's something we talk to customers about a lot is some people say like, why would I do the debit spread instead of just buying the stock? Well, one, buying the stock's a lot more expensive.
Right.
But then also like, how long do you want to be in the stock? Because if you want to be in the stock for years, you probably want to buy the stock instead of doing the spread, right? But if it's just a shorter duration trade, it could be much more efficient and you get a lot more profit by doing the call spread. Obviously, a lot more risk as well. But it can be a much more efficient trade.
If you got put stock, sell put, buy call. Just so you're selling the put, that gives you long 50 deltas. Oh, you're buying the call at same strike, that gives you long 50 deltas. If it's 70 deltas, 30 deltas, you get 100.
Yeah, buying power will be less than stock.
Buying power would be less. I'm just talking about buying power. I'm not saying that ABC product's going to go higher or lower, but that's your assumption. You got long stock. You were using $10,000 in buying power. Now you're using $50,000 in buying power. I'm just throwing out numbers there. Get back to $10,000-ish in buying power by reversing it back and putting it on the option side. That's just using your capital in an intelligent way. Now the directional bias, that's up to you.
Yeah.
I think what did you just?
I scalped the micro gold for 25.
Because you had.
I just left it in, and then I put one in to get back in around 4,700, and I just got filled on that. So
in that
moving $50 a minute,
right?
In either direction.
So you sold it at 9:40.
I bought it.
Or you sold it at 9:40 a.m.
Yeah.
And you bought it back at 9:43 a.m. $25 lower than where you sold it. It's moving $25
in 3 minutes.
In 3 minutes. This is what I talked about when I said, after you bought it, if you really wanted to do something in there, you have to put a bid and offer in at the price that you want to get filled at, because it'll move so quickly Because that's just the way it is right now. It's moving that quickly that
By
you
the
won't
time
see
you're
it.
going to like route the order, it's $5 or $6 higher.
Yeah. Now you open yourself up to buying it and watching it going another $25 lower, or selling it and watching it going another $25 higher. But that's what volatility is right now. Like that's managing your trade.
Yeah.
Anyway, Q, let's get to did we do your list? I'm so confused.
That was a great discussion.
That was a great discussion.
Sorry.
Yeah, we need more like that. All right,
Yeah.
let's get to the list here. Top 20 symbols going through the system and their IVR. Number 1, no surprise, SLV 80, Tesla 2, IBIT 55, GLD 79, Apple 13, Nvidia 21, Robinhood 34, Palantir 29, Amazon 41, SoFi 9, Microsoft 22, Meta 10, Micron 62, SNDK 80, AMD 44, Google L 35, TQQQ 23, MSTR 36, Oracle 61, and Netflix 18.
Sure. Good job out of you, my friend. Not the usual suspects, but most of the usual suspects.
Yeah, a lot of those that we see in the rotation, you know.
What are you doing here in OKLO, son?
We did the short put call ratio. The stock's down like $4 today, but it got killed on Friday too. I mean, it's down probably from 100 to 75.
Yeah.
So I just bought in the risk on the ratio side. I'm just short the 65 puts now.
Very nice. I'm going to let you go, my friend, and I got to bring in my next victim. That's right. You're a friend of mine, the man who controls crypto.
He's been riding you this morning. I'm like, Ryan doesn't like control the crypto markets here. He's just like our resident crypto guy.
I know that, and you know that, and the audience knows that. But just like when they send me an email, they can't blame themselves. I can't blame myself. It rolls downhill.
Yeah.
79 on Bitcoin down to 75. I'll round up. Huge move in Bitcoin. No volatility to the upside when the market and other commodities were rallying up.
Yeah.
Explain to me.
Yeah,
you don't have any explanation because nobody has
an explanation for why Bitcoin or other crypto assets did not participate. But I think we've got them right where we want them.
And that's what I want to hear.
I think so too.
So I think within the bearish price action, right?
I bought some at 77. I'm so sorry to interrupt you. I apologize.
You're good.
I said that early this morning when it was under 77, got down to 74 and change, because we talked about it, last year, when it was moving in one direction, only to the upside. If it got back into the 70s, maybe I'm going to nibble. So I nibbled very, very small. And I used the Bitcoin USD that we have on Tasty Trade. So
I like the trade.
Yeah, I mean,
and here I come.
Well, I'll remind everyone again.
I bet anything. I'm going to get a little bit more.
Okay.
Just add.
Okay.
Add. Just keep dollar cost averaging, right?
I think at these levels, right, it's been very bearish price action. So the trade has been to sell any and all rallying here. But we were at 98,000 on January 14th.
Yeah.
So I'll remind everyone again, this is a $100,000 asset, six-figure asset with a 50 vol. That's in realized terms. This is going to trade 5150 within a year most of the time. I'm not calling for it to go to 50, but these are the sorts of pullbacks that we've experienced quite often in this. We did take a look at those April tariff lows. That was one of the levels that we've called out. Another level just is kind of the 200-week moving average. It's called about 60,000, maybe a line in the sand. But if you're waiting patiently, and I don't think that over the last month or so we were in any rush, felt better when we were trading higher, but we were in no rush to buy it. Now you're at a level where you look at the price action over the weekend, you've traded into the low 70s a couple of days in a row here. You've found buyers. There's evidence on chain that supports big whales are buying. So, a lot of people might be freaking out as they do selling into those lows. These are obviously the times where if you were patient, you can maybe start to add to your position. I've been adding low 80s down here into the 70s. Doesn't mean that we can't go lower, of course, but much better price than chasing 126. So your range here, you kind of look at almost a fractal in the market where you look at where we traded last time. And quite often what happens with Bitcoin is that on these cycles or during these cycles, you will pull back to the prior cycle high, which was about 74,000. We broke out of that. We went up to 126. Now we've come in back down to the bottom of the range. So you're there. It's about 40% off of the all-time high, but it's not any different, my point, not any different than what we've seen previously. So unless this is just going to zero, which I think there's a lot on the other side of why that wouldn't happen, but maybe it trades lower. But I think for now, you've got an interesting opportunity here. So I've got a trade idea for you guys in ETH because that's where we've seen a little bit more vol. Can walk everybody through this. Have our expected moves up here. I think for Bitcoin, one standard deviation, 1 week based on the spot price at the time, which is about 78, excuse me. And the current volatility, you got 83.7 on the upside and about 74, right, where we traded into on the downside. ETH looking for about a $200 move, maybe get you back up to 2,500 here. But again, being very, very bearish, but volatility has popped, maybe presents an opportunity. So here is a short-term trade. If we jump into the next slide, looking at ETH A, and I'm a simple guy. Gonna sell a put. I've put this on the follow page already. I got filled right around $1 earlier, I believe. But selling the 16 put in March, that gives you 46 days to go. The per strike vol there is about 71%, which is right around where the actual realized is. If you look at the IV index for crypto, or for ETH here, it's a little bit lower. I think it's about 65. But 71 realized, so this is a per strike implied vol of 71%. Trying to sell this for, I don't know, $1, $1.05. Working order in there, as you mentioned earlier, Tony, with a lot of volatility, you want to work some orders. But if you sell the 16 strike, you do that for $1, your return on capital, you have a margin requirement of just over $1,100. Return on capital is just under 10%. And what I'm looking to do here is just take this. I mean, sure, you could roll it, you could manage it, you're going to wait and see. But in the event that you get a bigger move lower and this stays in the money at expiration, I would just take the shares and I would sell a call against it. Where your break even would be here at about 15.90 something, or excuse me, $15, is that you're going to be around 2,100 in terms of the ETH price.
Okay.
So your equivalent ETH price, which is also be just below where we traded into, but that's kind of your recent low. So that's a trade idea given the pop in volatility. If you don't already have a massive position in here and you want to look to establish something, that's kind of what I'm seeing here today. Because I think you're going to see volatility for now remain somewhat elevated. You might chop, you get some rallies here and there, but trend is still pretty bearish.
Yeah, trend is definitely bearish. Can you talk about that?
I do have quite the position, but I added to it. I did the 17 puts to just even more lay into it, you know? Go down with the
It's about 25, 30 cents in premium between the two.
Yeah, difference. Yeah.
I mean, just for argument.
1/3.
Yeah,
it's $1 higher.
I didn't even look. I was just doing that from the math model of options. I mean, that's all. I'm just extrapolating. Extrapolating out. Well, it's definitely a tale of two tapes. You've got the equity market making highs, and you've got metals and crypto basically making lows.
Do you know offhand the correlation, how that's changed over the last month or so? Because it feels like the correlation maybe into the last couple months of last year was pretty decently high between equities and crypto. And in the last month, it seems like it's flipped to basically a negative correlation.
Yeah, it's coming quite a bit. Long term, it's about 0.40. If you go out multiple years, just look at the last year. Month to month, 30, 60, 90 days, you kind of can get up as high as 0.7, at times 0.8. But it's coming quite a bit. Where you have seen a positive correlation recently has been with crypto and the dollar. Not going to be every single day, but you've seen that strengthen a little bit. And then you look at these moves in metals, you look at the volatility, you look at crypto being one of the only markets that's open over the weekend, out of Binance on the exchange, a ton of sell pressure into a market that doesn't have a lot of liquidity, relatively speaking, compared to where you are typically during the week. So that has weighed on it a little bit here. But I think I would be a bit more concerned. I know that it's been the outlier to the downside throughout the rally in metals and where we are with equities. I'd be a bit more concerned if we weren't seeing this same sort of volatility materialize in other areas of the market too. Some of this maybe can be explained by a 2% rally off of the dollar here recently. The catalyst is Kevin Warsh for the Fed.
Who knows?
It's all noise. It's all noise. I think you're still in an environment where if you can buy 75 here, I think there's some upside.
Very good, sir. Good job. out of you. Good job out of the equity market. Bad job out of the gold and metals market. Bitcoin trying to hang in there, 79,000, well off its lows from last night of 75,000. Again, just rounding well off its highs of 95, saw a week and a half or so ago. We're going to take a quick 90-second break. Remember, you got Palantir for earnings after the market closes. We'll be back in 90 seconds. You got more Tasty Live with Liz and Jenny next. Button up your chin straps. We got a lot going on. Peace.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It's option Jive. It is time for an option Jive. Even the S&P is down 20. They're up 3 from the last time I quoted them. Gold is up about $5.
Amazing. Vol below 19.
Below.
Who would have thunk it?
Not I. I didn't have that on my radar screen when I went to bed.
I thought we were going to be
S&P
taking phone calls all day today.
Yeah.
Last night I was looking, I was like, tomorrow's going to be a bloodbath.
Yep.
And nope. Just buy the dip. So?
The equities seem to be the flight to quality right now.
Yes.
That gets scary too.
Yes.
All right, let's see what we got here going on with the little option Jive research corner.
Cool. All right, so just a quick little weekly summary. We had the FOMC meeting. Fed kept rates unchanged. You had Kevin Warsh be the next leader of the Fed. Oh, he's here. I guess you could say that rattled markets a little bit, but I don't know if we can blame that, the move in the markets on that. You had craziness in gold and silver, which we'll talk about. Silver saw the largest pullback in history. It was down 31% intraday, and closed at down 25%. I mean, that's just a historic move. Major commodities and currencies have been super volatile, from crude oil having a $5, $6, $7 weekly range. You had natural gas going crazy. You had the dollar at the lowest in 5 or 6 years. The euro was above 120. The gold and silver stuff was nutty too. Bitcoin isn't even on here, but it was a week of outlier moves, I think, in basically everything, with the market violently unchanged.
With the equity market violently unchanged, you look underneath the surface of all these other products.
Yeah, Microsoft down 20%,
No big whoop.
No big whoop. Crazy.
Yep. Crazy indeed.
Just looking at the week ahead, so we have ISM manufacturing PMI today, the jobs report on Friday, and then you have any sort of ongoing news headlines. You have Iran in the picture. You have Warsh and the Fed, and all sorts of stuff. I saw, Trump's making a critical metals basket of some sort, the 10, 15, 20 billion, the numbers just, all over the place. So all sorts of stuff happening this week, at least on that front too. So you got to keep your head on a swivel. I think that's what we've learned this year, if not the last.
Yep. I don't think, hold on tight. This isn't over.
Yes. Mm-hmm. And just to go with the violently unchanged, you can see the S&P 500 basically a zero after the last 2 weeks, down 4% to up 4%. It doesn't exactly work out to be zero. We're still a little bit lower just because of the numbers. Mm-hmm. But it just tells you that we've chopped. And you see the chop in the NASDAQ. The Russell has really been the weakest of the group. It was down 2%.
And you pointed that out last week too. When you were talking about the Russell. So you've been mentioning this and seeing it, but yeah, you look at this.
It's nothing. It does. This
is normal action.
This is normal action. This is 1 day action.
It's 1 day action.
It's 1 day action. The VIX at where it is right now at 18 and change. You should be moving 1% a day. That's what the VIX at 18 is 1%.
That's correct.
Up or down day to day. And we're moving 0.5% in a week. It's not there.
It's a nothing burger for those who want to have a drink early this morning.
There you go. It's quote unquote not volatile.
Right.
This has not been volatile.
In the YouTube chat room.
Even though it's been volatility underneath the surface.
Yeah. You can't take the numbers just for face value. You actually have to watch what the market has done.
Yeah. Been wild.
Mm-hmm.
So in terms of expected move here, the same kind of story here. We have a little bit of a higher VIX into this week. So the expected move is a little bit wider, but again, nothing crazy. It's kind of the same sort of expectations for this week as we've seen the last couple of weeks.
Mm-hmm.
See, plus or minus 1.6% is our range for the week. The last 2 weeks have been well inside that. So, just more of the same.
More of the same. More of the same. That's really what it looks like. More of the same.
Yes. When we look at the major assets, seen a lot of volatility underneath the surface, or at least starting to percolate.
Look at these numbers.
Everything's up. Volatility is up across the board. Equities have gone pretty much nowhere. The rest of these have had huge moves. I mean, talking about gold, IVR of 89 does not come along very often. Same with silver.
Gold down $30. Just in the last two slides, it's moved $30.
Crazy. Natural gas, 100% implied volatility. You're seeing Bitcoin volatility increase. Volatility is poking its head up. But it gets smacked down every single time. You got vol futures below 19 now.
Yeah, I mean we talked about how volatility being low previous to this last week or so, last 2 weeks or so, volatility was extremely low. And when volatility is extremely low, you get these bigger moves when volatility is low. Now we have volatility high, and you're getting these bigger moves too as volatility has started to expand and contract intraday. Now that's representing the market. Here you have other things than just the S&P 500, but volatility is elevated everywhere. So if you've been on the sidelines or you've had less money in the market than you normally would have, now might be the time to look at things, bullish or bearish, where you might want to look at things to kind of ramp up your positions, not necessarily the size of your positions.
Yeah.
Next one, please.
Some of the biggest movers, I think the memory stocks are probably the top story of the week in the equity world. SanDisk up 22%. It was up $120 or so after earnings. It sold off to basically unchanged by the end of the day. Again, these moves are...
It's up 14 or $15 this morning, and you are right. I mean, you just mentioning...
It was almost 700 at one point. It got to like 675. It got to 675 and then closed at 576. And we're up, $10 or $12 right now.
And it went down to 530. I mean, it had a $140 move top to bottom intraday. I mean,
STX the same story. I mean, that stock was at going from 350 to 450 and then back to 400.
Yep.
So You talk about huge moves underneath the surface here. On the downside, you had like a lot of the healthcare names, UNH, Humana. You had like Carvana had a short report that came out, and that stock was down significantly. It bounced the next day. You know, Palantir has been really weak. Microsoft isn't even on this list. It had a huge move. So there's been some big moves in both directions throughout the last couple weeks. And it's netted out to basically nothing. But they're huge single name moves. The single name volatility has been, the realized volatility has felt off the charts.
Yep.
Getting into the big story, or the bigger story, I guess the memory stocks were a big story, but silver closed down 25% with its largest intraday pullback at 31%. The only comparable events were the Hunt brothers back in the 1980s with a 30% price pullback.
But that was market manipulation.
Yeah, that was different.
I mean, and it was a different level of leverage being used. I mean, I think it was 10 times the leverage that's being used today.
Yeah,
back
even
then,
with
two people controlling it. Yes. I mean, it's a completely different animal. The move is whatever it is. Like that, you know, that's what you. Who cares about the why? Like I always say that, you know, an option price is $10. Who cares how they got there? It's basically pick them. What do you want to do? Buy it or sell it? What strategy do you want to use? What strategy do you want to use here? It's always the same. Like, what strategy do you want to use to benefit from your assumption?
Totally. But it's, I mean, that chart is just, it's
the largest. I mean, it took out a month of biblical proportions to the upside.
It's still high.
The downside.
I mean, silver, when you look at it a year back, it's still a double, if not more.
Yeah, if not more.
Yeah.
And again, going to the macro view, I don't know what's changed in 48 hours, and that's why I find that macro view a little bit hard to base my opinion on, as opposed to what the market's doing itself.
The next slide here, the gold and silver ratio, it was getting close to its long-term lows. I know I've been talking about my peeps, Malachi, and some others that have been sending me the emails. You know, 40 is the 100-year average. When you look at, you know, the more recent,
pretty close at 45.
Yeah, they're right there.
Yeah.
The recent average, you know, this has certainly, it's been a swift move to the lower end of the range. I mean, we're talking like 2 weeks, and it's back and it's there.
Yes.
At the lows here. So this is just an unbelievable chart. When you're thinking about this from a percentage move, it's $5,000 per percent if you're doing the long, the big boy futures of 2 GC to 1 SI. If you do the micros, it's $1,000 per point. So these are astronomical moves.
And it took a month to go from around, it's trading around 58 right now. So I'll use 58 because when I got in trouble, I bought it at 56. That was the first time I got in trouble. Watched it go down to 45. So it's gone from 58 where it is right now last month, the beginning of the month, to the end of the month where it was around 46, got as low as 45 and change, but let's just call it 46. We'll throw out the lows. And it's back to 58 in 2 days.
Wow, the low of the session, 1885.
Wow, the low of the session, 1885, down 25 cents.
I think I'm going to buy one more. Micros. Just going to let that.
Put it on the bid, you'll get hit. Next question, please.
So just looking again at the earnings, these are some of the biggest movers to the upside, the downside. Again, the memory stocks have been, you know, kind of the biggest movers recently. You have UNH in there, Meta as well, which had earnings. It had a big move to the upside. It felt like it kind of saved the market that day with Microsoft down, you know, a comparable amount to what Meta was up. So just some big moves across the board here. On the next slide here, the earnings. Again, my favorite slide to look at because it's just the same every single time. It's basically 50-50 in either direction. You know, the average return of 0%. It's unbelievable how this works out. It works out like this every single time, despite your own thinking of what earnings have been, because that's influenced by the ones that you actually trade. Because sometimes if you trade them and you have, you know, you trade 3 of them and they're all big moves, you know, against you, you think earnings have been crazy this year. When you take the whole basket, it's been nothing, which is, it looks like that every single time.
Yeah, it's been a big nothing burger, but it really has been big trade.
Next slide here, just to finish off, got a bunch of earnings coming up this week. You got Palantir after the close today. You got, AMD in there, PayPal, Uber, Lilly, Alphabet. You got Amazon at the end of the week too, Reddit in there too. So definitely still in the earnings season.
And which you would think volatility would stay bid just on these facts, right?
You would think so, but I don't know. There's no volatility cannot. It gets the speed at which it is smashed down is pretty unbelievable.
Let's turn those machines back on. We'll do that in about 2.5 minutes. You listen to Tasty Live. We'll be back with the opening bell next. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with nothing says Monday like this minute skinny on options abstract application, because this is not your normal Monday. Dr. Jim, how are you, my friend?
Why is this not a normal Monday? Is something special about today? No, I'm serious.
It's true.
We're doing it, right?
Yeah, we're doing it and doing it well. We're doing it.
It's Monday, it's leg day, like it's just every other Monday. It's just the same type of deal. Now I know that this is Monday of Super Bowl week, and so let's make sure we lock this down. Let's make sure we're all on record. Where are you guys at? I need picks. I need predictions. Where are we at?
I like the Seahawks. I like the Seahawks.
I think, the Super Bowl seemed to be a blowout. It's 4.5. I think I would lay the 4.5 and take Seattle.
I don't know. If it starts another Patriots dynasty,
it's going to be hard. It's going to be hard. I have enough going on with the metals and volatility and the market that I don't need a Patriot dynasty coming at me again.
No more of that.
No more of that, please.
No, please.
This is perfect. This is perfect, gentlemen. This is perfect. I will stand alone.
Okay.
I will walk into the corner and pick up the pile of cash that is the Patriots plus 4.5.
Of course.
Okay. I figured you would. You would.
My man Drake May, isn't he hurt? Isn't he injured? I heard something. He's hurt, right?
I don't know. He's a young guy.
He is a young guy. What's hurt?
Okay. Yeah, he's okay.
Yeah,
he's all right.
Yeah, but Brady's just a phone call away.
That's true.
Right? Let's bring him back for number 8. Let's go.
Yeah. Okay.
All right, so there you go. Okay, so you got a couple of Johnny Publics over there in the Tasty HQ laying the points. I'll take it.
Okay.
Take my Patriots at 4.5.
I hope you remember this conversation at some point.
No, it's going to be all long
Never
gone.
happened.
When the Seahawks win by 17, no, it's going to be long gone. Long gone. You know what's funny, though? So watching the opening bell this morning, it was so interesting, Nick, because you were commenting so much on volatility's movement and how volatility was contracting so quickly, right? And it just got me to thinking, and this is not what I'm going to talk about today, because obviously the segment was already prepared, but I did want to point out, it's really cool to see this happening and talk about it and highlight it, because is that not what we do? Like, that is exactly what we do, right? Volatility spikes, it's elevated, we see opportunity, we get in, we sell that volatility, and then when it contracts quickly, we get paid really, really quickly.
Sure.
And so it's kind of cool to see that happen, because it really supports all the things we've been doing for so many years.
It seems like it's moving faster than ever. I mean, the market and volatility and just things.
Yeah, this boomer thinks it's moving faster. I thought maybe you young guys would think that this was just normal.
It has become more normal. I mean, I think the swings have become more normal. I think that's a function of access and news and just, the way the world moves.
Mm-hmm.
It's just way quicker than it was even a couple years ago.
Yeah.
But this last month has seemed really quick, quicker than it has been.
Yes.
So you're talking. So are you referring to the equity specifically, or because the metals? Obviously, the metals. I mean, this is historic, right? It's like this is like legitimately once in a lifetime stuff.
Yes.
I think it's across the board.
Once in a lifetime that happens like a half a dozen times per decade.
It feels like it happens.
This is the 100-year flood that we have every other year. Right?
Yeah.
That's what it seems like to me, at least.
Yeah, it's just been quick, and there's so much like headline risk, and it's all very fast.
Yes,
but that's good.
Well, I just want to take a second. Yeah, no, I mean, I don't disagree with you, but I just want to take a second and highlight, premium selling as the foundation. Like a lot of traders out there doing a lot of different things. I mean, we're even experimenting with a lot of different things too. I mean, trying to grow and challenge ourselves as a network and all those things. But as a foundation, selling premium high volatility, it's like, man, this is what you want. You want the volatility spikes. You get in, you sell whatever you sell. You're selling strangles, you're doing ratios, you're doing verticals, whatever. And then the volatility, deflates. Quick little shout out to Deflategate. Then that's good. Like that's obviously a good thing where you get paid pretty quickly.
Yeah.
So there you go. What's up with Belichick not getting in? Can we talk about that for a second? Like, is that not crazy? Come on, guys. Like, what are we doing?
I don't get the whole voting process thing. Like, it's not even ex-players. It's just like media personalities, and I don't know, those.
I tend to agree with you on that point of view, but the other point of view is it's a personality contest, which, I mean, part of it is a personality contest, which it shouldn't be. I mean, you should just treat them on their football athletic ability, whether it's coaching, if that's what you're judging, or anything else. And how can you not? I mean, success at the end of the day, your P&L at the end of the day here, your success wins and losses there. I can't stand the man because he wasn't my coach for my team that I like. But I mean, you can't argue with his success. I mean, if he's not a first ballot, who is?
Exactly. That's exactly my point. It's like, I mean,
I get your point, and I agree with it.
Yeah. And it's like okay with Bonds and McGuire, like okay, whatever. Like I got it. Like I don't agree, but it's like okay, whatever.
Sure.
But this is like, I mean, come on, man. Like it's like at the end of the day,
come on, man.
He's not in.
Yep.
I don't know who's in. But anyway, gentlemen.
Jim, I before we get started, I do have a question about the iguanas. Do you have any in your backyard? Have you been out there yet to see the
iguanas? Is there an iguana problem in Florida right now?
They're freezing. They're all freezing and falling from the trees.
Oh, I haven't seen any falling iguanas from the sky. No, I have not.
Okay.
I have not. Every once in a while, I mean, you'll see a gator walking down the road, but that's just normal. Like they're fine. Like they'll take care of themselves. But the iguanas, haven't seen too many iguanas in Paris.
All right, that's good to know.
That's good to know.
Maybe I'm getting fed fake news.
No, I mean, I'm giving you the St. Petersburg update, right?
Yeah.
I mean, are there some iguanas in peril in Bradenton? It's possible. Like it's very possible, right? I did see. You know what's crazy? I did see something this morning. It's actually colder in Orlando, or at least it was this morning, than it was in Alaska.
Wow.
So the low in Orlando this morning was like 23, 24, and the low in Alaska was only like 30. And I'm like, I don't know that that's ever happened before. So there's another once-in-a-lifetime event for you there, Tony.
That's it. There we go.
Add it to the list.
Once every 100 years, it happened again in my lifetime.
There you go. All right, let's do some finance. I'm ready, man. Let's
do it. I'm ready too.
Man, Vanna and volatility. Have you guys ever heard the line, at a certain point when volatility gets so high, every option becomes an at-the-money option? Have you guys ever heard that line?
Sure. And for that person who asked the question this morning about second and third tier Greeks, here you go, ladies and gentlemen. I said Dr. Jim talks about it from time to time. I got a feeling he's not talking about Vanna White here.
Yeah, I was going to say, no Price is Right.
Yeah.
No Price is White. It's Wheel of Fortune. You didn't even get
is it Wheel of Fortune?
Yeah, it's Wheel. You're not a wheeler?
No, wasn't it the one with the like we should walk across the stage and... No, it's the word one.
It's the word one.
Yeah, that's Wheel of Fortune.
Oh, he's right.
Price of Right.
Price of Right is with Bob Barker in the old days.
Yeah.
Come on down.
Yeah. Sorry.
Yeah.
I'm not.
He's unk status. He's getting just as Stunat. He's getting just as Stunat as me now.
Yeah, I'm not that old.
I'll tell you what. Like, so, guys, have you guys ever seen those pictures of like?
Unk yells at cloud. It's going to be the next.
No. This is good. So have you guys ever seen those pictures of like presidents? I mean, there's a really classic one about Obama. There's another classic one about whatever, where they show a picture of him like before he was president, and then a picture of him like right after his presidency.
How it ages you.
And he just looks like 80 years older, right?
Yeah.
Nick, that's kind of how you look.
Oh,
like
thanks,
I'm looking at
Jim.
you right now.
Thanks, brother.
I'm just saying, like the hair, the beard.
Wow.
I mean, there's a lot of white and gray.
I know.
I'm just saying, man.
I know. Trust me, I know.
But it's all happened. But in your defense, it's all happened in the last 3 months.
Yeah.
And so, what has been the big change? I mean, look who's sitting across from you.
Yeah.
That's true.
Yeah.
I mean, that's why it's not even your fault, man.
Right. Well, it rolls downhill. It happened to me. It's going to happen to you.
That's true.
That's all I can tell you. Sad
All right,
but
so
true.
let's do some Vanna and volatility. Okay,
I'm ready.
So anyway, every option is an at-the-money option when volatility gets so high. The funny thing about that line is I actually, Tony, I heard you say that line some number of years ago at the studio, and I was like, that's really interesting. And so I wrote it down, right? Because what I would do when I first joined, the Tasty Network and I was at the studio, anything Tom said, I would write it down and then cross it out. I'm like, I don't want to say that. That doesn't make any sense. But anything Tony would say, I would write it down and I would circle it. And I'm like, I should probably look into that a little bit more. So I was like, okay, that's a really interesting line. There must be a mathematical foundation for that. Like there has to be some mathematical kind of, basis for, the intuition and the experience that Tony is kind of laying out there. And so that's actually exactly what we're going to uncover here this morning.
All right, let's do it.
And so Beth, go ahead and hit us on the intro slide there. So the Wheel of Fortune, as active traders, we're constantly monitoring and analyzing the Greek exposure of our overall portfolios and individual positions alike. And as primarily volatility traders, we're especially aware of any changes in IV and the impacts those changes can have on our strategies. Given this, it might be worthwhile to better understand just how Vanna works in relation to Delta. Because Vanna is a second level Greek, it is a second order Greek. It is the mathematical foundation for that line, Tony. When volatility gets to a certain point, every option becomes an at-the-money option, and we're going to better understand exactly why that is this morning.
Okie dokie, let's do it.
All right, let's do it. Okay, Beth, go ahead and hit us on the next slide. So here is the equation for Vanna, which is no small feat. I mean, even if you pump this into your AI bot, it's going to struggle a little bit this morning. It's going to make some stuff up and give you some wrong answers as it tries to figure out, what all this means. But if we kind of, hone in on the part of this equation that matters, I think we can understand some things. So Vanna shows you how delta changes when implied volatility changes. And that link, that connection is the key to understanding how the probabilities or the moneyness changes when volatility changes across the option chain. And everything, if you were to really work through the derivation of this equation and understand the different terms, you would see that it's that final term in the equation, like that sigma squared t over 2 minus the natural log of, s over k minus rt. That has kind of a Black-Scholes feel to it because a lot of them are drawing on kind of similar relationships. But that term at the end of the equation is what is driving how, when implied volatility changes, how the deltas across the option chain changes, because that last term determines what the sign of Vanna is going to be. And the sign of Vanna is essentially going to impact how the deltas change when volatility changes. And as we're going to see, it's different for calls, it's different for puts, it's different for out of the money options, and it's different for in the money options, but they all kind of concentrate on a similar relationship that explains that line when volatility expands, every option is an at the money option.
Okie dokie. Explain to me. That's that mathematical equation that you're showing off?
You know this one.
I forgot what this one was.
You know
That's
so
how much
many
I've known
things
it.
about trading, you forgot this one.
Yes.
I mean, Tony, he was working this out in his head in the pits. It's just this.
You created this.
Yeah, you know how I worked it out in my head? I would be, say, at 6 1/4, somebody would go 5 in the orders bid, and I would go, all right, at $6, and they would go, all right, buy them. And then I'd realize that the value for all the Greeks in math was $6 because that's where it was trading.
There you go.
Mm-hmm.
There you go. See, that's what I love. That's what I love about Tony. He skipped right over all the math and the theory. He just went straight to the streets, man.
Yep, the wins and loss, like Belichick. That's right. It's
all that matters. Bill Belichick, right? Mm-hmm. It's all about results. No, I love it. I love it.
Yep.
Okay, so Beth, hit us on the next slide. Okay, so what does this mean? How do we understand this? Okay, so here's, there's obviously a lot going on in this slide, but I wanted to keep it as simple as possible, believe it or not, but I wanted to make sure that we could clearly kind of identify out of the money and in the money, and then calls versus puts. So let's work through kind of the graphic that's on the slide here. So the call options are on the top, the put options are on the bottom. On the left-hand side of each, you see out of the money options, and on the right-hand side, you see in the money options. Okay, if I'm looking at an out of the money call, that final term that I had in the box on the previous slide, it ends up being positive, which again, remember, that final term determines the sign of Vanna itself, which is incredibly important for determining how the delta is going to change. If the final term is positive, the Vanna is positive. That means that volatility changes and delta changes are going to move together. So if one goes up, the other one is going to go up. If one goes down, the other one is going to go down. They're going to have what is called mathematically a positive relationship. So volatility increases, delta is going to increase if I have an out of the money call. Okay, but what if I have an in the money call? So if I have an in the money call, I'm going to see the reverse. I'm going to see essentially the inverse relationship. Now the final term becomes negative. The Vanna becomes negative, which now means that they're going to move inversely of one another. So volatility increases, the delta is going to decrease, and vice versa. If volatility were to decrease, the delta would increase. But again, we're focusing specifically on volatility increases right now because that is essentially what is going to cause this flattening out effect across the option chain. Now, if I look at a put option, I've got an out of the money put option. You're going to see, obviously, put options are very much like a mirror image of a call option. So all of this is kind of flipped around. The final term is negative. The Vanna is negative. Volatility increases, delta decreases because, again, the negative Vanna is driving this inverse relationship between volatility changes and delta changes. And then if I'm in the money, I'm going to see the positive relationship, right? The final term is positive. The Vanna is positive. Volatility increases, delta increases. Okay. So this is the explanation of the math that we just saw on the previous slide. But this still doesn't necessarily give us something that we can use as traders just yet. That is on the very next slide. Are you guys ready?
Ready.
Let's go, Beth. Next slide. So this is the key point. As implied volatility increases, the option Vanna pulls deltas on both sides of the moneyness equation closer to 50. So if you were to sit down and actually sketch out a couple of examples, right, pen and paper, like old school, like, I mean, that's like 2011 stuff, man. That's like 1998.
That's real old school.
Right? I mean, that's real old school, right? Get out the chalkboard, right? Just kind of scribble some notes down. What you're going to see is the out of the money deltas increase. So your 30 deltas become 40 deltas. Your 40 deltas become 47 deltas, and so on and so forth. The in the money deltas decrease. So what was a 70 delta becomes 65. What was a 62 delta becomes a 57, and so on and so forth. So what you're seeing is the 50 delta marker kind of has this magnetic effect. It's pulling both sides into itself. It's lifting up the out of the money options and it's dragging down the in the money options. And so when you look across the option chain, I mean, just make note right now of, the VIX is, where's it's 18 something, right?
Volatility
right
1841.
1841, down 70 cents. Markets up 13 on the E-mini S&Ps just for the gold watch. It was just down 30. It's down 16 right now. Silver, which has been green all day, unchanged. I'm talking about the futures.
There you go. Right. So when volatility futures spike to 22 or 25, which we all know will happen at some point, nobody knows when, of course.
Sure.
But when that happens, just make note of how flat the option chain looks. Mm-hmm. You're going to see just a lot more options kind of around 50 before you start to get out to, your 40s, your 30s, your 20s, and so on and so forth.
Yeah.
And so this is the mathematical reasoning for when volatility spikes, every option becomes an at-the-money option.
Well,
it's because of Vanna.
We just saw that in silver and gold. I had a number of emails from people looking at, out of the money calls in silver with a 54 delta. Yeah. And this goes into skew, which is another discussion.
Of course.
But you just saw with SLV and GLD, options that were you would think would be a 10 or 15 delta turn into a 30, 40 delta option because the at the money becomes such a wide range, and that's an effect of volatility.
That's exactly right. And Vanna applies to the metals too. Like, I mean, it's not just the equities. Like, I mean, the option pricing models are going to essentially apply to every asset. And so SLV, GLD, for all the platinum traders out there, like whatever it is, you put it into the model, it's still going to give you the theoretical framework. And so this explains why, because gold volatility and silver volatility have been basically pinned at 100 now for what, like 3 months?
Yeah.
I mean, it's been crazy.
Yeah.
And so you're going to see this super flat option chain. That's right. I'm glad you brought that up, Nick. You can look at this right now in SLV or GLD, and you're going to see this exact same phenomenon. That's right.
And it's the second part of the question is like, okay, I'm going to roll. Should I roll to this option or that option or this one? They're all basically the same.
Mm-hmm.
All the options are at the money options now. So whether you're at the 75 strike put in silver in SLV or the 70 strike or the 65, it's all pretty much the same. Like they're all kind of the same delta because that volatility is so high.
So when that happens, then I'm curious. So as a real tactical strategy, I mean, in this type of environment, I'm going to be more apt when I roll to give myself even more space.
Yeah.
Because I can go out further, correct, at the same delta. Even though I'm losing a little bit of premium, directional bias reduction remains the same. So I want to give myself more space.
The difference in premium is minimal, though.
Right.
That's the whole point.
Right. We played Delta, and we played Delta on an opening trade, and we played Delta on a new trade. So you're talking here, and you're saying about it being minimal, and I'll just use it for figuratively speaking, a product like gold. You might see the 25 Delta option trading at 6, and you might see the 15 or 20-ish Delta option, the one that's further out of the money, trading at $5.50.
Yeah.
That spread is so cheap between the two because the spread trades cheap, but the individual options trade expensive.
Yeah.
So you really go with Delta. If you stick with Delta all the time, you stay consistent. Sometimes it reaches your strike because the Delta being so accurate the way it is, and other times it doesn't, and you collect a little bit more. So it really is just staying consistent. It's when you pick and choose,
then you get caught.
Then you get caught.
Yeah.
Yep.
Feast or famine.
Yep. No. That's really, really good. Those are some words of wisdom right there, right? Those are
don't have many of those words left, to be honest with you.
That's some real wisdom right there. I mean, the stuff about the Seahawks earlier, you kind of fell on your face with that, but you really redeemed yourself with what you just said,
Thank you. Thank you, Dr. Jim. Appreciate it.
All right, let's get them a few takeaways, man.
Let's do that.
All to some market measures. We're always aware of our Greek exposure, as this monitoring can show us certain risks we're exposed to, and option Vanna offers a unique demonstration of how deltas are affected by change in IV, where the entire option chain tends to flatten out when volatility is on the rise and IV spikes. So use that to your advantage by potentially creating even more space with your trades and staying focused on delta. I love it.
I love it too, my friend. Good job out of you. Good job out of the team supporting you. Great job out of the E-mini S&Ps.
Unbelievable.
I mean, flirting with 7,000. They're 69.90.
Nothing's happened. We've been right here.
Volatility in by 80 cents. Down 4%. Big move in volatility. Big move in the NASDAQ, up 150 and change. Russell up 16. Dow up 200 and change, as I said. Big move in gold, just down 30.
I was trying to buy it. It moved 15 points before I clicked the review and send.
You talking about gold?
Yeah, it's it's moving 15 to 20 handles within
on the futures,
within a clicking time. Like you can't even click the button. It's unbelievable. You got to kind of maybe just put the orders in.
You got to listen, guys, we got to be ahead. Guys, hold on. Before we get to market measures, listen. We got to stay ahead of the curve, right? We got to stay ahead of AI. We got to stay ahead of robots. So how are we going to do that? We got to get the Elon Musk neuro chips. So we just need the thought. The thought. Now I'm long gold. Now
that's coming soon. We'll have the Oculus there where you could just look at something.
It's got to be inside our brain. The Oculus, there's too many points of friction. It's got to go in the noggin.
Sure.
It's the only way.
I agree.
You two are nuts. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We got a market measure next. It's Tasty Live.
A good one, 0 day.
Mm-hmm. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. And we got this man, Kai, in the house. How are you, my friend? Market Measure sponsored by the SIBO.
I'm doing great. How are you?
Doing very well. And we're looking at 0 day today. Is today 0 day? Kind of. It does. Yeah. It's 0 day in volatility because it's only moved in one direction. That's to the downside. It's 0 day in the market because it's only moved one way, and that's to the upside. I'm talking about the equity markets.
Incredible.
And it's been two-sided action in the metals, really going nowhere.
The metals are moving a mile a minute.
A mile a minute is a good way of saying it. You are correct. They are moving a mile a minute.
They are flying.
They are flying. And going nowhere.
Yeah.
Nowhere fast right now.
Yeah.
0 DT, you probably should put after whatever the PMI numbers announced. Because I put on Iron Condor 831. Right now it's already in the money on the call side. Yeah.
So it hasn't been good today so far.
Not yet.
I like your.
It could be good. Yeah. There's been a lot of. I mean, you've had two-sided action, so a lot of these trades, like you've gotten bailed out.
Oh, that's right. Yeah. But tiny to the downside.
Yeah.
For the SPX. Yeah. So I already took off the push spread because it's worth nothing right now.
Right. Well, that's why you do both sides and not just one, right? Yeah. So you get a little bit more credit and maybe you have something to manage, but you're still a losing trade no matter what.
Right now, yes. Yes. Yeah, I trade small.
That's the way to do it. That's the way to do it. All right. I'm ready for you. If you're ready for me, let's get to the first
I'm ready.
Slide here.
So last week we had a summary. The past 2 weeks we have a summary of what happened in 2025 and
sold some more Russell.
Okay.
Chasing.
This is what happens when you play for a team.
You got bonds down.
You do have
rates up, and you got the Russell up. The Russell is the strongest of the group.
What's the percentage right now?
1% move to the upside in the Russell. Yeah. E-minis are just under 7,000. They've said no big
flight
deal.
To quality.
No big deal. 100 points to the downside. No big deal.
Yeah, Russell has been the most volatile index in the past couple of months, or maybe even a half year.
And 8 straight up days.
Yeah,
it is crazy.
So if we remember what happened in the research corner in the past 3 weeks, SPX has been up or down less than 0.4% every single week in the past 3 weeks. But Russell is like up 2%, down 2% is always the most obvious one in that table.
Wow.
So this time I want to do a January performance analysis to see what happened in the past 31 days or 20 trading days.
Okay, let's take a look.
All right, so let's take a look at the market condition because I think the market behavior itself impacts 0 DT performance a lot, especially the trading range, realized volatility also is a kind of one direction move like this morning, or it's kind of a swing in between a range. So in the past month, we had a relatively, it's kind of a normal. So we're up only 1.1%, roughly 1.1% monthly. But the first week, we were up like 1.5+%. And the next 3 weeks, we're pretty much down a little bit. Every single week is 0.4%, negative 0.4, negative 0.4, and positive 0.4%. So you can debate this was a kind of a calm month in January.
Yes, most definitely.
Yeah.
Yep.
Yeah, but we have.
He's just got 7,000.
They did just hit 7,000.
We have gone
7,050. And it went to 7,000, went right through those stops at 7,000 to 7,000.50. Now to 69.98. It's over. Volatility down 90 cents. I did not have this on my bingo card today in the equity market.
Think it was a possibility. I thought we'd sell at 69.50 was going to be the spot again where you could lay in.
My only thought was, am I going to load up with the E-mini S&Ps down 100, or am I going to trade it small to the long side? That was going to be my thought. Not, do I sell them here at 7,000? I never had that on my bingo card today, especially at 9:15, 45 minutes into the day.
Unbelievable.
Go ahead, Mr. Kai. I apologize, and I apologize to the SIBO because you're doing a great job here. So let's get this January market overview.
Yeah.
We went violently nowhere. So what does that tell you?
I like that one. Yeah.
Well, it was my son coined that.
Violently
unchanged. I kind of piggybacked what he said. I stole it.
Yeah, we have a couple of.
Good morning, you knuckleheads. I stole from Vanna. Basically, my best ideas I steal from everybody.
It's okay.
Go ahead.
Yeah, so we definitely had a couple of large moves, especially we started with the down day and revert all the way back. We probably have at least 3 big reversal days.
Yeah.
And overnight moves is kind of big too, but from weekly perspective, it didn't move that much. And so next slide.
So what do you, in your own trading, like I don't look at the weekly move. Like to me, the weekly move is, I look back at it. You know what I mean? Like I don't look,
right.
I don't, like I trade in a 45-day-ish time frame, somewhere between 21 and 45 days. Sometimes I always go to the 0 day if I'm looking to do something in SPX, and then it just becomes a binary event that day. I don't take the week into consideration. Do you in your own personal trading look at a week?
No.
Okay.
I just found out that pattern is kind of interesting in the past month.
Yep.
Right. We have some volatility in between, but from weekly basis, whenever we summarize it, almost zero.
Yeah.
It's definitely not important to the zero DTs. And also, you made me nervous. Well, I realized I lose money in the SPX zero DT over there.
You're locked in here.
Okay, next slide. So a little bit more in-depth analysis compared to this January versus all the Januaries in the past 10 years, and compared to all the months in the past 10 years. We definitely see this January was a relatively quiet market.
Yeah.
So even though we've experienced kind of a large reversal, but over the long term, this is a relatively a small move. Yeah.
Relatively speaking, very small. Yes.
We look at the realized volatility, intraday range, VIX, and everything is much smaller than the long-term average. Yeah. So it's normal January, quieter. And so how does that impact our zero DT performance? So let's go to our classic 20 delta, $20 watt iron condor, manage a 25% profit target and with no stop loss. And this is what happened last week. Every single day we're
profitable.
Yeah, profitable.
But obviously and this shows it too. You have some pain in between this time frame. Like it's
exactly, yeah.
It has had some bounce backs, and a lot of this has been like kind of that upside bounce back where we sell off 70 handles.
Yes.
And by the end of the day, you're violently unchanged down 20, and this trade has been perfect. I mean, but there's been some P&L volatility here, but this is incredible.
Yeah, so pretty much I looked through all different kind of strategies. Most of the painful days are concentrating in these 3 or 4 days, especially the last, except the very last day, the 27th, 29th, we had a pretty painful day. These 3 days, we have a very strong, like one direction move to the upside. Mm-hmm. Eventually, they actually reverse back a little bit inside the trading range. But you can see that takes much longer for you to take the profits off, mostly after noon, right?
Yeah.
But for majority of the trading days, 17 days, you're able to get it off before 11. So within 2.5 hours maximum for majority of the trades, which is pretty good.
Yeah, for sure. Very good.
And also the average P&L is 166 for just $20 wide iron condor, 25%. This is amazing. Compared to the long-term average, we only have less than $30 on average, including every days. So
wow.
This is great.
As good as it gets. So I think a lot of people would have thought last week would be a bad time.
I would
DT because of the bigger moves intraday, but they ended. Most days we ended basically flat. So that's
right.
Really what
just got to go to the bar.
Yeah,
I mean, just got to go to the bar is what it comes down to.
Mini's up 38 now. 703. Volatility at 1816. Like we might get a 17 handle and
volatility really pegged it.
Just incredible.
Yep.
But to achieve this, you have to manage these mechanical at 25%. Mm-hmm. Yeah.
Yes.
You don't wait or you don't go to the other place waiting for 50%. But I'll show you 50% results later in the slides.
Cool.
So next one. So this is some other metrics. We have the January 2026 compared to historical average with the win rate, with the average P&L per trade, and also average premium at the order entry. We can see the January actually collected almost the same average credit as the long-term average, so nothing special in terms of implied volatility or the premium at the order entry, but we have a really good success rate. We have very good duration. We have higher efficiency. dollar amount in every hour, everything beats the historical average.
Yeah.
So just an amazing month across all metrics.
Amazing.
Good one.
Yeah.
Good slide.
Next one. So this is something interesting and highlights from this January. The first one is because we have 100% success rate, the accumulative P&L for that month was almost $31.55. That's 700% of the average month performance in all data.
So it really overperformed, and it kind of goes to very hard to pick and choose, when to put this on and when to take it off. If you're going to do it, you almost have to stay mechanical almost
just keep doing it every day and try to control risk by managing
a little bit wider, keeping your size the same. Just because it's working, don't ramp up the size.
And this also, with the VIX metrics, you had two-sided vol.
You did.
Like you had pops and vol, it contracted. You had pops and vol, it contracted. Like you had basically the split here. And I know we only have one high above 18, but you can see that there was two-sided changes in volatility.
Of course,
where it wasn't just, low vol grind the whole time.
Yep.
Yeah, so this is actually second best month in all the data we have, and the best one is actually last November, which achieved like $184 per day on average, slightly better than this one, but January was still very strong. So the second point I want to show is the VIX, the implied volatility, and also the realized volatility, historical volatility, is actually in the medium or kind of elevated range, but not crazy. And we don't see like a quick and a crazy VIX pop in majority of the trading days. This is actually kind of perfect world for selling premium, not only 0DT, but also the long-term 45 days too. So in this type of environment, now we see the positive correlation between the VIX and realized P&Ls perfectly. It was the higher VIX, the higher P&L, lower VIX for lower P&L. So one of the worst days, actually, we only have 1 day VIX jump above 18. The market was down like 2.05%. But that day, actually, not only we make the most of P&L, and also that trade is actually coming in within an hour. One of the fastest one we can collect.
Oh.
Which goes to just how fast volatility has been moving.
Yeah, I guess so. I mean, I wouldn't have thought about it like I wouldn't have known that thinking back, but you're right. It's because of the way volatility has expanded and contracted overnight. I mean, not even during the trading day, overnight itself. I mean, you just look at volatility last night, got up to, let's round, up to 21, a number that we haven't seen in
for a month, right?
In months.
Last month, the highest one was 20.
Right. And we did it overnight. And then to open, with volatility at 19 and then go down by another $1 or so, it's just unbelievable.
Yeah. So next one we want to compare. We want to compare different profit targets. So this is actually a perfect slide. We can compare different profit targets. If we want to be greedier or we want to be more conservative. So 25% is kind of more conservative. We'll take it fast. We want to sacrifice some of the P&L before lower risk toward the end of the expiration cycle. So you can see we have the average P&L, we have the win rate average, holding duration, we have what is the other one? And the largest loss. We can see pretty much managing 50% actually performed well in terms of the P&L compared to 25% in the past month in January. But in the past 2 or 3 months, we didn't see that. 25% always outperformed because we have fewer losses.
And you can see it here with your biggest loss. That's the biggest drawdown for managing at 50%. You're going to take a little bit more profits, but your losses, you're going to have these tail type losses, which is
right. So this is why it's a good debate, is because you probably can make more money by choosing more aggressive strategies, but eventually the volatility can hurt you.
Yeah, sure.
Yeah. So this is how you're going to control the volatility toward in the later half of the 0DT trading.
Great slide.
Yeah.
Really good work.
And last one is a lot of people curious about the trading puts or rarely naked put, but put spread. So I compare 4 more standard put spread with the 20 delta and 30 delta, $20 wide or 30 delta wide. the $30 wide. So we have 4 different combinations. So we can see, yes, from P&L wise, some of the strategy can beat Iron Condor, but still Iron Condor managing 25% without stop loss is still one of the most stable strategy with lower volatility. And if you can look at long-term performance for 0 DT, you know the Iron Condor are actually good at the premium because you sell both sides, so you can collect more premium, and you are good at return on capital because your buying power is slightly lower than most of the put spread, and you have higher premium. So the return on capital is great, but put spread excels at the market rallies.
Yeah.
Like today.
Yeah.
And we have 3 years of data, and it's been a very upside skewed market.
Yeah,
it's been.
Exactly. Just like today, whenever you have like 10 minutes or 15 minutes market rally, you take it off. So that 25% or 50% comes in much, much faster. So if you're able to bet on the right direction, yes, the P&L efficiency is much higher on the put spread.
Yeah.
Very good. Very good. I mean, it really says business as usual here. And you can't predict what volatility is going to do, and you can't predict what the market size is going to do either. It really shows you how to manage your winners here too. Put that into consideration. You got yourself a nice strategy. Now, if it works better when volatility is higher than lower. But does it work? And you put a little bit of market awareness in there. That you put your spread on pretty much right after the market opens, which if I was doing, we would have done them too. Now we've talked about putting
like
them on.
9?
What's that?
You normally put on 9?
8:45 to 9-ish. See what the market has done in that time frame, and then see where we put it on. Right at 8:30, it's a little bit more hairy. Markets are a little bit wider, and sometimes you get a little bit of movement right then and there, and then it kind of settles down. It doesn't take the market a long time to settle in, and you can see that here today so far. So
yeah.
Anyway, gold down 40 was just unchanged. I'm fascinated with
the ick. Are you in the ick zone now?
I'm in the ick zone. I was in the ick zone the last time we got up here. Yeah. Go ahead. I'm sorry.
No, I'm done.
No.
That's it.
Good work, Kai. Really a lot of information in there on zero day. I wish I had the intestinal fortitude to put it on today with you, although I'd be crying like you. Let's take a quick 90-second break and come back. We got more Tasty Live. You're going to have a chance to manage it for a win. You watch. Even though volatility is in by 80 cents. We're going to have a quick 90-second break. We're going to come back. We got Q and Ryan coming in here. Even the S&Ps, I have to go over the market here because it's been quite a market. Even the S&Ps are up 30. Look at this overall move, 135, almost 140-point move on the even the S&Ps top to bottom. They're up 30. NASDAQ up 200. Again, doesn't tell the whole story here. A $700 move in NASDAQ top to bottom last night into today. Russell up 27, been the leader of the clubhouse. Dow up 325. It was the first one to turn green, whatever that means. Volatility up 18. Volatility 1825, down 85 cents. You would think volatility would be lower with the market up 30. You wouldn't think it'd be in by 4.5%. That's a big move of volatility, especially after trading up to 21 last night. Look at where we are on volatility.
It's over.
Into the low zone. Yes. Be careful out there. Bonds down 17 as bonds go lower. Rates typically go higher. Bitcoin down 5,000. It too has had a big move. $4,000 move top to bottom here. Ethereum that's your biggest mover by 11%, down 310. Oil down $3. Big move in oil after a big month in oil to the upside, down almost 5%. Here goes gold down 60 some odd dollars.
Just bought it at 4,700.
Better than you wanted to buy it the first time you wanted to buy it when you couldn't move it, right?
Yeah.
I mean, it's amazing how much it's moving. You really do have to put your bids and offers in where you want. Like right now, I'd be putting an offer in wherever you want to, whether it's $50 higher, $20 higher, $120 higher. I don't care where you put it in because it'll move that quick if you get the move that you want there. Gold down $63, not telling you the whole story, about $250 off of its lows from last night. Silver, which has been the strongest metal of the group, up to 88, down to 71, trading 77 right now. Net gas is down almost 20%. Look at the moves here in net gas. Again, I don't think too many people trade net gas, but big moves there. We're going to take a quick 90-second break. We're going to come back We got more from the Tasty Live trade desk with Q, and we got Ryan. He's got some explaining to do on crypto. We'll be back.
Act like he controls it.
Of course he controls it. He's the closest person to controlling it that I have here that I can bitch at. We'll be back in 90 seconds. This is a Tasty Live. Good job, Kai. Great job on the 0 days.
Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? What? Uh-oh, watch yourself. We don't want to get hit by a car. No. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's 1 standard deviation plus 1. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and, of course, the one and only Ryan Grace. It is Tasty Crypto Monday, and the market's rallying. Bitcoin's down a bit. Lots to talk about ahead of some earnings, more earnings this week. But how you guys doing? How's the weekend?
It's cool. We were talking about it in private show. I don't really remember much, so I guess that's good. Actually, the only thing, how could I forget? I was in Madison this weekend, but it was like a day. I went to hang out with my kid. We had a steak dinner. We went to, he works, for the basketball team, so I went to a game for free, which is nice.
Awesome.
That's the highlight. And the Scorsese documentary on Apple. Highlight. Got to see it. You got to check it out if you haven't seen it.
I've been watching the the new Game of Thrones spinoff, Night of the Seven Kingdoms. It's pretty good. It's pretty fun.
I've got a 5-month-old. I haven't watched any TV.
Fair. Yeah, we were just talking about how everything's a blur. It's all a blur.
What's nice about that, though, is I like to be able to just binge, and so you get 3, 4, 5 episodes maybe in a row when you haven't seen anything for months on end. So I've got a lot to catch up on.
There you go.
True that. Today's Groundhog Day. Did he see a shadow today? I didn't even
He better, because I'm done with this shit.
Well, as one person in the media said recently, of course he's going to see a shadow because they have like all this media out there and they got lights and all that now.
Yeah.
He probably does. Groundhog Day is, there's a marathon on today. I love that movie. I swear to God. I would do most of the stuff that he did in that movie for sure. I mean, why not?
It appears he saw his shadow.
I knew it. Yeah, see.
Darn.
As if we weren't going to get 6 more weeks of winter here anyway.
Yeah. Speaking of basketball, I don't know if you've seen this, but as you know, Sportsbook know everything. They know everything. They got all the info. They got all the insider info. As of today, the betting odds for Giannis to come to Chicago went from plus 4,000 to plus 400. Now it's sitting at plus 225.
For real.
He's in Chicago right now at a church, and there are...
At a church?
Markets are moving. Yeah, he was just like at a church, some Orthodox church in Chicago. I saw a video on Twitter.
A Greek Orthodox church?
Yeah, yes.
What?
So yeah, the markets are aggressively moving in our favor for the Bulls to get Giannis.
I didn't think that they would. I still don't believe it until it happens that they're going to do in division. I mean, that's.
But you know what's interesting? The Bulls haven't done anything for 10 years when it comes to trading. So this would make up for it if we somehow land Giannis.
Bro.
It'd be crazy.
I'm going to a game. I haven't been to a game in probably a year and a half. I'm going to a game for sure. He comes here.
Oh,
I got to go to a couple games.
Yeah.
No doubt.
Get your tickets now because they're gonna 4x.
Oh man, come on, hey Giannis, if you listening, man, come on, man. I mean, everything we're just getting started here, okay? Blackhawks, Bedard. I mean, obviously the Bears. Come on, man, come on.
It'll be amazing. E-minis up 45, Nasdaq up 245, down the Russell up about 1% as well. Bitcoin down almost 6%, ETH down 11%, big move there. Lots to talk about in that space. Crude oil down 5%, natty gas down 20%.
Smoked.
What is happening here?
I'm glad I got out of shit. So glad.
Yeah.
So glad.
I mean, that thing is just insane. It's like all the narrative in the world couldn't move it in the right direction. It's crazy.
Yeah.
Silver, flat. It's done. Story's done. But huge liquidation event. Not yesterday, but Friday. Huge sell-off from 120 down to 75. Just absolutely insane movement. But I mean, you shouldn't be surprised to see at least a pullback like this. I mean, this pullback was massive, but when you have this product just ripping to new highs every single day, at some point you're going to see a reversal of that in a pretty substantial way. So
no doubt. I mean, did I expect 30% in one day? No. Did I expect maybe 25% over a couple of days? Yeah. I mean, actually, I did. The one-day event, though, was crazy. I mean, absolutely wild.
Yeah. And it was crazy because I've had this for 41 days. I've had this 65-55 put diagonal spread. And it was basically worthless. And then into that sell-off, it got back all of its value. Still sitting on a loser right now. But if we get another sell-off here, it'll be a profitable trade somehow. We were joking about it. It was like literally 60 points out of the money at one point.
On Thursday when we were at sea, I'm pretty sure we were talking about then. Yeah.
Yep. But yeah, crazy moves all across the board. Visa recovering. So our little double calendar spread actually is working out nicely. I'm probably just going to close these options considering this move is pretty substantial here.
Yep.
But yeah.
It's nice when that happens.
Yeah. All right. Crypto markets, they're moving. They're flying around. Should we get into a little overview and go from there?
Yeah, a lot of talk over the weekend, too. People were talking about it, touching the levels that it did. So it's kind of interesting time, right?
Yeah, quite the flush on Saturday and Sunday. Really started on Saturday. We're used to this materializing on Sunday. But a lot of volatility. The vol continues. The beatings continue. Sentiment is pretty poor here. But I think you've got the setup for possibly a bounce within the bearish trend. If you're looking to play something short term, we can talk through that. But let's jump into the dashboards. We'll take a look at blood in the streets, as they say. Red on the screen.
Yeah.
Red on the screen. So a couple things to call out here, guys. I mean, this has been the trend for the last couple of weeks. Performance has been poor, and certainly crypto has underperformed just anywhere else in the market that you could have been, and maybe that does weigh on it as a result in the short term. But what I do want to call out here is that the way that we track the monthly price momentum signals, I kind of use these just to stay on the right side of the trend and try to time when things kind of shift structurally. It's early, but the monthly signal here has gone from bullish to neutral. When we look at Bitcoin, ETH, Solana, it's been pretty bearish for Dogecoin, Litecoin as well. But I pay attention to this. You could possibly have, months ahead of us where performance is very, very poor. You're in a bear market. If we see that monthly breakdown, you get that bearish price signal, that sell signal there, I kind of just tend to get out of the way. These things can overextend on both the upside and the downside. And so if you do see that, I wouldn't sit here and think that 75,000 is the low or 74, wherever we trade it into. I think short term, you might have an opportunity here, but certainly keeping an eye on what we're seeing here from a technical perspective, a further breakdown. And you kind of look at this and you say, all right, maybe I come back in 6 to 12 months. This maybe plays out like it has historically from a cycle perspective. That's what you kind of have to wait for. If you took a lot off north of 100,000, then sure, you might dollar cost average in. There might be some opportunities. But if you're still just hanging on to a position, you have a long-term time horizon, I'm not necessarily, if these signals shift, I'm not going to look to immediately throw money at it. You could have more downside. But yeah, I don't know what else to say about this. down 30% or so here over the last 3 months. Very bearish trend. Volatility has popped a little bit. If we jump to the next slide here, we've got updated expected moves as a result of that. So Bitcoin looking for a $5,000 move, ETH $200, Sol $10. That Bitcoin range is about 73.5, which is right around where we traded into, 83.5 or so on the upside. Trend short term doesn't change from the indicators that I use until you get over 88,000 in Bitcoin. So nowhere near that right now. But I will remind everybody that this was 97,000 on January 14th. So we know it's extremely volatile. It's a 6-figure asset. It's got a 50 realized vol most of the time. So that's going to give you a $50,000 to $150,000 trading range on an annualized basis if we look at that one standard deviation move. So not trading in any way that's out of the ordinary. It just sucks for anybody that's long, as this has been slammed down day in, day out here. But maybe finding a short-term bottom around 74, trading a little bit closer to 79 right now. We jump to the next slide.
Just real quick. Week? I feel like last week was. Correct me if I'm wrong. I thought you said last week. We rarely see like a expected move in Bitcoin of over with 5K, right?
Last week we had dipped below 5K, so that it was that volatility was really low.
So that's really what I was really asking. Is week over week we have seen a little bit of increase in volatility.
Yeah, absolutely. So vol for IV for Bitcoin came up from about 40% to 47%. So decent percentage move there. Realized vol was in the 30s back into the mid 40s. ETH has seen the biggest move here. Implied vol back at 65, but realized vol is above it at 71%. So whipping around quite a bit in there. That said, it's still not as volatile as it has been, but you kind of wonder over time, do we ever get back to those 80, 90, plus 100 vol levels in Bitcoin? I think maybe, but it would have to be, I think, on more of like a FOMO move to the upside. If, again, you see what you've seen in silver or you've seen in crypto historically, I think that happens to the upside. But this is pretty decent vol, obviously, given the move that we've had. But if we jump to the next slide here, I think this is telling the story. If you are in, I think we got to go back one more to our relative performance. But if you're, you're looking to add here, you're going to have some trade opportunities, of course. But I think from a dollar cost average perspective, Bitcoin market cap dominance, has continued to trend higher here. Everything else is breaking down against it. So for now, I don't see any reason to try to time some bounce in other areas of the market. If you're going to look at this from the long-term investment perspective, I think you kind of stick with Bitcoin for now. Everything else is just simply much more volatile until that trend changes. So that's a look at the relative performance. Nothing else to really hone in there. If we go to our cross-asset correlations on the next slide, you can see that there is, of course, a positive correlation with equities and with crypto, but it's come down a little bit here. The dollar has a little bit of a stronger correlation short term with crypto, which isn't something we always see, but nothing that stands out to me here either, guys. I think this is just, again, something where you don't have a ton of liquidity, certainly on the weekends. We saw some selling pressure coming out of Binance. You've had a bearish trend. The path of least resistance is lower. We probably were always going to eventually take a look at those April tariff lows around 75. We did. We got a bounce. We traded into that a couple times over the weekend. So let's see if we can trade back into the 80s. If you're able to buy low 70s, you probably want to be a little bit more active in here. I don't think it's something where you're stepping in short term. You're looking for a V bottom if you're trading it. If you're holding this long term, I still believe, and I think there's a lot of reasons to position this way. I think you still see new all-time highs at some point in the future. But you're certainly at that point where you could see new lows on a cycle basis here before we get there. That said, what we are observing is pretty normal price action, even though it doesn't feel good at times. We've come back down to the prior cycle high where we traded off of or broke out of, ultimately up to 126. Typically, you retest those levels. That's about 74, 75 from the last time. And then 75 is your local low, I suppose. Other than that, I mean, anywhere else you want to go? I've got macro momentum on the next slide. Still looks pretty bullish out there. You've got a lot of volatility in metals, but my read here week over week, what we've talked about, the environment that we're in, is that nothing has changed. I want to buy dips in equities. Certainly you want to be aware of the VIX. If it really breaks out, you're going to have a harder time. But I think, again, encouraging that these rallies or these spikes in vol have been met with some selling pressure. So VIX coming back down at the time that I put this together. You know, when I look at what else is going on, you still have a steepening of the yield curve. The trend short term, regardless of whatever the narrative is around pending Fed Chair Kevin Warsh. I mean, 2-year yields, the trend continues to be lower. The trend in the dollar has been bearish. You've got a little bit of a bounce inside of that, up about 2% or so off of those lows, but it's been bearish. Volatility, of course, in precious metals, but those trends and that momentum hasn't really broken down. It's just, as you guys mentioned earlier, this was up, well over 100%. When you look at silver, silver's still up about 60, 70% in the last 3 months. So quite the correction, but I don't think anything's changed. Still in an environment where you're seeing a lot of signs of economic growth, and inflation isn't necessarily ripping higher, and I think that's a positive macro environment.
Yeah, I think, like you mentioned, we've had some equity market scares, but it hasn't really been paired with a big substantial volatility increase or anything that was sustained. Seeing a big VIX move to the downside today, back to recent lows. And then when you look at VIX futures, there's a point of contango between the G, the H, the J contract, 1790, 1890, 1990, and then still contango in the K and the M contracts, although it flattens out a bit. But this is what I look at to just put context around the sell-offs that have happened, the recoveries that have happened, and then just like you said, there's nothing that says we should be scared that the markets aren't going to keep creeping higher. At least right now, the vol curve can change pretty quickly, but as it stands, buying the dips has worked out pretty well.
Yeah.
Looking at, so you mentioned 74K. I think this chart is really interesting. So the continuous Bitcoin futures chart, if you throw in a $ ahead of any futures contract, you can see the continuous and chart it however you'd like. But I mean, this thing bounced almost exactly in early April of last year, almost exactly where we are now. And this morning as well, bounced off of that 75K-ish mark back up to 79. Is this what you're looking at when you're...
Yeah, and I think given that the futures are obviously closed on Saturday and Sunday, if you look at the spot market, you'll see that we've not only bounced off of those levels, but you traded into it and found buyers each time over the last few days. Doesn't mean that you can't slice through those levels again, but I think it gives you possibly an entry point here, right? And so you can set a stop however low below those levels in the event that we do break down further here. It's possible you get to 60. I think the 200-week moving average right now is 58, 59. So that's probably a number that people keep in mind in terms of the $60,000 price level. But yeah, if you're looking for a trade and you're saying, okay, could this bounce back up into the low 80s off of here short term? You want to use the futures and deploy some leverage. That's kind of how I would think about it off of these levels. And then to that point around, where we found buyers before, this was also the top of the last cycle, which historically, when you look at these Bitcoin cycles, typically, you retest and you come back down there to that prior high, and that becomes the new support. So we'll see. But when you look at the macro backdrop, liquidity profile for markets, for risk assets, generally seems to be pretty positive. I think there was, the headline catalyst of Kevin Warsh as the next Fed president, and then all of a sudden he's the most hawkish Fed president that we've ever had, and a lot of this just is based on commentary from a long time ago and doesn't necessarily mean that he's going to come in and reverse what's happening with the balance sheet or isn't going to cut rates. I think if Trump is selecting him, you've got to probably assume he's going to do whatever Trump wants or what the administration more so wants. And we know that the U.S. has to roll a massive amount of its outstanding debt this year. So presumably they're going to try to manage that process, keep vol low, manage rates into that. I just don't think it's this risk-off scare because you've got the announcement of a pending Fed chair coming in a few more months.
Fair.
Yeah.
And
it's all noise.
Yeah.
Yeah.
I mean, it feels like it's sometimes it feels like the noise is taking hold in a way that doesn't really make a lot of sense. And I think that's maybe what we're seeing in a lot of these markets. ETH though, same story, like almost exactly. Just drew a line from where we bounced today in the futures market, and then you trace it back to
June.
May, June, July, like this whole area, similar levels here. Are you seeing a similar thing in ETH as you are in Bitcoin, especially over the weekend?
Yeah, I think really in most of the tokens that you look at, very similar price action here, where traded into those recent lows a couple of times over the weekend and have since bounced. We'll see if it has legs or not. But yeah, same thing with ETH, a ways off of those levels right now, but 2100 would be kind of where I would look to if we get back into that. Maybe you're buying. You could also go into ETH, and given the increase in volatility now, you can sell puts. So I talked about this on the show this morning, but if you go into March, I was looking at the 16 put. We're a little bit higher in the ETH price right now. So yeah, that's come in a bit. At probably 8:30, 9 o'clock this morning, you could sell the 16 for about $1. So maybe you just look at the 17 here. Pretty high per strike volatility. And you look at this as a way to maybe enter into a position. So at about 16, if you get $1 for that, your break even is going to be about $15 per share. $15 per share is roughly a $2,100 ETH equivalent. And so if you like it at that level, this is a way where maybe you just get a bounce and you collect most of the premium and you move on. If you do want to hold the position, take assignment of the shares in the event that it's in the money, you can sell calls against it. So you get a little bit of flexibility there, but that's one trade idea. But yeah, same thing, like short term, just after a very illiquid flush, leverage gets taken out again over the weekend, you might have a setup here for a bounce. Typically that's what you see, but then you could get a continuation of course, of the downtrend.
Yeah, I like it. I'm going to do kind of a synthetic covered call here. So I sold the 20 short put, which is in the money, but reflective of the extrinsic value on the opposite side. So selling some intrinsic value, but still picking up about $1 of extrinsic value with ETH at 18, selling the 20, and it's trading for $3. So more of an aggressive stance, but it's such a small product. Like I would rather be aggressive into such a huge move like this. Down 10%, almost 11% today. And like we said before, like it has bounced from here historically. It did drop a little bit below that in early June, but got gobbled up immediately and then went on this rip higher. So totally comfortable with the risk, just one contract. And if we get a bounce, you're going to be able to keep a lot of that premium.
Yeah, you get a decent return on capital here too, as you mentioned, given the lower price now of the ETF, the high volatility. You collect a credit, you get $1 for this, and you have maybe a $1,500 buying power requirement. Then you look at a 9-10% or so return on capital in some situations. So I like the setup. I also like when you look around, like I think DeFi is real. We continue to see when we look at on-chain activity with Ethereum specifically, on-chain activity is absolutely exploding. You have pending regulations that might usher in further adoption. If you look at job postings for any major financial institution, the biggest of the biggest, left and right, crypto departments being built out, blockchain departments being built out. So I think it's all coming. It's just short term here. Price is definitely counter to whatever that bullish narrative is on a longer timescale.
Yeah. And I think, at the very least, like you said, the crypto departments with a lot of these huge companies, I would be shocked if 2, 3, 4 years from now, like I wasn't able to use stablecoin anywhere I go. Like
right.
In my mind, that's a good starting point for everything, at least from a public adoption standpoint.
And on the DeFi side too, I'm looking at Uniswap sub 4, can go lower, of course, but that's a very interesting price to me. Aave, another one, real use cases, real utility, real revenues. That's trading 130 right now. Again, can continue to go lower, but that's in the face of growing adoption, growing revenue in some cases, and I think a pretty decent outlook on a forward basis if you get regulations that just allow people to build more either through these protocols or on chain here. It's an interesting setup.
Guess what just happened? They delayed the jobs report because of the government shutdown.
Yeah, and throw that into the mix too. Right? You get out of all of this, and I think when we went through the first or more recent shutdown that was averted was just kicking the can for a moment. Didn't really matter because you knew at the end of January you're going to have the same situation. So maybe we finally resolve all of this, and it'll be a little bit clearer moving forward.
Yeah, maybe.
That's wild.
Yeah.
Can't believe it.
Yeah.
I've got the Tasty Crypto newsletter pinned at the top of the YouTube chat. I think we have a QR code as well on this slide.
Yeah, so we've moved some things around. We're on Substack now, which gives us a lot more flexibility. We're pumping out a bit more content there, and we're covering more than just crypto. Crypto's a good chunk of it. Let's say 50+%, 60%. But we're talking about all the other things that we're trading at the same time and not trying to confine ourselves to just crypto assets. So we've been talking about defense tech, of course, AI, and weaving that narrative across crypto markets and elsewhere, where you look at a lot of these Bitcoin miners or crypto miners that are pivoting towards AI, data center services, which we've talked about. But go anywhere, trade anything at Tasty Crypto, and that's a lot of what we're writing about on the Substack.
I love it.
Yeah.
If you can throw up the slides where that QR code is, we can pop that in there. You can scan it.
Nice little tagline too. Go anywhere, trade anything.
Yeah. Have you seen any more movement on data centers kind of shifting towards from crypto to the AI data housing, data servicing?
Yeah, that's still, that's, I think, a theme that's going to continue to evolve here, still ongoing. The names that I like there, one in particular is Iren, I-R-E-N, Cypher, TerraWolf. And these are a handful of names that have a lot of vol. There's definitely still that positive correlation to the price of Bitcoin. So you can see that they've pulled back here. I'm sure they're pulling back here today. But I like selling puts in those at prices that are far out of the money. I haven't taken assignment of any shares yet. They've continued to kind of chop upwards, but that's a trade that I want to be in. I want to be in AI generally. If my outlook from an investment perspective is, multiple years here, I don't think that the CapEx is over. I don't think it's a bubble. Maybe you get there maybe at some point, but I still think you have, a little bit in front of you there. And then all of the energy that's associated with that trade, the infrastructure, in some cases, you look at the nuclear side of things, you look at natural gas, but everything that goes into powering this movement. And then I think you can throw in, the electrification of everything too, which has been an ongoing theme. Those are all areas that I think for now will continue to work. Certainly will work in this macro environment, which is pretty growth positive.
And both of these, TerraWolf, $13 stock, and 100% implied volatility.
There you go.
So, very volatile, but lots of premium relative to notional risk. And then same thing with Iren. This one's even higher, 160% IV in March. They actually have earnings this week. Do you make anything of an earnings announcement in a company like this, or is it more just like future plan?
Yeah, you want positive news, right? I think the other thing to be aware of, and everyone, of course, should do their own research anytime they're looking at investments, but a lot of these companies are very indebted. They have a lot of leverage. They have a lot of debt. They've taken on a lot of debt in order to build out this infrastructure. On the other side of that, they have contractual agreements with a lot of the hyperscalers. So there is revenue there, and it's all predicated on increased demand. So there's, of course, risk, but that's the the other side of the coin is how much debt they have, and then at times how they've had to dilute shareholders in order to service some of that debt. But I think they're in a slightly better position than they have been. Price of crypto goes up. That helps a little bit, I think, short term, but that is certainly the risk here and something to consider. So yeah, you want positive news out of those earnings reports, and maybe even some surprise announcements too. I think that's what would help, is if you get some, by the way, we have an agreement or contract in place, or here's an announcement between us and another firm. So we'll see.
I like it. And yeah, these out of the money puts, plenty of premium here. Stocks at 53, you can go all the way down to like 35 and sell it for $2. which brings your break even down to 33 or anywhere in this range. Like lots of premium down here. And if you want to be a buyer down here anyways, that's the beauty of a short put. As long as you can withstand that volatility, just size it correctly to where you don't, get stopped out because you're have too large of a position in there. So, yeah, I like it.
Yeah, I am short the 30 put in March, and I'm short the 55 put, which is a little bit in the money right now for Feb. I'll roll that, but like it at this, right here for now, unless that trend continues to break down. But this is kind of where you might expect it to pull back into, about that $50 level.
Yeah, and this premium's so high that you have that nice ability to roll for like just a short put, rolling from Feb to March, you're picking up another $3.
Yeah, I mean, it's nice to be able to, of course, again, there's risk, but you kind of like seeing that you can sell the at the money put or just out of the money for 10% or more of the underlying stock price.
It's crazy.
That's wild.
But yeah, love it. I put the link in the YouTube chat. If you want to click on that, you can get to the Substack. But yeah, tastycrypto.com, all that information is there as well. Thank you, Ryan.
Thank you guys thanks for pumping the email sign up.
Yeah, always. Let's get to the YouTube chat. See if we have any crypto questions here. Bearish on MicroStrategy. I mean, yeah, that thing's got to be.
Yeah, any of these. So we just actually wrote about digital asset treasury companies over the weekend. If anyone's interested in learning a little bit more about how these things work, and then we put out our view on one in particular, which is BitMine, BMNR, which is going to be an ETH proxy, is probably the way to think about it. But yeah, these are not going to work in this environment. They kind of only work when crypto is screaming higher.
Yeah.
Didn't I see these guys, MicroStrategies, bought more?
They might have. Yeah, I think last week I saw, or maybe they're buying again this week.
To their break even over the weekend or something like that.
I think we're right near it. It might be 76 or so, or right around there. Yeah.
I know you have the article, and I don't want to give away too much, but I mean, is there ever a situation where they would have to capitulate, right? Like, say it gets down to 67, or are we just going to see that they're buying more?
I think they're just going to be buying more. There's likely a situation in which they can't leverage the balance sheet to be able to acquire more crypto. So a lot of times what you see this accretive dilution where people, or these companies, I should say, are issuing debt or issuing equity for the purpose of going out and buying more crypto. And then in return, what that does is that it increases the amount of crypto per share that you have as a shareholder, even though there's been your interest in the company that's been diluted. And so you see that on the way up. I think on the way down, when these stock prices trade at a discount to the net asset value, so at a discount basically to the crypto that they hold, they're not going to be able to leverage the balance sheet for the purpose of buying more crypto. But I think you also have to wonder how much of a discount can really open up with some of these vehicles, given if you get to a 20% discount to net asset value, someone can come in and acquire the company, acquire the crypto, or acquire the fund, the vehicle in this case, at quite a discount. Obviously, the price of crypto can continue to go lower, but I think there is some floor to it. In terms of MicroStrategy specifically, I know there was a little bit of concern over whether or not they'd be able to pay the dividend that they had announced without selling shares, and then they did raise capital for the purpose of doing that a little while ago. But for the most part, the way that these are structured, unless they have an obligation that they have to meet, there wouldn't be any reason or requirement for them to sell the underlying assets. They would be deep underwater, like Tom Lee and BitMine is currently, or MicroStrategy could be. But as far as I know, I don't see a situation in which you have some sort of death spiral or massive unwind unless they were to have some sort of obligation. But it's just a vehicle that buys crypto and then in addition to holding it, typically does something with it to generate a yield versus the ETF that just holds crypto.
Yeah, and like you mentioned, MicroStrategy, the more they acquire, the more upside leverage you'll see in the price of this thing if and when Bitcoin, does recover here, especially if it's a quick recovery. Like if we go from 80K to 100, 110, 120, like MicroStrategy is going to rip much higher.
Yeah,
like I would not be surprised to see the stock price double if that happened.
I think when Bitcoin was up 100, 150% or so in 2024, MicroStrategy was up in excess of 300%.
Yeah.
So it works really well to the upside, but these are just not things that you're looking to pour money into in these bear markets.
What else we got? Scanning. Some people looking at ETH. Yeah, ETH I like that trade, especially into this recent price extreme. And it's an affordable product, so you can do one contract, a couple contracts, whatever floats your boat.
Yeah, we are across the board, very short term, of course, but we are very, very oversold in a lot of this stuff. Yeah. That doesn't mean that you don't bounce and go lower, but short term you would expect there is, and I think you're seeing it to some extent. That bounce is kind of underway off of those lows, but very oversold market right now.
Yeah, you can kind of feel it too. Like when you would expect Bitcoin to be rallying with the NASDAQ or with the E-minis when volatility is getting crushed. Or even when the dollar was weakening, Bitcoin was selling off too. It's like it feels decoupled from everything right now. But that won't last forever. Are you trading precious metals at all?
Yeah, guys. I had so much fun on Friday. You just don't see these sorts of things in the market, of course, all that often. But I've been long gold and just have been fortunate to kind of just take some off at the top of the range. It's been buying them back here and just trying to play it patiently, work orders that are kind of a ways away. But going into what would have been, I'm assuming, like the NYMEX close on Friday when you just got that final flush in everything, and that's where you did get the 35% down in silver. Platinum was getting crushed, of course. Everything was down. But the 0DTE SLV options had a buying power requirement of around $1,000. And you could sell these options that were 30 delta, 20 delta, pretty far out of the money with 2 hours to go, $5-6 go into the next week or the 3-day, whatever expires today. And I was selling stuff out of the money for $7. The market's freaking out. And of course, I was just fortunate not to have any position on it at the time. So I caught it and then I'm at my computer for the next hour just trading. But yeah, it was a lot of fun. Did you guys get to participate in that at all?
Yeah, we've been playing this. We actually both have strangles on, I believe. But I've been watching silver. I've been doing defined risk. The day before the liquidation is when I put on the strangle, which is funny to me, but it doesn't really matter.
Yeah.
It doesn't matter either way. Looking at where we're at, so I've got a 87,150 strangle in March, and that was after I rolled down. I initially sold the highest strike available is 210, because what I was saying is at that point in time, when you have these huge moves to the upside, these very abnormal moves to the upside with volatility expansion, you'll see the highest strike available is kind of the same price as all these others. Like the 180, the 190, the 200, and 210, we're all very similar in price. So when that's happening, and you had open interest, the highest at this highest strike. So it's liquid and it's juiced up in premium. So I sold the 210. Very next day, I captured like 70% value out of it, rolled it down to the 150. Now the 150 is basically worthless, but in two rolls, I've collected $1,000 on this strangle, and we're down at 77 in terms of break even. It's down right now, but I'm fine with this position. Like I want to be in this position, especially as long as implied volatility stays bid. But we are seeing a pretty big vol crush into this sell-off. So you have to recognize there are periods of time where a market goes down and volatility expands. There's also periods of time where a market goes up and volatility crushes. But there are times where moves happen so quickly and so aggressively to the upside that you have this huge volatility expansion And then on the downside, when it reverses, you get the vol crush because it's like, okay, this is abnormal. And now we're coming back down to normal levels, and volatility crushes happen as well. We saw it in AMC, we saw it in GME into those squeezes. You're seeing a similar behavior in volatility in SLV. It's just crazy because SLV is SLV. It's not an AMC like GME.
I know, right?
You know, it's crazy.
I sold, like Mikey, I sold Strangle. I had the 75 150. And then since then, I've still have the 75 put that I'm short in March, and I've just been rolling down the calls. So I rolled down those calls to the 120 last week, and then I rolled them down to the 100 today. So I have the 75 100 Strangle in March. I also couldn't resist. I think I sold the Strangle Thursday maybe in Feb, and I sold the 70 at the time. I think I sold the 70 maybe 110. Can't remember if that was Thursday or Friday. It might have been Friday actually. And let's see, when did I do it? Come on, tell me. Yeah, I did. Sold the 70 110 on Friday, and still just holding that. And I actually rolled the call down today, and so now I'm short the 70 85 in Feb. And these things jack, man. Like, especially now that it had the downside move, I actually feel better. I mean, when it was moving up, it's like, oh my God, like what's gonna happen? But
now you have a range.
Yeah.
Yep.
Yeah.
Yeah, plenty of premium there. And then the nice thing about the trade that I've got here is the Strangle that I have, the 87 150. A lot of that downside risk is offset by this put diagonal spread that I have on in Feb. So if we do continue to sell off, the short put will take on some heat. Yes, I'll keep rolling the call down as it loses value, but this put diagonal spread will gain some value, and I can sell out of that to offset some of this risk in the 87 150. So we'll see what happens, but crazy moves there.
And then on Friday when we were on the show, I think I was talking about doing a crab in GLD, and I ended up getting that on. So I'm long the March 460, short 2 of the Feb 475s, and long 1 of the Feb 490s. Put that on for $550. So $15 wide. So if we do get some bounce back, I don't know. I mean, honestly, it's tough to say right now. I think we'll have to kind of wait to see what's going to happen on the other side of tomorrow. I know the margins are supposed to increase tomorrow or today after the close or whatever, effective tomorrow. So we'll see if that has some kind of effect on the move here. We'll see what happens. I mean, be honest with you, I'd like to see somewhat of a bounce in both of them here, right? But I don't know. We'll see.
Yeah, these wide crab trades set up nicely for relatively low debit risk for the width of how much you can make if you get the timing right and if you get that rally. So lots to do there for sure. And it's crazy. Like, we're into February now, and at the end of December, I was like, this is like the market's not moving, but metals are, and they now just finally came down. It was like a full month period of just crazy whippiness.
I really am a little surprised that it took that long. I mean, that was, I mean, and again, what we saw all of January is just absolutely crazy. Wild moves.
Indeed. Let's see. You
guys can put that on your resume, everybody. Put that on your resume.
Really?
You were trading while gold and silver did what they did in January of 2026.
Cancel crash. Yep. Sounds about right. I sell vol anytime the VIX is over 15, so I'm happy. Yeah, I mean, I say it every time, but like SVXY, when you get these vol pops, like this product is nice if you're just like buying shares, for example, because you get these big washouts because this is an inverse vol product. It goes from 56 down to 50. If you're buying at these levels, even if it drops lower, you can dollar cost average lower. And it's really only a matter of time before it recovers because volatility mean reverts. You get the vol pop, you get the crush eventually. And when that happens and we go back to contango, SVXY is a product that will just trickle up and to the right as long as we're in contango and the VIX stays in a relatively normal range. So much easier to trade post vol pop, and you get into SVXY on the long side. But yeah, always a good consideration if you're trading vol. Yeah, ETH A is wild. It is nice though that it's low price. Same with IBIT. If you're trading these two products, both of them under $50 now, but plenty of implied volatility.
I'll also throw out there the micro ether futures. I don't know what the term would be. I think they've been reconfigured, but the contract size is a lot more tradable now. Or what? It's like $1 per $10, so it's a tenth of an ETH versus whatever it was before. So
I think it's a fifth. I think.
Okay.
For every 5 points, you make $1.
Okay.
I think is what it is.
Yeah, so that's /MET.
Yeah, I just bought one today as we were sitting here talking. I'm gonna post that to the page later, but I don't know. Seems like a nice little value add. Like, why not?
Yeah, well, and it gives you the opportunity to scale in too. When you have something that is whipping around like this intraday, realized vol short term has just exploded versus whatever your 30-day IV index is. So I think you have to really look at what's happening short term, what's your average true range, what's going on day to day, and this gives you the opportunity to scale in. So you can kind of just lay those out. If you have a bid at 2,200, 2,100, and ultimately you do get filled, because you guys saw what happened overnight. Yep. If you went in, or if you went to bed last night and put a couple bids in, in gold, in the Russell, platinum, oh my gosh, you woke up feeling pretty good.
I didn't even know. I didn't even really look at you. I don't look as much. Unless there's times where I really, which I probably should have last night, knowing that there was going to still be some added movement after gold and silver, but I really didn't. I heard futures were down, like SPOOs were down like 100 or something overnight. I didn't even know. Yeah.
They just get bought up immediately. It doesn't matter.
Yeah, I've been trading the Russell a lot, and I think I got filled at 25.80 last night.
Wow. Yeah, it's crazy.
It's nuts. Yeah, these futures did have a little dippy do.
I don't know, man. It's when you start getting the bigger moves overnight, that's when things really start to get a little wild. So I don't know. It'd be interesting if that happens again tonight. Watch out.
Yeah, micro ether is 1/10 of.
It's 1/10. Oh, okay.
Yeah. So this is what, $230 in notional.
Yeah, and then intraday, if you have at Tasty, you have the 4x intraday margin on your futures, then you can stack them up at a pretty low cost of capital. It is amazing to me, though, maybe it shouldn't be, but every single time you get this volatility in crypto, it's this predictive indicator, barometer of what you're going to see in equities, at least around the open, and massive flush over the weekend. You get a lot of volatility for what it's worth on Sunday night.
Mm-hmm.
Yeah, it feels like this recovery is almost not real.
Yeah.
It feels kind of like an illusion here.
Well, I will point to the economic data that we did get. I know you mentioned that the jobs report has been postponed, but when you look at ISM, we had manufacturing this morning and well into expansionary territory. I think one of the highest levels that we've had in the last couple of years. That's a positive sign. Again, reflects where I think we are with the economy. I think reflects for sure the strength you're seeing in Russell outperformance here today. You have ISM services later this week, so we want to see a similar print. But if you start to see a couple of those prints north of 50 over the next couple of months, I think you feel a little bit better.
Yeah. You had this opening rally in the E-minis, and then right at 9 o'clock, this is when ISM came out, 9 a.m. Central. That's when you really had the continuation come into play. But yeah, we've got PMI tomorrow, jobs Thursday, unemployment Friday, and then next week you've got CPI on Wednesday, and that's pretty much it. But we'll see how this, if there's anything else that's delayed, which is just wild.
I think we also have two central bank meetings this week, right? I think there's a BOE and European Central Bank, ECB.
Okay,
I believe this week. I don't know how much they're going to change anything or move. I don't know. How much further can they get from us? Not sure.
Not too sure. Dollar's recovering though. Tasty FX, not in margin call yet. We got pretty close, though. We got pretty close.
You are, you're long the dollar?
I am.
Okay.
Yeah. I've just been layering on. Like, I've just been throwing on 5 micro lot positions in this dollar franc. I had one day where I could have closed it for a small profit, and then it just tanked. But yeah, just taking little shots here and there. We have Glenn on Wednesdays, and I basically just do whatever he's presenting.
Dollar CAD,
things that
dollar
are
franc.
moving. Yeah. But yeah, this did not look very good at all a couple days ago. But nice to see a little recovery there. Are you still trading crude oil these days?
Yeah, I was just going to say something that has certainly reversed the trend as of recently, and you've had a little bit of the geopolitical risk premium built up in there with Iran, and that's come out here today. But yeah, given the macro environment again that we're in, everything else we're seeing, crude oil was a laggard here. That's trading a lot better. So I'm looking to buy dips in crude. I was in it. I got out into this rally, trying to buy it back, 61.60. I'll use the micros in there too. Same thing, just scale in. Buy some at 62, buy some at 61, maybe trade it down into 60. But I want to be long it, into the high 60s. Just short-term trading. But yeah, that's on the radar. And then other things like XLE, XOP, those ETFs that are going to give exposure to the sector. And then also looking to buy any dip here or a little bit lower in copper has been another area that I've been trading. But as you guys will recognize, it's all the same theme. It is, the bid in industrial stocks. It's the Russell trade. It's the just expansion of what we're seeing in terms of economic growth and really capital starting to flow out of Mag 7, where it was very, very concentrated, into where there's other opportunities into the market. And I think you're seeing that reflected in earnings here with some of these small caps as well. It's not bad out there.
Yeah, plenty of opportunity, especially when you consider the sectors that have been moving and the rotations that we've seen. But yeah, copper, this initial flush out, like this move was completely reversed. And then you got the big realized volatility last week, but this thing's flying around too. Copper, silver, gold, platinum, you name it, they're all ripping around. It's been a wild environment, to be sure.
Didn't take it on the chin as bad as silver and gold and platinum. Copper didn't. But again, like you said earlier this year, it already had its reckoning. Maybe that's part of it.
Yeah, that move was wild, for sure. I closed that crude iron condor. We had an iron condor wrapping around 65 and 55. And into this sell-off today, I booked, it was like a $130 winner. I just decided to close it just because it was pretty close to the upside risk parameter, only 2 weeks left. Just taking this sell-off as a gift and getting out. But I agree with Ryan. If we see this continue, I'll probably transfer into the micros and just buy a micro contract, maybe sell something against it, maybe throw on a call ratio, something like that. But we shall see.
Yeah, I need to close mine.
Shall see. Palantir, trading question. Feb at the money put in Palantir. It's $300 underwater. Would you roll that to March before earnings or hold it? That is a great question. I mean, if you're comfortable with the risk, you're going to get a much bigger vol crush in Feb than you will in March. But March is going to offer you more premium because you have 46 days. So if you're looking for a volatile exit or just the ability to roll into March after earnings, then you could do that. Let's just say you're at 150. If you buy this back and you roll to March, you're picking up $2 and change, but you're tripling your time in the trade because the Feb cycle has almost a 76% implied volatility. March has a 63% implied volatility, so much less implied volatility exposure in March relative to Feb. Much more time extrinsic value or time value in March relative to Feb. So if you're comfortable holding the shares, I would just stay in Feb and then see what happens. You can exit if you get that rally. If not, you can roll to March after the vol crush in Feb and still pick up a similar premium here.
Earnings tonight. Will it see its own shadow?
Yeah, Feb 2nd. What else do we have today? Anything else? Palantir, PayPal tomorrow morning. That one could be interesting, considering all the credit card companies had their volatility, their heyday.
Yeah.
But yeah, this week I feel like there was a couple more.
Definitely. I think it gets busy Tuesday to Wednesday to Thursday.
Oh yeah, Google,
Amazon, AMD.
There we go. Qualcomm, Google, Amazon, AMD. Yeah. Look at this. This is only through the next 3 days. This list I've been scanning through.
I think
Insane.
last week might have been like 100 plus names in the S&P, and I think I would assume probably similar deal this week. I think.
Yeah.
These are those weeks.
You did mention Uniswap, Aave. Are there any other crypto products that you can trade on here that you're looking at?
In terms of spot crypto, those are the two that stand out to me. In terms of the theme being continued adoption of DeFi, revenue growth there among those protocols. And then what you're seeing as well is a lot of these protocols are looking to find ways to return value to token holders. And one of the ways that they're doing that is through a buy and burn. So they're taking a portion of the revenue from the protocol that's generated in form of fees, using that then to purchase tokens and then burn those tokens. This is the equivalent of a share buyback. And so it is accretive to shareholders in terms of value, or token holders in this case. And if you believe that they're going to grow revenue in the future through continued adoption, then there's going to be more revenue that's available to burn more tokens, so on and so forth. And I kind of look at this as like a 3, 4, 5 year trade. We get out to 2030, where could you possibly be? Some of the analysis that we've done through this buy and burn, and it does assume a certain multiple around the revenue growth, but in the very bullish case, you could get to a $90 token price for Uniswap. Now it's $4 today. I think more realistically, kind of multi-year just revenue growth case gets you probably low 30s. For a Uniswap price. It's a 10x from here, or close to it. Not saying that that's what's going to happen, but there are fundamental forces at play, and that's one that has this kind of dynamic. Aave, Uniswap. There's others as well, but from what you can trade here at Tasty Trade, those are a couple that stand out to me.
Yeah,
around dollar cost average in sort of thing.
Yeah, and it's not out of the realm of possibility. I mean, we've gone to recent levels there before. So love to see it. Love to see it. It is time to get on out of here. Thank you, Ryan, for that analysis.
Thank you, guys. Thanks.
Subscribe to the Substack if you're on the YouTube channel. It is pinned to the top of the YouTube chat, so check that out. You can also reach us on Twitter if you're not watching or listening on YouTube or elsewhere. So follow Tasty Crypto. Follow Ryan Fred Grace as well. That's Ryan's handle. I'm at Trader Mikey B, and Jamal is at Jamal Chandler. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Your crypto needs a wallet.
And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody? Welcome back to Risk and Reward. Happy Monday to you all. We have a slightly green Monday, opened just a little lower, and we've moved higher ever since. Crypto continues to tank. Silver seems to be down and out. That will hopefully be the last time I have to say the S word here on this show. I'm joined as always by my wonderful co-host Errol. Errol, how are we feeling? What's going on?
Feeling good. I guess we'll touch on a little bit of the metals. I think it's only right, but a little bit more volatility into the market. We got a lot of buying pressure coming in out of the gates, so a little bit different from last week, more moves to the highs. So we'll see how we pan out. I'm excited for it. I'm hoping we get a little bit more of an expansion in volatility, but beggars can't be choosers. So we'll see how even crypto holds up here. Things have been getting really volatile. I feel like crypto's been the main headlines over the weekend, at least. So
yeah, it's another we have another big earnings week this week. Kind of the second big one as we begin to round off the Mag 7. Google and Amazon go later this week. We have Palantir going tonight. All the big pharma companies, Pfizer, Eli Lilly, Novo Nordisk, all report this week. So plenty of situations where somebody could donk, and we could get a little bit of a pop in volatility, particularly in the case of Amazon and Google.
Yeah.
How's everybody feeling? What's going on, Ranch? What's going on, Jared? Good to see everybody. Yeah, I think we should actually start with crypto here.
Yeah,
crypto
we can do that.
is sort of the talk of the town right now. Just continues to get beaten up. So I got a whole
What's on your
thing
mind?
here.
What's on your mind?
Bitcoin currently at 77, 78, 79 now. 79 120 level for Bitcoin.
Mm-hmm.
We can jump into my platform here if we want to. We're way down in the dumps. Obviously, way beaten up off these highs when we were pushing 130 up here. This is crazy enough as it is. I have re-added to my IBIT position at these lows, which is now just expansive. You see, I have this sorted by my P&L today. So let's scroll all the way to the freaking bottom. We can have a look at IBIT here. I've added these December 17th, 2027 calls now, additionally. So just continuing to buy these dips. I trust that Bitcoin will recover sometime. What I think is most interesting about this dip in crypto is the implications that it has for MicroStrategy, or I guess strategy as they are now known.
Like in terms of just overall sentiment, overall outlook.
Well, yes, they've chosen to do this thing where they're just going to be a Bitcoin treasury.
Right.
And so I was curious this morning, as they're obviously beaten down alongside Bitcoin. There's no surprise there. I was curious what their cost basis looks like on all of this. So the stats, I tweeted this if anyone wants to see the hard numbers, but MicroStrategy has 713,502 Bitcoins. That is for a total investment of $54,263,254,104. Okay? Their average price on these Bitcoins is $74,668. So we're talking about like pretty close to break even for them right now on this investment. And I just find that to be a fascinating concept. Of course, they don't care. They're buying more. They bought more today. They have a whole page on their website with just live updates every time they buy Bitcoin. Kind of a fun little thing if anyone ever wants to go take a look at that. It's like every day. They don't care what the price is. They're always buying Bitcoin. I'm sure that their executives aren't panicking at this. But I just think that
they probably approved it.
Yeah, I'm sure. Yes, it's them doing it, of course.
Right.
But I just think that it's an interesting example of how trying to become one of these crypto treasury companies is sort of a dangerous game. This is not only up. And this led me to start thinking, what is fair value for Bitcoin? And do we even know or have any semblance of an idea? Because we're not talking about a company that has fundamentals and revenue and a PE ratio and all this.
I'd argue maybe we're discovering whatever that might be.
Yes, absolutely. This is very much an asset, similar to a silver or a gold, even though it hasn't obviously moved up alongside those things. But that's the concept, is that there is a finite amount of this good in the world, and only so many people can own it. And so, I mean, what if the correct price for Bitcoin is 50 or 60,000?
Right.
We don't know.
Maybe we've just been maybe we've overshot a little bit to the upside.
Yes, as tends to happen. Yeah. And it seems like we could be getting some pricing in action. And I don't know the answers to these things either. But it just occurred to me that it's a real possibility that perhaps the fair price for Bitcoin is not 100 or 130 or a million. It could very well be something like $40,000 or $50,000. We have no idea.
Yeah.
So. Really interesting spot that crypto is in.
So what does that mean for MSTR shareholders, MSTR, anybody that's holding MSTR? What does that mean for them? Does that mean
I've said all along,
the same boat as Bitcoin?
I've said all along, why would anybody be an MSTR shareholder? Just buy the Bitcoin. Right. And they are pretty transparently saying that this is their business practice now. Their core business is still fairly small. So I think that MSTR is a great trading vehicle for if Bitcoin is going to move directionally, because it's essentially leverage on Bitcoin. It's going to move more aggressively and quicker. So I will trade it. And in fact, I'm long it right now as Bitcoin is in the doldrums for that exact reason. But I just don't know. I don't know. I don't know why anyone would choose to buy and hold shares of MSTR when you could just buy the Bitcoin yourself.
Yeah.
MSTR should file bankruptcy. Well, I mean, they're still sitting on $55 billion in Bitcoin. So, I mean, and to be fair to them, that is a part of this, right? It would pretty much be impossible for them to go bankrupt, barring Bitcoin going to zero, because as long as Bitcoin continues to trade at any reasonable level, even if it sank to the 50,000 level, that would be a big hit for them. But they do have this very, tangible, non-fungible, that's what they like to say, asset that they could liquidate at any time if they need money. But yeah, I just think it's interesting that this is showing how this is a dangerous game. Bitcoin is not going to 10x every single year for all of eternity. And we are seeing one of those stretches right now for months and months now. I mean, it's been a long time since we logged any, considerable gains in Bitcoin. I mean, this was the last serious level up we made in early July of last year. So, we're coming up on, 7 months now?
Yeah. What is a Bitcoin worth? Bitcoin's worth 77,500 right now, give or take. 78,000, it's kind of trading in that range, 77,000, 78,000. And I mean, just a few days ago, around 90,000. So
Grumpy Mike makes a great point. What if it's worth $5? Yeah. I mean, it's true. Who knows?
And I mean, to the fact that crypto isn't even necessarily ingrained into the fabric of our society yet, where we use it for all of our transactions yet, or it's on on our mind 24/7 in replacement of fiat currency. There is a lot of discovery to go on with Bitcoin. So to the point that you're bringing up, I'm sure a lot of people are asking that question to themselves. What if fair value is 50,000? What if it is 60,000? What if it is 70,000? Hasn't really occurred now that we're getting such an aggressive pullback.
Yeah, and it feels like for a decade now we've been saying, oh well, we're 5 years away from Bitcoin being a daily use currency. Something where with ATMs, Bitcoin credit card, and these things are beginning to exist. To be fair, 100%. We're certainly a lot further along in that regard than we were a decade ago. But yeah, what if there never is broader adoption in society, and suddenly this is just something? I mean, and I think that's a very real possibility as well. So. Yeah, just a little word to the wise for any companies who are thinking about making your business strategy buy Bitcoin. I don't know. GameStop is another one of these companies.
I mean, I don't really understand that strategy either, though. It's like, why not just make your strategy buy the indices? Just buy the indices. buy index funds.
Yeah.
That's pretty much the strategy that they took just for a crypto route, right?
Yeah,
the indices.
Exactly, yes. And if you want a hedge against, inflation, which is what they cite Bitcoin to be, it's just not the most direct hedge. And yes, to your point, why not just load up, which companies do all the time.
Right.
Pretty much every company is
Right.
holding a bunch
Absolutely.
of index funds as a hedge
100%.
against inflation. You don't have to reinvent the wheel.
Yeah.
You can just be involved
think
in the broader market and have things that are actually tangible and will grow.
I think there's a little bit of spizzazz when it comes down to crypto, right? If you're the CEO coming out on a company saying, "Yo, we're going to be buying some Bitcoin," you sound like somebody that's really with the times, and maybe that's a little bit of the strategy for choosing Bitcoin. It's like, this person must be looking out for the future, so this Bitcoin strategy sounds a little bit more attractive. So maybe that was a little bit of a play into it as well. I don't know.
Yeah, so that will
A lot of speculation
that will end my Bitcoin tangent. I like stablecoin. Yeah, I think stablecoins could definitely be a viable thing as well. And like I said, I'm not out on Bitcoin. In fact, I'm deeply long Bitcoin right now. I think it will recover, but it's just an interesting thought experiment to begin to think all this out. I see Ripple being mentioned as well. I haven't thought about that in some time.
I was literally just going to bring that up. Ripple has not been getting half the love. I would even say a fraction of the love that Ripple was getting the last few years. I think it's been taking a massive hit, and I think that it's kind of slid to the back of a lot of our subconscious minds.
Yeah, I drank the Ripple Kool-Aid in maybe 2021.
I was a little bit in it too. I think you had to be a little bit. You had to dabble. There's speculation, of course, but I think
Well, it just feels like that one that's still really cheap, that actually has this Bitcoin Ethereum-esque potential that could feasibly go from $2 to $1,000 someday. And I feel like everybody that was late to the party, myself included, with crypto, is still always looking for those spots. Of course, I'm not on PancakeSwap buying up the things where they gotta put like 0.00 and then there's a tiny 8 to indicate there's 8 more zeros there to really display the price. But yeah, it's just it's I don't know. It's an interesting environment.
I was a little pro Ripple at the same time because of the fact that I thought it could be a little bit of a self-fulfilling prophecy. Because it was catching so much attention and because it was one of the names that people would bring up because they thought it was important because somebody else brought it up before, then maybe start to believe in Ripple a little bit more because I'm like, okay, this is starting to become a self-fulfilling prophecy in a way a little bit, but just not able to catch the steam that it seemed like it could have caught. So
yeah, well put.
Kind of been
XRP is different than Ripple USD, stablecoin by BNY Mellon. Okay, you guys this is getting too much into the weeds for me. I'll have to do some research on that, but I can't speak to that whatsoever. I believe you. We are going to do the entire move in one day this week.
What is that?
I suppose you mean in the broader market?
The broader market, like NASDAQ right now?
Yeah.
Just a massive move out of the gates. I mean, didn't expect that. I mean, the first second as the market opened up, we just break out to the upside, and then we just drift higher pretty much all day and kind of consolidating at the highs since then. So
yeah, and we did open lower. I mean, pretty much everything opened lower and then just straight red to green.
Yeah.
All right, quick portfolio rundown, and then I'll kick it over to Errol to talk any MNQ action that we've had on the day today, or any other action. Accenture has been one of my MVPs.
Okay.
Continues to run. Would like to see this hold over at 270. That's what I needed over by March 20th, but it's been in a good spot. Did catch a little bit of the upswing here. Was feeling a lot better when we were at these levels. We've had a few days of sell off, but finally starting to find some stability. My Nancy Pelosi trade, Alliance Bernstein, still doing well. Still don't know what this company does. Doesn't matter. Also got some long Amazon in the account, which is doing well for me. This is my short VIX, which is finally flipped back to green. Gonna see if we can get VIX below 16, ideally before anything happens, just to get a little more meat off the bone here. But well in the money. Theta not in the question. 43 DTE. Mm-hmm. And then I suppose Netflix is logging a good day today, or maybe I'm getting juked out by price action. I am. Netflix.
It's been a tough one. I mean, again, it's been a slower mover. It's been a little bit disappointing. It's been sliding. Not much to say about Netflix since.
Yeah, quite the slide. And I'm really surprised to see it, not really be able to find any momentum throughout this. I mean, it's still, a giant company. It's still the premier company in streaming for sure. So yeah, it's interesting to see this slide this far. I remember when Netflix was a member of the Mag 7. I remember when it was the FANG index.
Yeah.
The good old days when all you had to do was, well, especially coming out of COVID, when I started trading, all you had to do was buy and wait. It was great.
Yeah. No, it really has been sliding. It seems like there's not even much of a change of character over the last few months in terms of the price action. So I'll be happy when something changes, maybe even if we just slow down a little bit to the downside. So see what we get there.
Then let's see. Yeah, Netflix is my shortest dated. I have these SLV shorts, which I am just chilling, letting these expire at max profit. 101 is my bottom strike on those, so not concerned about that at all. We're pretty much at max profit right now. I actually couldn't liquidate these if I wanted to. Those will close out at the end of the day. And yeah, what else is kind of close? That's sort of it. Got some NVIDIA longs. I don't remember putting this position on. It's working though.
There we go.
No idea when I did that. Yeah, Oclo burning a little bit of a hole in my pocket, but that's sort of the rundown on my end. CoreWeave been giving me some problems, but still holding over this 85 level, so fine there. And then yes, of course, the dastardly IBIT. Which, yeah, this is cooked. I would like to take this off, but I'm sure that we will get some semblance of a recovery in the next 102 days, and I can get a better exit than this. But this ain't winning. These three could win. This ain't winning.
Yeah.
But some time, pretty much what I got on my end.
I hear you. Oclo, also a great buy here. Time to load up on Rivian.
The Rivian Flotilla. I have the Rivian Flotilla going a little bit already. 12 calls, 25 calls. Should we get a little longer? This isn't quite a good spot.
A little bit of long delta on Rivian.
I don't know. We are starting to present some value here on Rivian. This is what Rivian does. It's the quick climb and the slow rundown, and then some other news breaks and we get another quick climb. I fully expect these 25 calls to be in the money 347 days from now when these contracts are up for expiration. Obviously, or I wouldn't have them, I suppose, but I'm top. Rivian to the moon, please.
Rivian to the moon. We'll see how the EV space plays out.
But yeah, we can kick it over to you if you got any.
Yeah, we can jump over to our platform over here. Really, not too much standing out on our end. I know we were just looking at Netflix over here. Yeah, really not much of a change in character in Netflix. It seems like Netflix has just been sliding to the downside. And I mean, just putting in lower lows and lower highs, not even ranging, not even, consolidating a little bit. So for the most part, we have some time left on these Netflix contracts, but it's going to force us to be a little bit patient. And I mean, I think these contracts are being tested a week in from putting this contract on. So it's pretty much been the same story. Just need to be patient. But we got a little bit of gold last night, which was helpful for today. So maybe that can help recoup Netflix a little bit. It'll help with the semiconductor position that we have on. We sold an out of the money call spread, have some short delta on in there. Near break even on it. It's been a slower position at the same time. These semiconductors have really been just floating to the upside. It's just like a melt up kind of move that they've been having. So I have an out of the money call spread. I have some short delta on in there. Gonna have to be patient. Hopefully that slows down a little bit, but 46 days left to expiration. And then sold an out of the money QQQ call spread, man. But this market, I mean, you push the market over, you knock the market over, and it just stands right back up. I mean, just stands right back up. So we have some short delta on QQQ. Break even position right now. We were up a little bit more and things were looking good last night, especially seeing the gap down. And then of course, this melt up having us sit around break even on this one. That's QQQ. We did a little bit in the micros. We traded the gap fill from last night. That worked out pretty well. So we had a little bit of a cushion. And then we took a few stabs today, about 4 or 5 of them. So that provided a little bit of a cushion for what we did today. So we gave some of the micro NASDAQ position back from what we made last night today. So that's really what's been standing out. I think the overall market melt up from the market open has really been impressing for the most part. That's what's been impressing. But we're able to snag a little bit of gold, and I think that makes up for a little bit of the volatility or lack of volatility that we've been seeing. But we can jump over to the TradingView platform, and then we'll check out to see what we were doing over here on NASDAQ.
Yeah, Jabril asking about nat gas futures and what's up with the dump. I'll tell you what, this is not a product I ever trade, but I have been kicking myself because I was thinking to get short amid the entire run-up in nat gas because it was running up on weather. That really was why. I joked about that on air some days ago that I was like, are we really just going to say that we're going to use more natural gas because people have to use their heaters and that justifies a 2x in the price of these natural gas futures? And that's essentially what happened. And now it's literally just that the weather has normalized and so they're dumping back off again. This is one that I really wanted to get short at the top, but the run-up, it's almost like a squeeze style run-up, even though that's not actually what happened. But it's just this parabolic run up to the upside. I didn't want to step in front of that freight train, and I never thought that it would fall apart this fast. I thought that I might, get a day of nothing where I could get involved before this collapse happened. But yeah, it's just because the weather is normalizing is to my understanding of things. Like I said, though, this is not a product I ever attack. If anybody has any supplemental info, feel free to let me know.
Yeah, a lot of volatility in these markets right now. Seems like a really difficult trade. I mean, a lot of aggressive momentum to the upside and then just peaking and turning around right there. So we're just looking back around to them. But we can jump over to the TradingView platform over here. We'll check out some of the trades that we were doing yesterday. But the first one, seeing the market gap down yesterday was really nice to see. Let's see if we can get this tool out. Now, seeing this gap down was really nice to see. Just thinking about the QQQ position, thinking about how most likely in the morning we could probably take that off because more time is passing. And then also we got more of a directional move over the weekend. But as the market opened back up, we had a little bit more weakness come in, and then we started to test our value area low again. So here I'm thinking, okay, maybe we have the opportunity to trade back inside value. And then if we start trading back inside value, maybe we have the opportunity to go and at least close the Friday gap. Especially because I feel like we don't really get that many large gaps on the market. And if maybe we do, but we haven't really recently. But we were also getting a lot of volatility, especially over the weekend, in the Asia session, right, before the New York session in the morning. So seeing that type of volatility gave us a little bit more of a hunch that, okay, maybe we have the opportunity to, maybe close this gap from Friday. So we entered a couple contracts to the long side. We ended up closing this one pretty soon. So once we got towards 25,632, which was Friday's closed, we ended up closing just one contract because we're thinking, you know what, maybe we could come back and, take out some of these highs. Maybe we rally. Maybe we don't even, close to the downside. Maybe we don't gap down in the morning. So that's kind of the thought process. So then we just put in a stop loss near our average entry price, which was at 25,556. And then right after that, the market reverses and stops me out literally immediately. So thought maybe the market wasn't going to close with the gap down after seeing the volatility as the futures market opened up Sunday night, but that wasn't the case. Turned back around and stopped us out on our second contract. But that gave us a little bit of points to be able to use as risk for today's session, which was really nice. So zoom over here. This was overnight. We'll go over here to market open. So as the market opens up today, we just break out to the upside. So we come over here, we test this value area high. What were we doing over here? I think we were getting long off our value area high. We were looking to take
insightful annotations on this chart here.
Oh, I did. I forgot that. I totally forgot that's on the chart. That's hilarious. That's hilarious. I record the screen as well whenever we're trading too. So that's probably in the screen recording. That's so funny. Didn't realize I was on the screen. But no, we just started to get a lot of just kind of this manipulative type price actions where we just start to see an increase in volatility. We start to sweep the highs, start to sweep the lows. And then sometimes we'll get this kind of weird type of candle, almost like a doji looking candle. And whenever we see that, I'm kind of like, all right, market, I'm not about to figure out what you're about to do to me right now. So let me just get out, let me step aside and sit on my hands. So that's what pretty much these two trades were. This one was for about a 13-point loss, and then this one over here was for about a 4-point loss. So this one was more of about a break even. And then once we saw that weird price action, I was like, I just don't even want anything to do with this. So we were short in this position and we kept rallying to the highs. So sometimes in hindsight, you recognize, whenever the market is doing something where I don't have a clear read on it, I feel better about not even having a position on. So with that being said, we pull back down into this value area low, looking for a potential long. We get stopped out, and then the market just continues to chop around all day. We would look for a potential short up here at its highs, get stopped for a couple more points over here, and sitting on our hands since then. The market was really difficult today, so we used a little bit of our cushion from Sunday night for some of the trades that we wanted to put onto today, or for today, and that's how the cookie's crumbling. We're getting a little bit more volatility, trying to pull back off its highs, but that's the volatility the market gave us for the day. So we'll see what we get.
A little bit of chop. Hours. So you are short right now, or that was an exit?
No, that was an exit. I see. Yeah, we'll see what the market gives us. Trading at its highs for the day, it was a really difficult one. For the market to continue to put in a new high and a new high each hour of the day was interesting and impressive. So the gold market gave us a little bit of volatility, so we'll sit on our hands until then.
Like, data trader saying he's deeply long SGov. Deeply long some bonds, trying to get the 30 cents, 30 cents a share that's going to give you. But yeah, I mean, I agree. This is the spot for it. I always call SGov the candy cane chart. It's just, yep, there you go.
Oh, that's that barcode.
Barcode. Yeah, that's looking more like a barcode.
That is a
on the on the daily. It looks more like candy canes to me, or Christmas decorations. Yeah, there you go.
Yeah, just flip a coin.
Yeah. Maybe those of you who were trading in the 80s think this looks a little like something else. You know what I'm saying?
Yeah, that's kind of hard. That's very difficult to conceptualize right here.
Yeah, it's a strange one. But if you're going to be long, this is the time. You just grab them and wait the 1 month cycle and get out.
This is exactly what trading looked like when I first got into the market. I will say this is exactly what I thought I was looking like. I was like, I can't make sense of any of this. What is this?
That's true.
Exactly.
It's like one of those videos where it's like how English sounds to non-English speakers. Like that's what this is like. This is how trading looks to people who don't trade.
This is what my platform looked like when I opened up Thinkorswim for the first time. This is what it looked like.
Yeah, for real. SGov. I get a fleeting thought every now and then that I'm like, man, strangles on SGov are so free. But then every time you look and it's like I'm looking right now, if you wanted the 99-101 strangle on SGov, it would be $1,950 notional of buying power for $4 notional that you could collect, and that's pretty much justifiable, you know, with where the odds are. I don't. There might be a little bit of expected value on that, but it's just so funny, these SGov contracts. Anyway, we're close to our time here.
No, I was just taking a quick peek at Bitcoin, making sure we weren't touching 60,000 by the time we were off today. So we're still trading around 78,000. Bitcoin has not touched 50, 60,000 just yet.
Yeah, we could be approaching those levels.
I'm not hoping that happens, but good Lord, that will be a Bitcoin move. Those would be some headlines.
Yes.
If we touch down at 50,000, 60,000, we'll see.
Yeah, and under 75K, MicroStrategy's in the red. So
say that one more time.
Under 75K is where MicroStrategy moves into the red on their position. So that's sort of the angle.
That's where they get wicked out. I get wicked out sometimes. I get stop hunted. Maybe MSTR just gets stop hunted to the downside, then we make new highs. No, we'll see what we get.
All right. Well, guess that's all we got.
Yeah, that'll be it on my end.
Okay. Thanks so much, everybody, for watching. We really appreciate you taking the time out of your day, and seriously never take it for granted. Errol and I'll be back here same time, same place, 12 o'clock noon Central Standard Time tomorrow. Be sure to stay tuned for Futures Power coming on next. We'll see you guys next time. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
We built tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's still Monday, February 2nd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how was your weekend?
It was good. We just did some things around the house. Typical family weekend, so no complaints.
No complaints here either. We finally got my daughter's birthday party off the ground. It was delayed a week, but that was fun. My sister-in-law came in. That was nice. The Knicks are on a winning streak right now, so hey, that's the good news. We're still licking our wounds here in gold and silver, though, on the other side of the weekend, where it feels a little deja vu-y. Could we say that it's Groundhog's Day, Thomas, in the Bill Murray sense of things? Which I did this last year. I do want to stipulate. Puxatawny Phil is not a good forecaster. He's accurate like 35% of the time. The real hero of Groundhog's Day resides here in New York. Staten Island Chuck, which over that same time span has an 85% accuracy rate, Thomas. So here's the bad news. Both of them agreed today, 6 more weeks of winter. But that's not why it's Groundhog's Day here in the market. It's because the war trade is falling off the board again, for I suppose the second weekend in a row. Stocks are up, bonds are down, gold is down, oil is down. Natural gas is also getting hit fairly hard as weather models forecast. Is that sunlight and warmth around the corner, perhaps, for much of the United States? This cold freeze, this cold snap is expected to perhaps ease back by mid-February. And then, of course, we talk about this dollar recovery, which is still ongoing. It's a busy day here in markets. We have a bunch of earnings this week. And who's to say about the non-farm payrolls report this coming Friday, Thomas, or lack thereof, because we were greeted with news this morning that we may not be getting the non-farm payrolls report thanks to that Groundhog's Day deja vu, another government shutdown. So where does that leave us right now in terms of how the market's pricing things the next few weeks? Surely a government shutdown would provoke the Fed into providing a little bit more support, right? Not necessarily. Market's still pricing less than a 27.5% chance of a rate cut by April. So whatever we're seeing in the headlines right now, if it's about Kevin Warsh, if we're seeing anything in the news about a government shutdown, this is not a market that's motivated today, last week, to change its outlook on what the Fed may or may not be doing for at least the first quarter and into the second quarter.
Yeah, another government shutdown. The war trade is off. Washington and Iran say they're talking. It's a typical market reaction. Seeing those headlines, oil down, equities up a little bit, safe havens not performing well. I'm already long equities. I don't know if I'm going to get longer here, but, without the data, we might do well, actually. That might be a good thing, not getting the jobs report if you're a bull. I don't know.
The jobs data hasn't been great, but the economy's been resilient. There has been a downshift in the Atlanta Fed GDP Now growth forecast with the update that's come out in the past few days. We had an update today and one at the end of last week, and both are pegging U.S. economic growth closer to 4.2% now, as opposed to that rip-roaring 5.4% level that we were looking at as we made the turn through the middle of January. Either way, Thomas, we're just a few weeks away now from that GDP release for the fourth quarter. And so, again, a 4% plus reading, or if you're more of the New York Fed Nowcast variety, that's still at a fairly robust it didn't jump last week, but 2.74%. So if we're in 2.74 to 4.2% growth, that's still very warm and doesn't necessarily mean that the Fed is going to be quick to do much of anything, even if the labor market suffers a little bit while inflation is still above target. So I'm just having difficulty finding a runway where rate cuts are coming is going to be a narrative that helps anyone or anything in the foreseeable future. It just doesn't seem like it's a driver, and I'm close to relegating this chart to the dustbin of futures power hour history, at least for the next few weeks.
Yeah, I don't think it's going to matter either. I think right now we focus on corporate earnings, which we are getting a good amount over the next 2 weeks. And that's what it's going to be.
And earnings have been good. And that's really one of the stories here. Yeah, that's one of the stories here so far that we can look at on the other side of this weekend, where we have our war headlines coming apart. Just give me a quick second here. I see that this mic is having some issues. I do want to fix that. Okay, so maybe stocks getting their footing. That's the good news, I suppose, with today's price action, depending upon where you look. The S&P back above 7,000, 7,010 and a quarter here. It's a sharp rebound off the lows that we found below 6,900 at the end of last week, Thomas. I'm taking a look at this chart now, and that daily candlestick, it's given us bullish engulfing vibes. We did move below Friday's low. We're now above Friday's high. Friday's high comes in at 69.95, so any close north of there, which we're 15 points clear of right now, would give us that bullish engulfing candle. Thomas, I was talking with you earlier this morning about what was going on in stocks. There was a conversation that I had with Ilya, Jamal, Nick, you over the course of last week about, are stocks waiting for the metals rally to stop so that stocks feel like, okay, the weight is off, the risk-adjusted returns are pliable, like we offer a better prospect than a shiny hunk of rock. I can't help but draw the parallel today with this major technical reversal that's potentially forming, that we are seeing the metals stay weaker from last week's historic collapse. Do you see these two things tied hand in hand the way that I am starting to?
I think it makes sense on the surface, right? Investors are pooled together, a lot of their capital. If it's in gold, it's not in equities. There's a trade-off there between what you're going to invest in as an individual. So when you put them all together, I think this probably is a good thing for equities. If gold and silver have put in this, this big drop and they moderate and, say they don't recover, but they don't keep going down, I think a lot of that capital that has come out will find its way into equities over the next few weeks, and that's a lot of money probably taken out of gold, taken out of silver. I think especially if earnings do well, a lot of people are going to say, wait, maybe the reason we're investing in gold and silver to hedge against an uncertain geopolitical environment, political environment, an environment where tariffs, the impact is uncertain. I think you're going to start seeing that come back into equities. I'm staying long on my positions. I'm in a long MES call spread. I'm in individual names. So I think I'm going to stay long there and put a break on doing plays in gold and silver for right now.
If we think about when the gold rally really began, you could say it started to kick off in October or maybe as it cycles up from December 1st onwards. But December 1st onwards, the S&P 500 is up 2.4%. Until we saw Friday's move through the close that we had on Thursday afternoon, gold was up 27.5% over that period. November 1st to me seems like a better starting point. But even so, it's a similar story. Gold up 32.5%, S&P up 1.8% over that window. So gold and silver, they were getting all the attention. They were getting all the love. They were getting all of the news coverage, right? It was the meme trade again. And stocks weren't able to do much of anything during that window. I think you could argue, hindsight being 2020, and it's an idea that we started last week before metals obviously broke down. Would we reach a certain price, a certain level in gold and silver where all of a sudden the risk-adjusted returns at an ES 7000 looked more reasonable? And I didn't know what level that was. I didn't have that in mind. But the fact that we've seen gold and silver come off so aggressively at the end of last week and stay down, and then the war trade coming off, it feels like the ingredients are there for stocks to at least make an attempt higher here as I look at this from a technical perspective. In a week where we may have just lost the most potent macro catalyst that could drive things down, which would be a non-farm payrolls report this Friday. So, Thomas, you mentioned the earnings here. I do want to go into that quickly. FactSet produces their great weekly report, comes out on Fridays. They tell us in the most recent update for the fourth quarter, 33% of companies have reported, 75% of S&P 500 companies have a positive EPS surprise, and 65% have reported a positive revenue surprise. For Q4, the blended earnings growth rate for the S&P is 11.9%, which if it's the actual growth rate for the fourth quarter, it's going to be the fifth consecutive quarter in which we've seen double-digit earnings growth. So that's a really good figure. That's a really good figure. And we've had this wall of worry between Greenland, or rather I should say among Greenland, Iran, Fed subpoenas, government shutdown. I mean, there's so many little things to be worried about. And yet stocks are proving to be exceptionally resilient here, Thomas. So I've had a little bit of time in the barrel here the past few days. I've been staying strong in my stock positions. I really like the ES setup here. This bullish engulfing bar at this juncture of the 1 week, the 1 month, and the 50-day moving averages. It looks like something I want to play around with, and I'm comfortable staying long against today's lows as long as this uptrend off the November and now January lows remains in place.
Yeah, I'm comfortable staying long too. That's really good earnings growth. I mean, and if gold was, you expecting gold to go up, a lot over the next few weeks, you would expect earnings to probably not be that great, especially with the uncertainty around the Fed path being kind of, like you said, off the table for right now. I do think it leaves a pretty clear sight to the upside for equities, at least clear enough to where it's worth getting some long exposure there.
So 12.5 here in ES. Volatility is coming in a little bit today. The VIX, for example, back down to 16.20, which, we were up near 20 to start the session. So that's a nice $1.25 pullback. It's a dramatic change in the futures market, too, from where we were yesterday when we started the show, Thomas. VIX futures on first call were pressing 20.21. We're now here at 17.85, which for those keeping track at home, yeah, that would be a low close for the cycle in the vol futures for the February expiry here. We could go out to March and we're in that same sort of neighborhood. So all of the sudden, right, the concern, everything was red last night, bonds red, gold red, stocks red, just sea of red, no place to hide. Today, everyone's taking a deep breath. And it seems like this deep breath, Thomas, if we're going to have low volatility, if we're going to have an S&P 500 with, that's actually decent trading volume for today with this reversal candle. Path of least resistance, maybe to the upside still. It's a different course for the NASDAQ, which not as strong as its counterparts, and the consolidation here continues well into 26,000. But you can see even here that this is basically recovering all of the losses that we saw from that liquidity flush at the end of last week. Are you like me and feeling a little bit better about ES than NQ, given the setup that we find ourselves in right now?
Yeah, I think technically, of course, it's evident just by looking at the charts that ES is a stronger setup and is stronger for a potential breakout too. Yeah, that's the way I'm going to play it, and I usually do play ES over NQ just because of the volume, liquidity, and the option sizing you get in those products. S&P 500 still, if you look at the sectors, XLK is leading within the S&P 500 today. Industrial is doing good. It's like energy, utilities, real estate dragging down. So, it's risk on when you look at the rotation. And I think the S&P 500 just has that more advantageous setup if you are looking for a breakout. But, if NQ put in some work, some strong earnings, get to the top side of its recent range, it could be the same story for that too soon.
I'd like to draw the attention to what's happening in the Russell here, because the Russell up until mid-February really was the leader in the group. There was that small cap rotation going on, Thomas. I look at the recent move that we had lower here, and I consider this to be the breaking candle. So we'll go to you. All right. We may have had a left shoulder head, right shoulder, and that right shoulder lower than the left shoulder. We finally get a break of a neckline, and we get pretty darn close to this measured target down near 25.65 or so. In today's daily candle reversal, and that's what makes this so intriguing. If we were to consider that shorter term head and shoulders, say exhaustion topping to provide some relief to a very strong uptrend, if we consider that completed, where is that being completed? We're getting a bounce at the 50-day moving average today, that blue line on the chart. We're moving back through the December and really the 2025 high, which is this line cutting across the screen here. We find ourselves trading back through the 1 month and now the 1 week. And we're also through Friday's high after dropping below Friday's low. So you get another bullish engulfing candle there. It seems to me that if we consider all those facts, Thomas, head and shoulders pattern completed within a few points, bounce from the 50, back above the 1 month, back above the 5, positive slope in those moving averages now, an engulfing candle. The Russell's giving you as bullish of this correction off the high, this is done type of signal that I've seen on a chart in quite some time. So for me, I think that means we need to think about what a trade here looks like in the context of seasonality. The Russell doesn't have a great month of February, but neither do the S&P or the NASDAQ. In fact, the Russell has a better month of February than either the S&P and the NASDAQ. Russell loses about 0.37% over the past decade. The NASDAQ and the S&P are closer to about 0.6% of a loss. But in the first half of February, and this is really why we want to be nuanced about this, stocks tend to rally the first half of February. That vol expansion that we've seen in February, where 7 of the past 10 Februaries have produced a higher VIX, that typically comes in the second half of the month. So if we're thinking about the Russell potentially breaking out here, Thomas, I would want to do something where by the time we get to Valentine's Day, effectively 2 weeks from now, we would be able to close this position out and not really have to ride it any further, because the market wasn't exactly the strongest. Those gains were hard fought for the most part in January, and we did buck the Santa Claus rally seasonality. So playing this to the upside, we did produce a better January than we would expect if we were on the naughty list. I think we can take a little bit of a shot here for playing into a return to the all-time highs and fairly quickly, maybe within the next 2 or 3 weeks. Move up there would be towards 2750. So 2750 on our chart, buying at 2750, short 2775, or even 2800 is in the neighborhood of a risking 2.5, 3, or rather risking 1 to make 2.5 or 3. If vol's down and volumes are light, the glove kind of fits. And I think we may need a pepper and some Russell exposure here.
Yeah, this does look good. It's a really strong one day, where Friday you were looking at the technicals and you can say it doesn't look that great. And then you get, this big engulfing bar, and all of a sudden you're set up for a potential, retracement over the past few weeks, price action. Like I said, the stars seem to be kind of aligned here for taking a shot to the long side. And if it wasn't NQ for me, which it's not going to be, I think Russell is another good place to probably add some exposure here for myself. So I'm in an MES long call spread. I think I'm going to add something really similar to what you're doing on here. I'll probably try to make it a little smaller. So probably like something you have right there. I think 45 days is a really good time frame right now to play for a bounce over the next 2 weeks, which takes you right, on the end of earnings pretty much. So I think that aligns perfectly right there.
Yeah, at 45 days, right? Just tinkering with some of the strikes here. If this is a bullish engulfing candle, it's a daily chart. Thinking of our Druckenmiller informed method, 8 to 20 times out. So sometime in the next 8 to 20 days, we'd be looking for the Russell to break out here and return back to the high. We could play this right on the nose. We could go to 18, where there is a fair amount of open interest, right? If we wanted to do the 18 days, we'll go long 2750, short 2800, risking 1 to make 5. Pretty appealing. Okay. If we want to go a little bit, like maybe the Druckenmiller method is too aggressive for some folks, we want to give ourselves a little bit more time than that. We could go out to 39, 2750, 2800. That's more of that 3-to-1 variety. Even beyond there, let's say you want to do 45, more of the typical tasty time frame, 2750, 2800, 2.5 to 1. So there are a different number of ways to structure this. I'm going to stick with the Druckenmiller method of 8 to 20. That puts us right here at 18 DTE in the long 2750, 2800, risking $400 to make 2100. It's a 1 in 4 possibility. So Thomas, that right there is one of the reasons why I like this. The fact that it's a 1 in 4 chance of going in our favor. And yet if we're right, it's better than a 4-to-1. It's actually a 5-to-1.
Yep.
You hit, right? Like this is, if we hit 1 out of every 4 of these trades, we're going to walk away profitably when the market's giving you setups like this. So I think this is just a good risk-adjusted way to, it's a good risk to reward on how to express this view right now. Only costs $415 to get into the market. Hopefully we'll work this order a little bit. If we can't get filled in the next 5 or 10 minutes, maybe we'll adjust the price and pay in a little bit more in order to get some exposure. But the stock market looks good. It has that technical sheen right now. Being bullish across the board is obviously not the best bet. You want to diversify a little bit here. So going to the NASDAQ, could I pitch you on something different? I'm thinking about this for myself right now, where I take a look at the trading range that we've been in here over the past few weeks. And with today's move, we really are just getting above the 50% mark. And perhaps this would have been better, situated this morning. And it's unfortunate sometimes by the timing of when the show appears. But with a high IVR on the board of 21.5 among the major indexes, there was a point today when this was at 2540 or 25,400. We were at the 50% mark of the trading range going back to October. And really, this is the trading range when we pull this back a little bit more here, Thomas. We could say this is the trading range going back to the start of September. So 5 months onwards. A short iron condor position, if we were to do the typical tasty methodology, and the closest strike to that right now is 39 DTE, we would go 250 points wide around the 1 standard deviation move in that neighborhood. We could get a 62% probability of profit, risking 3 to make 1. And that's a fairly standard short iron condor risk to reward and type of payout situation. NASDAQ may not be the place to do it because this is a big contract. And if we think about the average size of an account, Thomas, on a $25,000 account, for example, this is going to be 8% or so of the account equity. QQQs could offer the same type of setup, of course, doing something a little bit directionally neutral, but at a much lower cost burden to one's portfolio. So that's another thing I'm looking at today. I haven't been able to find the market that I like to get a trade-off here. I've been trying to work an order all day. I don't have it on right now, but at 46 days, again,
we'd be looking at that similar. Could we look to sell against the October highs and those November lows and look for that range to hold in at least one of the equity indexes instead of being chips and bullish everywhere?
Yeah, the Qs definitely lots of volume in there too. So I mean, if you ever can't do the NQ, which is a big contract, it's definitely bigger. I usually don't trade NQ because of my account size. The QQQs are always a good place to look.
You know, we talk about upside directionality in the S&P and the Russell. In the triple Qs, bounce off the 50-day today, a little bit higher here, 62.8.26. We're currently at 628.11. You know, another 20 cents, Thomas, then we get a bullish engulfing bar here. And this is the former triangle resistance that we'd be bouncing off from. I mean, obviously the triangle didn't work out, but from some interpretation, that coupled with the 50-day, this also has some breakout potential to it. So I'm going to hedge off my equity longs with a little bit of NASDAQ range trading, but these charts, they're all starting to look like they want to make another push higher while we have a bullish seasonal window over the next 2 weeks ahead of us.
Yeah, I think if it's going to happen, it's going to happen in there. That's where I'm going to be looking for the time frame for my trades. So, you know, we need good earnings. Like you said, the not having the jobs report, that only removes, you know, a risky report, something that could be bad for the markets. It's just not going to be there. I don't know. It's one of those things where, you know, things are aligning and you also get that vibe that, you know, it's a good time to get some exposure. Whereas there's other times where things look good and you have a bad vibe. This one feels pretty good here.
Some of the names that I've been playing in Broadcom, Tesla, Meta here, you know, Broadcom, it's still holding this 320 level. And if NASDAQ, if we can notch that bullish engulfing bar in the triple Qs today, maybe not in the NASDAQ futures. Okay, this is 18 DTE. Should I ride the short put spread a little bit longer? Yeah, if we're going to catch a tailwind that can make the position go into the money, it's only a few dollars out right now. It's like I'm out $62. Maybe we can swing this for something that's a scratch. Otherwise, Meta today, Thomas, it falls but bounces off the 1 week moving average following its breakout. That doesn't look terrible. Tesla here, it has the news that it may be looking to merge with XAI as Elon Musk kind of brings all of his companies under, you know, one conglomerated roof, we'll call it. Modern day Berkshire Hathaway, as it were.
SpaceX and XAI, or did you say Tesla and XAI? Which one is it?
I think it's SpaceX and XAI from the headlines that I was reading.
Yeah, that's why I saw.
But then they're licensing things to Tesla for the AI, and it's all the same thing. Mm-hmm. Tesla is not looking the greatest right now, losing its uptrend here. We'll see if it can get more of a bounce, but 415 or so, that seems to be the level that I'm watching. And if we can get 410, 415 to hold, then I'm still good with my short put spreads. Likewise, so the equities, I'm comfortable. Today's price action is making me feel a lot better, and I'm not doing the type of adjustments that I thought I'd be having to do when I closed out my computer last night.
Yeah, I have a short put spread in Tesla too at 400, 410. I feel fine with that price so far. Tesla 426. I'll keep those there. I think Tesla is actually, if there was IB there, I'd be putting on another short put spread if I wasn't in one. But yeah, it looks fine here.
We'll head over to the bond market here, Thomas. Right there. That's where we wanted to go. Heading over to the bond market here, Thomas, where as we talk about a war trade coming off, part and parcel to that would be bonds breaking down. The funny thing about bonds behaving the way that they have at the long end of the curve recently is that if this was not a ZB and this was just a chart, we have a clear defined downtrend. We have a left shoulder head, right shoulder, a neckline. We break the neckline and start to go into a bear flag, which as we break out of it, we then start to go into a triangle, which here today, we are now beginning to break out of again. It's a very complicated set of factors, maybe overcomplicating the set of factors here. But it would appear to me that the long end of the curve looks like it wants to go through something here, Thomas. This is not exactly a chart that's screaming at me, at least, that it's looking like it has bullish potential. Volatility is not exactly through the roof. How do you feel about the long end of the curve here with this latest news of government shutdown potential brewing, knowing full well that throughout the months of November, or rather should I say October and into November, bonds didn't really do much with the shutdown news. They went up a little bit, came back in, shopped around.
Yeah, this is somewhere where I'm pretty much staying out of bonds right now, especially ZB. If I'm going to play anything, it will be ZN just to give me a little bit more advantage with the size of the product. I got out of ZN last week. I'm not in any bonds right now. I don't know. Usually I like to play bonds with how the rate cut bets are going, and I just don't really have a read on what these are going to do right here. So the IV, it's decent for bonds. You're getting high teens. I'm just going to stay out for now.
One of the more interesting moves, Thomas, that I think we could point to if we think about how the bond market behaves. On Thursday and Friday last week, ahead of the Warsh announcement, we did see that the 2-year note was rallying. And if we think about which part of the curve pays most attention to what's happening at the Federal Reserve, it's going to be the 2-year note, much more so than the 10s or the 30s, which have a whole host of duration premium embedded into them, of course, growth and inflation expectations embedded into them. The 2-year note yield fell Thursday, Friday. Now, today's reversal carries us back to where we were come Thursday close, basically. So it's not exactly we've made much movement net as the market has digested the Warsh news. But I think that's also the tell. Because if this was a market that was gearing up like, oh, we're going to be getting a way more rate cuts now, like, yeah, sure. Trump appointed the guy who's been flip-flopping on economic policy and monetary policy outlook over the past decade, depending upon if a Republican or Democrats in the White House, and ignore the fact that one of Trump's oldest friends, top donors, this is his son-in-law. The market's not convinced that Kevin Warsh is a stamp of approval for rate cuts because he's Trump's guy or is perceived to have these conflicts of interest with Trump. I think the point I'm getting at, Thomas, is if the market thought that rate cuts were guaranteed under a Warsh chairmanship, 2 years would still be rallying. We would not be looking at the notes falling back. And I think that is one of the considerations that we have to take into account here, that the market is not necessarily convinced that we're going to get a Fed chair, Kevin Warsh. Over the weekend, we heard from Tom Tillis, the Republican on the Senate Banking Committee, that he was very fond of the Warsh pick. It didn't change his position on the fact that he was not going to approve any nominations until the inquiry until Fed Chair Powell was dropped. So we'll see what happens there, of course, but the market, I don't think, is walking away from this expecting any dramatic change in pace. If Powell remains, if Warsh gets in, 2-year notes are the ones that I'd be paying attention to most for any of this speculation or drama. They're not giving us any signal.
Yeah. I don't think Trump really, it wouldn't be advantageous to him to pick someone who was going to be a pure yes man and lower rates no matter what, because then he wouldn't have someone to blame if things went bad. If this case, if the economy is doing fine, rates aren't cut, and then, we get into some kind of inflation thing or something, you can blame someone. You can blame the guy that, didn't lower rates enough or something. So I don't know there, but I think Warsh, there is some flip-flopping when you do look at his track record, but maybe calmed the market a little bit more than some of the other picks in that regard.
So notes here, they haven't really done much of anything. We do see here that, the 2-year notes, the 10-year notes, on the other hand, they're not beating those head and shoulders rumors because that recovery we saw at the end of last week taking on a flag shape. Thomas, this is looking more like a bit of a bear flag down here now, particularly after we see the reversal up until 112. And if this is a neckline, former support should become resistance, and it becomes resistance right with our 1-month moving average. So this trend of these negative rates of change, negative slopes in the 50, the 1 month, in the 1 week, those will all notch another day together going to the downside. Volatility is picking up. We also get a MACD sell signal here for the first time today with this reversal. Thomas, this position has been a freaking nightmare. This reverse iron fly. It's been nothing but pain and sitting at a max loss for quite some time.
You were excited about this one.
I really was. And you know what? I'm getting a little bit more excited about it here because if I were to try to get out of it today, wait, I would still have to get out at max loss. Okay, so maybe that's not a reason to be excited. But the reason that I'm actually excited today is because this has been at max loss after we just kind of stuck to 112. This is now looking like it has the chance for some directionality. Bonds don't behave in that technical sense the way that individual stocks or especially crypto might. But with a move below the Friday low at 111 and 17.5 ticks, which that's only 1.5 ticks away from where we are right now, we would get that bearish engulfing bar having been rejected at the neckline of a head and shoulders pattern and our 1 month moving average. So sticking with it, what's the worst that can happen here? I stay at max loss.
Yeah.
It's a sunk cost. And it's it's not like it's taking up buying power that I want to be putting on for other trades. I have like 60% of the powder's dry, I believe, in the follow account here. So that's not even an issue. If it was an issue, why would I keep a position on that's just costing me buying power? I wouldn't. So there are reasons for sticking through this past the expiration window. It's also not a selling vol trade. It's a vol expansion trade, a directional trade, agnostic one at that. But I'm feeling better about it, even though it's still an absolute dog. Maybe this is the week where it gets moving.
Yeah, you never know. Did you say we have any big auctions this week, or is that those not happening?
Oh, very good question, because the BLS did announce that they are no longer releasing the non-farm payrolls report come this Friday, and that seems odd because the House is expected to vote on the Senate-passed funding bill today. So maybe the BLS report's delayed a week. Either way, though, this is not the week with which we'd be concerned about auctions. There are a few things. There was a 13-week bill auction today, tomorrow, a 6-week bill, Wednesday, Thursday, 17 for 8 weeks. Next Tuesday, 3-year notes. Next Wednesday, 10-year notes. Next Thursday, 30-year bonds. So direct impact on our ZN and ZB futures, proxy, ZT, or ZF for those 3-year notes. Next week is the week we want to watch. So if the government gets funded, let's pay attention to Treasury announcements to see if they, of course, will be continuing to conduct those auctions. There is some chatter, I've heard out of the macro world, that the Treasury may need to increase its issuance at the forthcoming QRA, which, if they were to do so, that would potentially be more supply. And as we know, Thomas, on a very basic level, as the textbooks would tell us, bond yields and prices, they move inversely. So as you add supply to a market, prices go down, yields go up. If we get a QRA with higher Treasury funding needs, more supply coming in at the long end of the curve, hey, maybe notes do drop again. And our move back to 112 and this frustration around it was all worthwhile. We can finally see a drop into 110 area.
Yeah, we'll have to watch that QRA. When does that come out, you said?
Shortly. I just had the note in front of me. Treasury QRA release. So we had November 3rd, and then we have one in 2 months' time. So what's interesting about that is that it's going to coincide with the end of the Fed's 2-year short-term, bond buying auction. The Fed has been operating in the market to keep the Treasury's accounts full as we go into the drain heading into tax day this year. So we're going to have this very nice coordinated dance, it feels like, where the Fed's QE light's going to stop, and then the Treasury's going to announce their QRA right as we get the tax receipts. I don't know. Speculation, Thomas. Buy the rumor, sell the news. Let's buy the rumor. In this case, we'll be selling the rumor of this higher Treasury supply coming down the pipeline. And maybe that's a good reason to get notes going. Hey, we're spreading a rumor here. The Treasury is going to be increasing the supply. Please sell ZN so this reverse iron fly finds some life. We head over to the graveyard. Gold down another 1.42% today, Thomas. 46.71 right now. Slightly higher than the mark close, which is about 46.52. Where are we pausing? I've seen this several times. People have been looking at the gold market's volume weighted average price, the VWAP from the October 1st low to today. That is what's holding the market up right now in gold. Silver is actually up technically on the session by about 0.75%. So again, you're seeing some stability come into place where we have the low from January 8th, 73.53. Thomas, we shared this yesterday on First Call, but we were looking at the CME margin hike that had gone into effect as of today. The CME had put out an alert Friday afternoon, which is great. Love when that happens. Gold futures margins are up to 33%, silver futures 36%, platinum futures 25%, palladium futures up to 14%. Not sure this is a surprise, right? Volatility goes up, prices go up, clearinghouses are going to raise margins, as we have said repeatedly here for the past several weeks. So this is not some, as the folks on Wall Street silver would tell you, this is some conspiracy to kill the silver rally, because those first margin hikes went into effect in November and December, Thomas, and then silver did rally another 50%. So the conspiracy is not why silver is moving the way it's moving. That said, though, finding some stability today is rather interesting. Finding some stability at pivot lows that we had in previous sell-off episodes, right? January 8th, the low is 73.53. That's basically where the market stopped selling off here overnight. Overshot by a little bit, but can you be surprised in this type of volatility environment? Watching for some sort of turn here, I think, is going to be the most interesting part of this week, even if the stock markets look like they're getting ready to burst higher. How gold and silver respond to their dramatic disemboweling on Friday. That's the most important development over the next few days.
Yeah, I think the market, it was too long for too long. You know, it was there's too much leverage on the long side. A lot of it came out. I don't think we get any kind of immediate retracement in any significant way, maybe like a 25% retracement of this recent sell-off. But I think directionally neutral is probably the way I'm going to look at playing this. I'm going to wait a few more days at least and see, how this stabilizes after such a dramatic sell-off. But I said last week, I put out another gold long call spread. I said, it's been working for me. I've been doing it like 5 times in a row now. And if it's not broken, why do something different? So this is kind of, where I see like this kind of sell-off. I'm not going to just start doing that again. It's just too much. The call spread I have on right now, it has 52 days. I'm only at a small loss because it actually was on for a couple weeks before this. I'm just going to let it go through the rest of this week and then see what I'm going to do. If I can make back just a little bit and get out broke for a scratch, that's fine. But really, I'm just watching the metals here.
Yeah, I mean, I find myself, it's interesting psychologically, Thomas, if we buy a call spread at, let's say, 4,800, 4,850 today, 45 in, 21 out. And for the next 45 days, this thing does not move. It gets pinned to 46.76. That's a max loss position. And if this thing drops another 20% from here over the next 45 days, it's a max loss position. There's a certain psychology to how you feel after you have an event like Friday. I think, oh my gosh, this thing I was trading this long and then it just got down 40%. Well, if you're trading call spreads, which are risk defined, there was always the inevitable possibility that this thing just didn't go up as much as we were hoping. And given the volatility structure, you have to demand higher and ever higher prices to get those 2-to-1, 3-to-1 returns on those positions over the time frames with which we are operating. But there's really no difference if during the trade window, right, to not get too emotional about the chart, there's nothing different if the prices don't go up or they drop by 50%, because either way the position would be at max loss. And part and parcel to being a momentum person, you're going to have a trade in the chain eventually where 5, 6, 7 trades in a row, the 7th one, it doesn't work out. And hopefully you've made enough money in the first 4, 5, 6 that the loss in the 7th doesn't eat away all the losses. It's one of the reasons why I like structuring these in those 2-to-1, 3-to-1 risk to reward. So if it hits, I've now got 3 coins in my pocket. I can take one bet it on here. If it makes another 3, I can take some more off the table and keep feeding the machine. And this time it may not work out. But there is a lot of duration in some of the trades with which we've been operating because of the nature of these markets. And if you told me in December when I had gone out to 100 and odd days and purchased the 5,000, 5,100 call spread, that at the end of January we'd be trading near $4,700 an ounce, I'd go, great, we have 84 days to make another $300. This having advanced already $250 from when I got in, totally cool keeping it. At 22 DTE, is the 4,600, 4,625 call spread doing what I wanted to do? Not as much as I would have liked as it was happening on Friday. And obviously a lot of gains here went out the window. But if this market's finding stability, Thomas, down here, and we do get somewhat of a bounce and we've washed away the concerns of the margins, this is a trade that's going to be a winner, a smaller one, perhaps not managed well. Again, I didn't have gold selling off 10% while I was sitting in O'Hare on the tarmac on airplane mode in a snowstorm, waiting to go back to New York. So that's fun. But
happens at the worst time, you know?
But yeah, this is like the nature of the trading system, right? And I think for people like, listen, if this is the first time you bought gold was last week, this sucks. There's no two ways around it. There's nothing I can say to make you feel better. But if you are a momentum person and you've been operating in these markets for the past several years, you're going to have events like this. And it happened to us midsummer last year when I was still buying the calls. And then the market ground sideways for a while. The people who were selling puts did well. The people selling calls did well. But if you were directionally bullish with the out of the money calls, a few of those trades just didn't hit. And then they started hitting again. And it worked out great from August onwards. Maybe up until this trade. Although technically this trade is still in the money in the 4,600, 4,625 call spread. So like, I'm not going to get too bent out of shape about things. Thomas, one last note on this. I've always likened myself in the market to being a baseball player. In part because I've looked at my own results and I've seen that I'm not right more than 50% of the time on average over the long haul over the past 10 years. What matters is how you structure your trades versus reward. And so if you're a typical retail trader who on average, if you look at studies, is right about 55% of the time, just directionally, did you pick the right way the market was going to go? Up, down, sideways? 55% of the time, they're correct. The problem is typical retail traders lose 2 times as much as they gain on average. So at a 2-to-1 loss ratio, you're going to have to be right 67% of the time in order to break even. So for me, I don't really care about being right. I care about the risk to reward side of it. And so if you're going to hit 30% of your trades and you can manage to, go 7x, 8x on those 3 winners, you'll walk away net positive. And like, that's the takeaway here, Thomas. We don't have to be right all the time. We just have to make sure we structure our positions so that if you do run into a buzzsaw, a market that goes flat when you're long calls or a market that goes down 50% when you're long calls, the loss is still isolated and it allows you to keep trading another day.
Keep trading another day, stay sane another day. It can be really stressful if you start trading without risk in mind.
Could be stressful if we keep trading without risk in mind. I think I heard a bell rung a few seconds ago, and it looks like we did get put into that Russell position, Thomas. So good news there. Now along the Russell call spread, 18 DTE, 2750, 2800. For those that missed the start of the show, if we're back above a neckline in a head and shoulders pattern, a bounce of that 50-day, a bullish engulfing bar moving above Friday's high. There's a lot to like here to think that maybe we have another run to the upside coming in stocks, particularly small caps, which have been the leader this year. I do want to go over to copper real quick, which it's off today. It's back to 582. It's still holding the uptrend from the November lows. This to me is the market that really wasn't so negatively impacted last week. And if you think about how it's moved recently, it didn't have that huge explosion to the upside like a platinum, palladium, silver, or gold. The fact that it's holding the low with this very aggressive candle wick here. I'm going to stick long. It's not comfortable, but this isn't a market that it looks like it's giving up. I got into a long call spread at 588, so we're 6 cents lower here, 5.5 cents lower. Plenty of time to go. Metals are I think they're going to stabilize here in the next few days, unless we get another margin hike coming down the pipeline. And at 36% margin for silver futures, we're going to go 1-to-1 soon? Okay.
Yeah, I'm in I'm still in my copper trade, a short put spread at 5.7, 5.7.5, so 5.75. I should actually rolled this last week with more duration. I'm 22 days out. I'm hoping the next update, I probably will roll this position out for more duration. Yeah, I got to stay long here too. It's definitely an uncomfortable position, but I think it's going to hold up the trend better than gold or silver. I think this has more of a chance to keep with it. So we'll see though.
Yeah, unlike the other metals, it wasn't really thrown into the blender of speculation. You could argue maybe Thursday it was for a bit.
Yeah.
We're trading at the same levels we were 2 weeks ago. We have to move over to our energy sector because energy has been slugged twice today. First off, we mentioned those changing weather reports for the middle of February. Looks like a warm front is moving in to break this horrific cold spell. That is a 27% loss for the NGH6 contract here today, Thomas. Oh boy. This is moving an absolute insane degree. The volatility crush is here. We had a high of 141. We're currently back to 83 right now. You're the natural gas guy. I did not make any money on the way up. I did not chase it on the way up. What do we do here? How do you trade this?
Yeah, big candle down. A lot of speculation coming out here. I don't know because I'm still in this short put spread for the H contract. It was at 3.4. Now we're 25, 30 cents under that. So this position is definitely in the red for me. Yeah, the weather, like you said, weather models definitely shifted, seeing a lot of warm everywhere except, pretty much the far northeast over the next 2 weeks. Once you start to get to the end of February, you start to exhaust your chances for very, very these cold events like these polar vortexes that could really draw down inventories. Yeah, it's not pretty here.
Damn it. Like I'm in the only bubble that's below.
Yeah, there you are. We're in a red zone, so that's all right. But yeah, winter's coming to an end soon. The only chance for this is if these models get hedged a little bit back towards the colder side. Otherwise, we're taking out a lot of these past 2 weeks where this huge frigid air has come in. I don't know, expect more volatility, I think, is the only thing we can reliably expect. I think picking a direction here is not smart.
Thomas, the war trade's coming off. You'd see it in oil prices. There was a run up at the end of last week in anticipation of a potential U.S. bombing of Iran. Trump has been more than public about his belief in the strength of the U.S. Armada that it's made its way to in the Gulf outside of Oman. Crude oil here, 49.3 IVR, so well off the high of 82 for the day's session. We do see that there are headlines that the U.S. and Iran are negotiating, which, Thomas, if I recall correctly, did we have a headline like that once? We did. On June 16th, 2025, President Trump tweeted that he was directing the U.S. to negotiate with Iran and to try to de-escalate the situation, which of course went nowhere. So maybe this is another feint in order to distract. But it doesn't matter if it's real news or not, because if you were long going into today on a short-dated contract, today hurts a good deal. If you were short off the highs that we had run into here in July, where the market top ticked into on Thursday last week, there's now a fairly meaningful pullback in play. Could I also point here, Thomas, to, because I've put on some and looking to sell a vol around this event. I haven't sold the vol yet, but thinking about the range from July through now. So the 6-month trading range effectively here, if we were to drop on a halfway point on our chart, we're getting close to it. So in consideration of that, if we got down to 60, 61, would you be partial to doing something directionally neutral here? How do you feel about the oil market in that regard?
Yeah, I'm looking at an iron condor somewhere around 57 to 67 in that 43-day out contract. You're getting, pretty much 1-to-1 with like a 40%. Oh no, I mean, I think after a 5% drop, I might wait a day. I might wait till tomorrow to put this on and see where this goes. Some more risk coming out, but like you said, like you could swing so far in the other direction so quickly. There's other smaller headlines out. Venezuela oil exports are back up. I don't know. I think the most likely scenario is for the war risk to stay off and we stabilize around, anywhere in the 58 to 62 range, really, for a little bit. If the war risk comes back on, of course, you're going back to the upside. I don't know. I feel good with an iron condor. Maybe, yeah, I think this 57.67, I'll try to contain it in there. I might put this on right now. It's got slightly less POP than I prefer, but it's not too bad. Your buying power is 228 on it. I think something like this, it makes sense. I don't hate it.
Taking a look at the short iron condor position, if we wanted to go against the high that we had in July to the lows that we had here in December, so about 66 down to 54.5, just going to the round figures outside of those highs and lows would give you the 53.51 short put spread side and the 67.69 short call spread side of your short iron condor trade. And it's about a coin flip shot for a 3-1, a little bit better than that, risking a little bit less than 3 to make one. It's reasonable. I'm just keeping an eye on that troop tracker, Thomas. Excuse me. If we do see that ultimately this USS Abraham Lincoln is remaining in the Gulf, I mean, chances are that we're going to do something out there. We're not just going to let it linger, are we?
Yeah, you might as well use it.
Might as well use it. Use it or lose it, right? The ships sink if we don't use them, I think. Dollar rebound gathering pace here today as we wind this down. The Aussie's off by 0.5%. We have an RBA rate decision coming up. The Bank of England is also coming up later this week with the pound falling back below the highs that we had in 2025. The Canadian dollar's off, thankfully. The Japanese yen continues to fall back and now finding support at its 1 month. But hey, short-term yields in the U.S., long-term yields in the U.S., those are going back up. Thomas, there's a little bit of a dollar rally transpiring here. You could even see it in the Swiss franc, but we are at the key level with which we've been watching. We are now into the low that we had from mid-December. The 1-month moving average is nearby at 97.86 in DXY. If the dollar rally is going to stop, it should stop here. But if it doesn't stop here, then we may have just seen a big fake out in a multi-month bear flag to the downside. And the dollar is going to have some real room to run, which has implications, of course, for gold and silver. It also has implications for the bond market. Thomas, I can imagine if the dollar is rallying, what's happening to ZT? Is it still pulling back? Probably. What about ZN and ZB? Are they breaking down? Jules, those are due out tomorrow. It is a BLS report. Maybe it's not due out tomorrow. We'll find out. Thomas, other than that, I guess we're waiting to see if the House passes the funding bill, and maybe we'll find out about NFPs later this week or next. But until then, you and I are done here. We need to wrap this up. So producers, take us out. Dr. Jim's coming up next with From Theory to Practice. We'll catch everyone later today on Overtime, 4 Eastern, 3 Central. But until then, good luck trading.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
If your trade's not going how you expected, it's not necessarily that your assumption is wrong. Maybe it's just not right. Yet. Rolling is managing a trade by closing your position and opening another one like it for a credit all in one order. The cool part is that you can change the expiration to get more time, or you can tweak the strike for a higher probability. Usually we want to roll the expiration instead of the strike. Remember, duration over direction. Exactly when and how to roll trades is a learned art, and it can be a little bit subjective. Usually, we only roll if we haven't changed our assumption, and we almost never roll winning trades. If you have changed your mind, don't roll. Instead, you probably want to close it if it has undefined risk, or just let the probabilities play out if it has defined risk. So before you cut your losses, consider rolling the expiration or maybe even the strike. Pretty simple.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Schultz, this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the We're Back in St. Pete edition of what it is that we are trying to do. But it ain't right, guys. It ain't right at all because it's 36 degrees outside. Like, leave all that stuff up in Illinois, man. Leave all that stuff up in Chicago. It ain't right. It ain't how it's supposed to be down here in St. Petersburg. But I brought it back with me. I took my whole family down. I took the whole city down, and I am certainly to blame. But thank you guys for being here and being a part of the show. It is only because of you guys that we can do what we do, so thank you guys so much. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the show. Man, I don't even know anymore. Like, can you celebrate if you're still a Metals Bull? I don't think so. Can you really celebrate if you're a Metals Bear? I mean, I'm certainly going to here today, so maybe you can too. But either way, if you hop into that chat, it is indeed a good time had by most. And oh, don't forget, the number one most important goal for you today is to pump the algo. Pump that algo, put comments in the chat, if for no other reason than simply for the love of the algo. So Josh, bring us into the market. Let's have a little look-see at what's going on. We got a couple of things happening, right? We got, let's grab our Glacier Freeze here. Even the S&P's up 47. You've got the risk-free instrument, also known as the NASDAQ futures, up 244. That is an extremely high-risk product if you are brand new to the show or brand new to the markets. I jokingly refer to that as the risk-free instrument because technically it's extremely high risk, but here we go, another day up 240, so you can do the math. The Boomer is up 506, and you've got the Russell 2000 Futures Index up 34 on there. You got bonds down 17, you got notes down 8, you got oil down $3. You got UB40 even down a little bit. And then look at this, guys. Look at the shifties. Gold down 72. That is not the low, I don't believe, of the day or of the night. We'll take a look at that here in a minute. And then, of course, you've got silver. Let's take a look at my Hunt Brothers. Silver up on the day. Silver up 55 cents. But even still, guys, come on, man. This is some nasty business. Nasty business. I mean, Friday. So I was obviously live in the studio on Thursday, which was great. Got to see everybody. It was amazing. We did the show, and it was so awesome. Had the party Thursday night. Like, what a great time to be back up in Chicago. And then Friday, because of my flight schedule, I was like, okay, if everything goes perfectly, I should get back home. I can scurry over to the studio, and I can be live on air. But we were actually delayed on the runway for about 30 minutes. And so that pushed everything back, and so that's why I wasn't live on Friday. But that's not how I planned it based on my return flights. But I'm sitting there on the runway, right? And I'm watching the markets. I'm like, this is insane, right? $44 range in silver. Let's take a look at this, right? This was on Friday when I was leaving Chicago to come back to St. Pete. Look at that. Look at that. Guys, look at that. Look at that bar, man. These are daily bars. This is not a tick chart, right? This is not the Errol Coleman settings. These are daily bars. I mean, look at that. So if you go, let's actually do a little. So it started like right about here, right? So how many days? So here we go. Let's start like, we'll start like right there. It doesn't matter. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 days or 22 days of market action wiped away in a single day. Wiped away in a single bar, the final boss candle right here. A range of $44.45. This isn't a meme coin. This isn't crypto. This isn't fart coin. This is silver, right? This is one of the most, like going all the way back. I mean, we're going to BC at this point. Like, I think they talked about this in Genesis, right? Where it's like, man, trading silver. They didn't talk about fart coin in Genesis. And here we go on the daily chart. Man, $44 range in silver. It's nasty business. Go to gold here. Go to GC. Man, gold had a 780 point range on Friday. And then today it's got like a 480 point range, and it feels like it's an inside day. I mean, it's not an inside day because of the way the chart's setting up, but you guys know what I'm saying. It feels like it's kind of just a ho-hum day. I mean, gold was all the way down to what, 44.23 on the lows, I guess? Wow, man, this is some crazy stuff. Some crazy stuff indeed. So anyway, if you're out there trading the metals, man, whew, my hat's off to you, sir or madam. You are a shooter McGavin. Like, you are my kind of people, and I really hope that you live to see another day, and you're able to tell some tales to your grandkids about this. And so anyway, I digress. And so there you go, GC, silver, man, crazy stuff. So all right, so boy, do I have a victory lap for you all. We are literally going to spend the remainder of the show, the next 39 minutes, we are going to be talking about my SLV position. Guys, look at my SLV position. Let me open this up. So I am short a 64.5 call. Right now, SLV is 71, right? If you have been following the show for any length of time, you know I've held this position all the way up to the top. All the way up to the tippity top. And we have now ridden it all the way down to the bibbity bottom. So 71 SLV. Look at my P&L open. $480. Guys, that's nothing. That feels like absolutely nothing. This is going to go down in my mental records as a scratch, as it should. Because if you were watching the show like last week, I mean, this thing was marking at like, $40, $45, just crazy numbers. But I really felt like, man, I'm small enough. I kind of want to hang on this position and let's just see if we get a little bit of a reversal of fortune. And I didn't necessarily think that was going to be $44 ranges on silver, but I thought maybe it drops $10. Maybe it drops $8. Maybe we get a $15 guy showing up on the daily chart, and we got essentially a 40-point drop on Friday. And so crazy stuff, wild stuff. And if I go to, let's go to SLV here really quick. So if I click on SLV, let's go to the, let me bring up my chains here really quick. We'll bring up some Allison chains so you guys can see when I did this trade. So I did this trade back on 12/22. No. The original trade, hang on. No, it was 12/09. It was this one right here. So 12/09, there were some adjustments. Obviously, we rolled it out. We rolled it out again. We closed the put side, which I'm really glad I did now because, again, when it was worth nothing and silver was up around, $1 million or whatever it was, I looked at that put at 48 cents. I'm like, I don't really want to hold this thing because if it does reverse, which I know it only goes up, I know the internet assured me, the singularity is coming. It's all this, that, and the other thing. It's like silver's going to 300, silver's going to 600. Like all we're going to do is transact in silver. All we're going to do is use silver for everything we do, all day and all night. And so I knew those things were coming, but I was like, let's take a little shot here to the downside. So looking at the put side, I was like, well, 48 cents. It doesn't really make a ton of sense to me to hold this trade any longer. So let's go ahead and close it down. I'm really glad that I did because if I hadn't, then man, all of a sudden, like that put would be growing some teeth right now, and it would be a real stick in the mud for our purposes of silver going down. In fact, hang on a second. as we extend the victory lap, we have the whole show. I mean, this is going to be the entire show. Let me look at what is the 64.5 put in February selling for right now. So you can see right there, we bought it back for 48 cents. I'm going to try to make a guess before I look at the option chain. I don't know what it is. I'm going to say you've got SLV at 71, only 18 days to go. I'm going to say this thing is still selling for $3, maybe $3.50. That's my guess. So $3, maybe $3.50 on this SLV short put at 64.5 strike. So go to the trade page, go to February, 64.5 put. Okay, it's $2.50. I wasn't that far off. It wasn't. I mean, I was obviously a little bit high, but man, that would have really worked against our purposes of wanting to be short silver. And so, I mean, when one side of a strangle or a straddle, when you get really stretched and the other side kind of evaporates down to nothing, taking it off, I don't think it's the worst move in the world. Like, I know the Tasty research has shown it doesn't really help you in the end, but this time it kind of helped me. And it also kind of checks the intuitive, it makes sense box. And so I'm like, well, I don't know. If it checks at least one of the boxes, maybe we consider it. So anyway, we're in SLV right now. So what are we going to do? Well, I think actually, believe it or not, man, I really, really want to hold this thing. Can we get a win on this trade? I'm looking at this situation and I'm like, it's kind of, I have competing forces, right? I have gimme versus gotcha. I have pro versus con. We have good versus evil, right? Kind of like, lost season 2 versus lost season 5, right? Part of me wants to hold the trade because I'm like, man, we're so close now. Like, we're at 18 days to go. Let's roll it out. We'll kick it out to the next cycle. And it's like, man, maybe silver's finally, the tide has turned and it's going to go even lower and all these kinds of things. The other side of me is like, man, so many other things that we've been doing, believe it or not, have been working. Right? I mean, Apple's been a huge winner. We're going to talk about that here in a couple of minutes. I mean, oil's coming back to us. Our MES short put's looking good. I mean, GDX is actually doing okay, although now we're tested on the put side, which is kind of funny. Speaking of kind of getting whipsawed and things of that nature, Tesla's creeping right around the corner. It's like so many things are working so far. It's like, I don't know, man. We don't really need to be right on this position, do we? Like, this is an internal struggle that I have myself, that I know so many of you guys out there have yourselves. And it's like, man, you want to be right on all your trades. You want to be right on all your trades. This is human nature. It doesn't matter how great your system might be. It doesn't matter, how great you may have prompted your AI agent to do all these things for you, right? Still, as humans, right? And pretty soon, even the AI agents themselves, they're going to want to be right. We want to be right. So it's a natural kind of feeling and emotion that we have. Well, if we want to be disciplined and we want to be quantitatively based traders and have, consistency in the system and things like that, we have to fight against that urge. We have to fight against that kind of, desire to need to be right on every trade. Because I'm looking at this trade now, with it marking at about $10. If you would have told me a week ago, hey Jim, on Monday, February 2nd, you're actually going to have an opportunity to get out of this trade for a $5 loss, would you take it? I mean, I would probably take it before you even finish the sentence. Like, I would have the position closed out before you even completed the thought. And so now that I'm in that situation, and this is an emotion and an experience that every single trader has. Now that I'm here, I have the natural feeling of, let's just go a little further. Let's just try to push it a couple more steps down the pathway forward through the forest. Generally speaking, that's usually a mistake. Generally speaking, that's not usually the move to make. And so looking at this objectively, kind of zooming out a little bit and thinking, all right, where am I at in space? Looking at this position, kind of alongside all the other positions, I think it's time for this thing to meet its maker. It's going to be a little bit sad. I mean, I'm going to come to the show tomorrow and come to, work tomorrow and come into the markets tomorrow feeling a little bit incomplete because not having an SLV position to lament by myself, with you all, to Autumn, of course, to the kids. It's not going to feel right. It's not going to feel right at all. But at the end of the day, I think this is the move to make. And let me point out one other thing too, as we extend the victory lap, which again, we lost $5, but in my book, it's a victory lap. This is so you got a chance to see. You had ringside seats to actually watch and witness what not having a predetermined stop loss looks like for a position that gets out of control. Like, I couldn't possibly give you a better example. Like, if before all this happened, if I was like at my desk and I'm like scribbling out, like, okay, what is a crazy example that if I could just cook something up that would show like how things can get really out of control and out of hand with no predetermined exit point on a losing position. Let me cook something up. I don't think I would have cooked something up that was as crazy as what actually happened. Like even if I went to like, 4 standard deviations, 5 standard deviations, whatever, I don't even know if I would match what we actually experienced with SLV. But what a great kind of illustration, which is not to say it always comes back, because it doesn't. I mean, I took off the Oracle position and took a huge loss on that position. Although if I would have held in it, the do nothing strategy again continues to be essentially undefeated. And by essentially, I mean, there's that 1 or 2 that actually never come back. But here we got to see the no predetermined exit point kind of play out. In real time, you saw the gotcha. You're now seeing kind of the gimme, where it gives you a chance to just treat it on a case by case basis and kind of a day by day thing. And so, that's why I like to do what I do. And it might make sense to you. It might not make sense to you. Feel free to discard upon arrival. That is going to be 100% your choice. So, okay, let's go into SLV though. And let's do it. I mean, should we pour something out? Should we pour out a little banana natty on this guy? I mean, I think we need to. And if anything is banana natty worthy, it is this SLV position, which of course, if you're brand new to the show, you could go banana daiquiri. That's pretty straightforward. You could go natty light ice, also straightforward. But a banana natty, as we've determined on this very program, is a banana daiquiri with a natty light ice base. And so I do think that was what we should be pouring out for this guy. So, all right, let's go ahead and close this guy down, though. Looks like we're going to lose about $6 on the trade. That's fine. Like, really, I mean, I don't know that I've been this happy about a loser in quite some time. Because again, I mean, go back, watch the tapes, watch the shows from last week. You'll see it marking at $40. You'll see it marking at $38, whatever it was. It was crazy numbers. I mean, I'm not making it up. You can go back and watch the shows themselves. Sorry, so that's SLV. Let's go into, now I'm kind of thinking, okay, so 2 things I want to make sure that we do today. I want to get to you guys, man. I see you guys, man. Look at you guys. Ordenu's in the house, man. Sam L is in the house. Man, RZX is in the house, man. Look at this stuff. I see Tasty Live shows even in the house. Is that Frankie Walsh in my show? Man, that's some good stuff. Like I was telling Josh before the show, Frankie, I thought this was your nap window. Like I'm shocked that you're here, but you're welcome, of course. So I appreciate you, my friend. Tom Rivera is here. Catterday Night is here. Man, Kryptonite is here. Away from the numbers in the house. Man, look at you guys. I appreciate you guys. Catch that voltage is here. Yeah, that's some good stuff. All right, let's go ahead and I'm thinking, man, let's do this Apple trade because, I mean, this thing really worked. It took a couple of days. We did this on Thursday, right? We did this on Thursday during the show, I think. And then obviously Friday we had all the, all the plane issues and whatnot. Not major issues, but just a delay time-wise. And so I wasn't able to go through this on the show on Friday because there was no show on Friday. But now looking at this was our double dipping George Costanza deal from Thursday's show, which again, go back and watch the show. I didn't look at a chart. I wasn't looking at 10Ks. I wasn't reading through statements of cash flows. I was just using common sense. The market was getting crushed. I mean, it was almost 80 basis points off of all-time highs. Like, it was really, really bad out there, guys. Like, really bad out there. And so I looked at the situation, and I was like, well, is Apple really going to let us down? Like, is Apple really going to let us fall to almost a full percent off of all-time highs? There's no way. There's just no way. Now, it was a little bit bumpy on the earnings number. Like, I don't think Apple rallied right out of the gates or whatever. I think it just kind of chopped around a little bit, even went down some. But then, obviously, everybody got, they figured it out. And they righted the ship. And so now Apple's up $8 and all is right in the world. So let's go in here. And I think we just close them both down. I mean, let's close out of the put first. So you can see the short put right here. We sold it for $3.10. It's marking at $1.12. I mean, that's over 50% of max profit. I'm no Jacob Perlman, but that looks like about 65% of max profit or thereabouts. And so that's really, really good. And so let's go ahead and let's close out of the Apple short put. We'll do it for $1.13. That's fine. And then, maybe it's not fine. Okay, maybe we got to pay the extra penny. That's fine. You got to pay the man. Oh, we got filled. $1.13. There you go. So the man was okay with our offer at $1.13. Very nice. So now let's go in on the puts on the call spread, I should say. And you can see now that, we bought this call spread for $5.32. It's a $10 wide call spread. It's marking at $7.90. Again, looking at a P&L open at $2.58. I'm no Julius Spina, but that also looks like it's a little bit more than 50% of max profit. And so that is also a nice trade. And so I will take both of those and ring the register and then just kind of, politely move on. So we go to Apple, close it down. This was an earnings trade from Thursday, of course. And this can be this. So let's go in here, 790. And there you go. So we're out at 790. Okay, perfect. Okay, so we're out at 790. We got out of the short put. And let's see, we did our SLV position. The only other thing I want to talk about, I think, is we've actually got two things. So let's do MES and let's do MCL. So MES, we have a short put on that is now at right about 50% of max profit. And so you can see that we sold this guy for 72 points. It's currently marking right at about 36 points. Again, this is the typical target that we're going for on something like a short put. And so this is, right at that 50% marker. Once you get there, if you're at 48, 49%, which is essentially where I am right now, it's like, I don't know if, you want to, wait for the extra tick or a couple of ticks. That's not always going to be the greatest move, in my opinion. I think if you happen to see it at, right on your profit target, you don't necessarily need to, go for the every last nickel. Now, you do need to be a little bit careful because it can be a bit of a slippery slope from the standpoint of, 48 percenters can easily become 45 percenters. 45 percenters can easily become, 41 percenters, and so on and so forth. And the next thing you know, like you're pulling off trades at 6%, and you're like, why am I not making any money? Like you're pulling off trades at 11.5%, you're like, why am I not moving forward? It's like, well, I mean, you gotta give the winners a chance to win something. Like you've got to get some economic significance out of these trades. And so that's why I bring that up, as often as it makes sense, at least. And so for MES here, though, we're literally 1 point away, which is only $5 on an MES option. So let's go ahead. Let's close out of MES. Man, lots of winners today. That's not typical for the show. If you are brand new to the show and this is your first time, this doesn't usually happen. And so don't expect this in the future. You're usually going to see lots of stewing in the bathtub of filth. Like it's a little bit more regular that we might find ourselves kind of, having some difficulty. So there's MES. Now let's go to MCL. This is the last thing I want to do today. Because there's no earnings tonight or anything. I think a lot of the things are happening tomorrow and then later on in the week. Got your AMDs, and I think Amazon might be later this week, and Google is coming up in the next couple of days as well. But if I go to MCL, you can see we're tested on the call side here. We're at 15 days to go. I'm less concerned about being tested on the call side. And I'm probably a little bit more concerned about, being at 15 days to go. And so, Josh says Palantir has earnings tonight. Wow, they're still in business. They're still doing it. Okay. Palantir is tonight. We got to do Palantir? I don't know, man. Let's do this MCL trade first. Thank you, Josh. And so MCL, let's see, MCL 50, 61. So what I'm going to do, so here's what's tricky about rolling MCL. Let me click on MCL. So if you go into the cycle that we're in here, which is right here with 15 days to go, you can see that this guy is tracking to the H contract, right? If I roll out to like, March, let's just say, the next monthly cycle, which would be right here, that guy's tracking to the J contract. And so you need to be aware that the spot price is not technically not a spot price, of course, but the futures price that you're tracking to now is not going to be equal to the futures price that the strategy will be tracking to if you roll to a new expiration that's tracking to a new underlying futures contract. And so a lot of times in the oil pits, the prices are not that different, but they can be different enough that they can throw you for a little bit of a loop when it comes to positioning your strikes and trying to figure out, where the at the money marker is and kind of, making sure you have maybe a little bit of out of the moneyness on both sides of the strategy, which is what I typically try and do. And so for our purposes here, if I look at MCL, you can see the MCLH is 62. If I do MCLJ, it's 61.5. So it's 50 cents. It's 50 cents off. You have a little bit of backwardation in the oil markets, which is a little bit, I have to think about the storage costs. I think normally you're in contango in the oil markets, I think, right? I don't trade oil that often. I think that's right, but I could be mistaken. But either way, that doesn't really, the reason for it right now doesn't really matter. But understanding that J is 61.60 and H is 62, then when we go to J, like if I go to, let me delete those circles. If I just go into my positions tab and I go to roll this guy to March, if I keep the same strikes, which is fine, I could do that, then I'm going to pick up $1.49 credit. But you can see right here that, again, just looking at the actual chain itself will show you where the at the money level is. It's right here, right? It's right wherever that horizontal line is. And so I don't really want to, if I'm going to go through the process of rolling this guy out into the future, I'd like to go ahead and use the opportunity to maybe reposition my strikes a little bit since I'm now tracking to a brand new futures contract. I mean, it's maybe not brand new. It's maybe like certified pre-owned. I mean, it's a little bit, similar to the previous futures contract there. But if I go to MCL, from H to J, I'm going to roll my call up from 61 to, what if I rolled it up to like 62.5? So I roll that guy up to 62.5 just to give myself a little. I'm still going to be pretty bearish, but now I have a little bit of room between where the stock is now and where the strike is on the call. And I'm going to roll my put up. I'm going to roll my put up by quite a bit, actually, because it's not worth really anything anymore. So let's roll this guy up to maybe just inside the expected move. And so now I'm going to have on a 55, 62.5 in the J cycle. So that's going to be this guy right here. And I'm going to pick up about $1.50 for it. And so this is what we do. I mean, you get tested, you get close to 21 days to go or inside of 21 days to go, which is the case right here. And this is where you extend the duration. This is where you add more time to the trade and just kind of give it an opportunity to work, in your favor. And sometimes it will, and sometimes it won't. Sometimes it will work, SLV. Sometimes it won't work, or ORCL. And so, yeah, let's go ahead and roll this guy out. And then we'll see what's what. Let's see. No takers at $1.51. Let's try $1.49. All right, no takers at $1.49. Usually the micro oil options are pretty liquid, pun intended. But right now, they're a little bit less liquid than I would like. $1.40. Oh, we got filled at $1.48. So we went in at $1.46 and got filled at $1.48. Okay, so that's MCL. Okay, what I want to do, I'll talk about GDX. Maybe we'll talk about GDX tomorrow because I want to get to you guys, man. I see you guys in the chat. Man, look at you guys. I appreciate you guys so much. Man, look at you guys in the chat. Man, I appreciate you guys so much. I'm going to surprise you, some people at the end. Caleb, I see Caleb Howell says Banana Natty sounds atrocious. Yes, but it's also amazing. See, that's the beautiful thing about the Banana Natty. Like, it's both of those things together. Like, the juxtaposition that you have in that one drink alone, it's unmatched. It's unrivaled, right? So Banana Natty next time is on the house. And so, but I appreciate you there, Caleb. Thank you for being here. And then let's see. Well, Kryptonite is good. Says, dude, there is no such thing as too much winning. Maybe not, but yeah, this is more winning than we're accustomed to. And so they always say act like you've been there, but what if you've never been there? Right? They're like, hey, act like you've been there before. It's like, well, I've never been here before. 3 winners on the same show? Never happened before. It's over 10 years now from Theory of Practice archives. You can go back. You can check the tapes. You can run it through all your AI bots and your AI agents and your whatever else is, and you will see we've never had more than half a winner for a given show. So the fact that we've had 3 today is pretty amazing. And so, all right, let's go to the beginning of the show. The very, very beginning. Man, I appreciate you guys so much. Ashfin is in the house. What's going on there, Ashfin? Dr. Jim Time, let's go. What's going on there, Ashfin? I appreciate you, my friend. Thank you for being here and being a part of what it is that we do. Man, I appreciate you so much, man. You're certainly part of the core position. And so thank you very much, my friend. Let's see. The Preston's in the house. Dr. Jim, what can we do when we're bullish on a stock, but the puts are too cheap to sell and the calls are skewed too high to sensibly buy? You are the man. Man, well, thank you so much, my friend. Well, so this is going to be a situation where, there's a couple of different things that you could do. So you're bullish on a stock, but you don't want to sell puts. And that means you're not going to want to sell put spreads either because it's going to be even worse for you. And so you're trying to think about, okay, how can I play my bullish bias on this stock, with an options-like strategy? The 2 that come to mind are an at-the-money vertical spread where you buy it. So I'm going to buy an at-the-money call spread, right? I buy a couple strikes in the money. I sell a couple strikes out of the money. That's typically going to sell for right around half the width of the spread, give or take. And of course, depending on how wide I make the spread, that's going to obviously influence the profitability. And I want to make sure my position sizing is in check with my account size and all the things that we talk about all the time. That's the first strategy that I would consider. The second strategy is this is not really a 1-2 situation. This is more of maybe like a 1A, 1B type of thing. A call diagonal spread could also work. So now you're going into like a back month. So like right now, for example, like I don't know what stock you might be talking about, but if I just went to like IWM or something, just like the Russell 2000, if I wanted to do a call diagonal in the Russell 2000, I would probably buy April and sell March, or even buy April and sell February. So the back month would be 74 days to go probably at this point. And then you could sell February or you could sell March. You could buy March and sell February if you want it to be a little bit quicker moving. If you buy April, I think maybe I said March. So April has 74 days to go. I would probably buy April as the long call portion, where I'm going a few strikes in the money, and then I would sell February I would sell February or sell March as the short call option against that long call as part of the diagonal spread. So, remember, a diagonal spread, the way that we do them at least, you can sell them for credits and stuff like that, but we don't typically do that. Diagonal spreads are just vertical spreads that have been calendarized. So it's the same type of idea where you have a width of a spread. You want the stock to move in that direction. You want the spread to go fully in the money, but there's just a calendarized component, which gives you more opportunities to sell premium against that long call and kind of whittle down that basis over time. I would probably buy April and then sell February and then maybe sell March. If you wanted something that would be a little bit faster turnaround, you could buy March and then sell February and then go into the weekly options here, like 25, 32, 39, 46, etc., to give yourself more opportunities to sell premium if you need it or want it. And so that's what I would probably do the Preston when it comes to any bullish play and whatever you're looking at. So those would be the two strategies I would probably consider, vertical spread or a diagonal spread. Ordenu's in the house. What's going on there, Ordenu? Hello, Dr. Jim. We missed you on Friday. What is the minimum profit target for credit spreads? What's the minimum percentage? Yes. So thank you, Ordenu. Yeah, it was a shame that I missed Friday, but we were delayed, so I couldn't do much about it. Usually the minimum target, that's a good question, because the maximum is usually 50%. So the minimum, this is a really good question. I don't think that there's a hard and fast answer. And so some traders, when they're in any strategy really, which could be a vertical spread, it could be an undefined risk strategy, it could be a number of things. There are a lot of traders, and the Tasty Research team has looked at this a million times, from the standpoint of they look at it more, not so much with like a static profit target, like 50% or whatever, but they instead look at where they should be along the average decay curve for a strategy of that duration. So case in point, and I may not have these numbers exactly right because I can't think of the research off the top of my head, like the specific numbers that they found. But like when you're 4 days into the strategy, you should be up 9% on average, right? So some traders will say, I'm 4 days into the strategy, I'm up 15%, I'm overperforming where I should be. Like I'm theoretically outperforming, the average expectation to this point. So I'm going to take it off. I think that's a great way to trade. I think that's perfectly fine. It's not the way that I trade because I like to keep things a little bit simpler and a little bit more static when it comes to the profit taking. But I can respect the fact that when you have, a given profit, you want to take it off, you want to just ring the register and just move on. That's fine. So that aspect of it definitely applies to your question here, Ordenu. But as far as like a minimum target, I can't think of a percentage. I just keep coming back to the economic significance of it. So for instance, if I sell a $5 wide vertical for $2, so I'm risking 3 to make 2. 50% of max profit is $1. If it gets to 50% of max profit, I'm gonna be very, very happy with that trade. What if it gets to 10% of max profit? That's only 10 cents. Which of course in actual dollars is $10. 10 cents in the options world is $10 in the actual world. Am I going to take it off? Me, almost never. And the simple reason why is because there's no economic significance there. Now, some of you might be saying, well, Jim, $10 is $10, and I don't disagree. But when you start factoring in like transaction costs and fees and even like taxes on top of that and stuff like that, it's like, well, I don't know that that's really worth my while. Like I'm going to need a little bit more juice out of that orange. I may put that guy back on the shelf and look for something else. And so in this instance, of course, that would be just holding on to the strategy. And so that's kind of how I think about it there, Ordenu. So hopefully that helps a little bit, my friend. Wolf is in the house. What's going on there, Wolf? I appreciate you. Thank you for being here, my friend. Thank you so much. Catterday Night is in the house. What's going on there, Catterday Night? Sergio is in the house. What's up, Sergio? Seth Ellis in the house. What's going on there, Seth Ellis? I appreciate you, my friend. Finn West. Aloha, Dr. Jim. Good to be with you. What do you use to determine a portfolio's annual return? Consider several hundred options stock trades throughout the year. What do I use to determine a portfolio's annual return? I'm not quite sure what you mean by this question. I mean, in terms of like software, I mean, I typically just look at, I don't have any special software that I might use, if that's what you're asking. In terms of like computing, like, what the P&L was. Because to me, it's fairly simple. You're just looking at the net lick change. Like I look at net lick change. Like I don't look, I mean, obviously the P&L year to date or whatever is like, smack dab in everybody's faces. Like, I'm looking at that too, of course. But for me, it's all about net lick changes because net lick changes, they encapsulate everything. Like transaction fees, commissions, resort fees, like it's all in there, right? So when I'm looking at net lick changes, that shows me the actual P&L. So if my net lick started at 20,000 and now it's 21,000, like that's $1,000 after everything. Now again, there's the tax implication and whatever, but some people are in IRAs and whatever else, and there is no tax implication, at least not right now. And so but that's how I look at annual P&L. I don't look at return on capital. Personally, I think return on capital is an illusion. So I think return on capital can be very, very misleading because, you could sell the strategy for, I could buy an option for $1, right? Like buy an option for a penny and then sell it out for 2 pennies later that day or the next day. And what is my return on capital? It's 100%. So what's going to happen when I put that on the YouTube thumbnail? I'm going to get a whole lot of clicks. But what are people soon going to realize? It didn't mean anything, right? It's not actually real. I mean, sure, it's real, but it's $1. It's like, that's not really going to help me. So, return on capital can be helpful when you're thinking about buying power, efficiency, and whatever, but return on capital is never the full picture. If anything, at best, it's a piece to the whole puzzle. It's a part of the picture, never the whole picture itself. Return on assets is what I'm interested in because that shows me kind of net lick to net lick, and then I can kind of see where things are going. So anyway, I'm not sure if that answered your question. I think hopefully I stumbled upon it somewhere in there. And so let's see. Oh, Stephen Bivens, Dr. Jim, do you ever use bracket style orders like first triggers OCO? I've been trying to dial a bracket system in for scalping futures, and I would like to hear your views. Yes, great question. So I don't use them here because again, I'm doing my my trading live on the show, and so you guys are seeing all of my trading live on the show. Now, could there hypothetically be some worlds where there are stealth accounts where I might be utilizing things like that? Hypothetically, yes, right? It's possible in theory. Right. But in practice, I don't know. You'll have to wait and see if some things kind of come out into the forefront in the near or maybe distant future. And so, but yes, so we'll have to put a TBD on that full answer for now. But I obviously don't use them here on the show because I want to trade with you guys. And it's not really going to be, since I'm not doing any futures here, not really. Anyway, I'm doing futures options. It's not really applicable to options like it is with futures. And so, but yeah, I know a lot of traders like to use OCOs, and it makes sense, right? I mean, it makes a lot of sense. Like if I've got a futures trade and it moves in my favor, let's say, like I'm trading silver, right? And it moves 20 cents in my favor. So that means, that's 1 second to the next second, right? 1 second, it's here. Next second, it's 25 cents in my favor. Kind of makes a little bit of sense to maybe put an OCO order in to kind of, maybe put a stop at break even at that point, just in case this thing rips back in my face the next second, right? You're up 25 seconds the first second, then you're down 60 cents the second second, right? I mean, that's a typical, 2 second time horizon in the silver pits. And so it definitely makes a little bit of sense. But Seth Ellis in the house. Hopefully that helps you a little bit there, Stephen Bivens. I realized that it was incomplete and rather vague, actually. Seth Ellis, Dr. Jim, I have a poor man's covered call that's working, maybe too well. I'm long the July 240 short. I'm long a July 240 call. I'm short of Feb 270 call. When would you roll your short call? So 240 and 270. So you didn't tell me what stock it was. That would have been a little bit more helpful, but this is still pretty good context. A poor man's cover call, generally speaking. So you said it's working a little bit too well. So I'm going to assume that means the stock is high. The stock is up significantly. And your short call might even be in the money. Well, poor man's covered calls usually are not like investment style trades. An investment style trade is kind of like what I've been doing with Starbucks, for the last year or so. Investment style trade is kind of where okay, I don't have a predetermined exit point. I'm essentially going to be holding this thing indefinitely. And I'm just going to kind of, maybe trim some things around the edges, like here and there. I'm not really looking to, get out in this cycle or kind of take off my profits too quickly. I kind of want to let this thing kind of simmer on the back burner and just kind of go from there, right? Like day in and day out. Poor man's cover calls are not usually like that because the long option has an expiration associated with it. Now, it depends on how far out you went in the future. You said July. So, yeah, you've got, 4 months? Yeah, 5 months, I guess. I mean, that's like a, not super long term, of course, but it's not really short either. Generally speaking, in that scenario, when I get a nice winner on my hands, I'm probably just taking the whole thing off. I'm probably just closing both of them, Seth. So I'm closing long and the short. Now, if you wanted to leave them on it's a situation where it's kind of like a covered call. And a lot of times when I have a covered call on, that's kind of like an investment style covered call. This is where, when the stock runs up and the short call's in the money, first of all, there's no reason to panic or anything like that because this is a good scenario for you. This is not a bad scenario for you. This is a good scenario for you. So this is very much a high quality problem. But then what do you do? Well, typically, if the short call goes, like, let's say it's just at the money, I'm almost always going to not do anything in that scenario because that's actually the Goldilocks price for me. So if it just stays there, then I'm going to be glad I didn't do anything. Right. And obviously, if it runs up, that's not a bad outcome for me because now all of a sudden it's in the money and now I'm making even more money because the delta on the short call is not going to be 100. It's going to be 50 or whatever if the stock is right around that part. And then if it goes down, obviously, the short call expiring out of the money is not a bad outcome for me either, really. And so essentially, if the stock has run up to right around the short call, that's a great outcome for you, basically across the board. Some better than others, of course. So now what happens if the short call goes in the money? Well, this is another situation where I'm not typically in a hurry to do something because I understand, okay, it depends on how much time might be left. You said the short call, February 270. There's still a decent amount of time left. It would depend on how far in the money it might be. But if there's still a good amount of extrinsic value to be had, not doing anything is gonna earn you that extrinsic value. By not doing anything, like you are on track to earn or profit that extrinsic value. And so remember that, like that's really, really, really important. And also remember, if it is in the money, you actually have protection. You have buffer down to the short strike. Now, what are you giving up? Like, if it runs, like, let's say the stock, this is such a good question. Let's say the stock is at 285 or 290, right? And the short call's at 270. So now you're in a situation where maybe there's not that much extrinsic value left, or maybe there still is a little bit left, but you're trying to figure out, what do you want to do in terms of maybe rolling it or whatever. If you don't do anything, what are you giving up? Well, think about what would you do if you did something? You would probably, this is maybe not the only thing you could do, but it seems to make the most sense to me. You would take the short call and you would roll it out and you would roll it up, right? That's typically going to be the standard move. And I think it's the right move. If you're going to make a move on like an in the money poor man's covered call or like an in the money covered call for that matter, kind of the same thing in this context. If I roll up and I roll out, then I'm going to be in a better position if the stock goes up. If the stock continues to fly and it continues to run, I'm going to be in a better situation to handle that. But if the stock cools off or the stock comes back down, I'm going to wish I had not done that. I'm going to wish I had just, stood pat with the position that I had on. And so with my personal belief of kind of the cyclicality of the markets and the ebb and the flow and the back and the forth, I'm usually very patient with rolling that short call out and then up. And I typically wait until I absolutely have to do that before I do that. But just remember there, Seth, great question. You're in a high quality situation here. This is a high quality problem. So you really can't do, can't do too many things, too wrong in this scenario, in my opinion. But wow, are we done with the show? Man, we're just about done with the show. Look at you guys, man. Trader Nate's in the house. Hey, Will's in the house. Man, look at you guys. Dexter's here. Man, you guys are amazing. I appreciate you guys so much. I see Ranch in the house. I Pot Touch in the house. Man, the Event Horizon is here with the NASDAQ up 225. And so I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market, Watch option trades today.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello everybody, Tim Knight, and it is Monday. Well, we had quite a weekend, I would say, for all kinds of reasons. And it was interesting because I was watching the IG weekend data, which is that and crypto, pretty much the only game in town on a Saturday and early Sunday to see any hint of what's going on. And it was down all weekend. And what was kind of exciting was that the market gapped down on Sunday, not massively, but nicely. And then it started to rally. And I was like, oh, I guess it's going for a gap fill here. And it did. It filled the gap and a little bit more, and then began falling. Then it really started falling. And it looked weak, and Bitcoin was falling to pieces. We're going to look at that. That's going to be our first chart that we look at. And then, of course, it started to stabilize and rally. And we are up across the board. This is basically the exact opposite of what happened on Thursday. As we approached Thursday, I thought, oh, Lord, bears are going to get creamed. And it was a fantastic day. Today, I thought, well, this is going to be like a bear party. And just the opposite. The bulls are having a ball. So that overnight trading can be very misleading. Now, let's jump into the charts because I really want to focus on Bitcoin here. Now, longer time viewers know I don't trade crypto. I did years ago, but I don't trade it anymore. I don't have a high regard for crypto, but as a chartist, I love it. It's a very chartable creature in whatever flavor. Now, I'm in the business of predicting the future. And my speculation, as we were down in these depths, was we would recover to, I said it over and over again, 98,200-ish, somewhere around there. And it eventually got there. We peaked here. And these are the futures, but they are 98,200. And so just perfect. Just nailed the recovery, called it in advance, it got there, yay. And then it started to weaken. And as it weakened, somewhere around here, I decided to be conservative. I mean, I don't like to shoot my mouth off too much. I like to pad my predictions with a lot of time. I felt we were going to lose $10,000 in a week. But I said, no, we're going to lose $10,000 within the next month. Give myself a lot of insurance there. It only took 6 days. And it really got going last night because my prediction for support was 75,000. Why? Why 75,000? Well, because that's as low as we got back on Liberation Day. I'm rounding a little bit. It's, a few pennies here and there, but let's just call it 75,000 for simplicity. And the bottom last night was literally 0.1% higher than the Liberation Day bottom. So that worked out too. And now we're starting to rally. It doesn't look that way because the futures is down so hard because they're futures. It's measured based on Friday's close. But we are off the low several $1,000s. Okay, great. You nailed the top, you nailed the bottom. What's next, bright boy? Well, I think what's going to happen next is, yeah, it'll rally. And the ceiling on this will be in the, let's call it 85,000 at the top. Lower 80,000s, but 85,000 or so. And then it'll resume selling. And then people start sweating it out again. Then I think it'll break 75,000. That's what I'm believing on this one. So that's my next guess. We're going to rally, and it won't get past 85,000, and then it'll start to fall, and then for whatever reason, we'll crack under that 75,000 support level. So that's what I think is next. I think it's important whether or not you trade crypto because it informs the psychology of all markets, I believe, in general, and very much including equities. Ethereum is also down hard, and it's also stabilizing somewhat off of its own lows. There are many things that gall me about the crypto crowd, not the least of which is their preposterous predictions about just how high they will go, and they just keep trying to outdo themselves, even though they don't happen. Bitcoin's going to 1 million, doesn't happen. You know what? It's going to go to 2 million, doesn't happen. It's going to go to 5 million. It's like, I guess you're clinically insane, It is. Now, I'm not 100% sure that we'll never cross 6 figures again, but I believe it's within the realm of possibility that Bitcoin will never see $100,000 again. Possible. Don't chisel that in stone, but it's a possibility, I believe. Although the crypto bros would consider that absolutely ridiculous and out of the question. So yeah, Ethereum down, Bitcoin down, et cetera, et cetera, et cetera. People were especially interested in the dollar level of Bitcoin last night because Michael Saylor has accrued tens of billions of dollars worth of Bitcoin by way of debt and an average cost of something like 76,000, something like that. Again, I'm approximating, but it's close. And there's a lot of chatter as Bitcoin was like at 78,000 of this guy's accrued all this Bitcoin over 5 years and he's got a 2% profit to show for it. Geez. A couple hours later, it's like, that 2%'s gone. It's a loss now. So it's an important level to folks just because that's kind of the red/green mark for strategy. As far as MSTR itself goes, it's down, not surprisingly, from Friday. Although not, it's not crashing or anything like that, but it's down about, I think, 75% from its peak back in, I believe it was December 2nd, 2024. And then I didn't realize this, but Mr. Tom Lee also has his own, I don't know if it's entirely his, but his own crypto company that he's associated with is BMNR, Bitmine Immersion, something. And this is down almost 10% as well, because it's not, and forgive me if I said Bitcoin, it's tied to Ethereum. It's very tethered to Ethereum. And Ethereum's also down, so BMNR is falling down hard too. And we'll all recall that amongst Tom Lee's countless predictions, he declared on January 31, Bitcoin would be 180,000, and he missed it by like 100,000. So Ethereum sinking, Bitcoin sinking, and I think that will stabilize, I don't know, maybe a few days or something like that, but I don't think 75,000 is the ultimate floor by any means. For myself, I was very excited about today because I had an irresponsibly large position in FNGD, which is the triple inverse against the big FANG stocks. I'll just cut to the chase. I sold this morning at a little profit. I made a few $100 off of it. I thought it would be just like, pick out your Lambo color. I got out with a few $100 of profit, and I'm glad I did because it ain't doing nothing. I was actually somewhat weak earlier today. It wasn't too dreadful a day for it, all things considered. And this is a leveraged instrument. But I thought this was going to be a really exciting day for the bears. No such luck. But we got a lot of earnings this week that could help inform that direction. But that was my loony trade. I got out of that. At least I was in UVIX. That was the other crazy one I was thinking about. I did not get into that. Good thing too. This is the double X long based on volatility. This is down almost 10%. So for whatever reason, I imagine because we're not bombing Iran, volatility has left the building, and so UVIX is down pretty hard. NVIDIA is not reporting for a while. You'll recall NVIDIA has a weird earnings cycle. They report weeks and weeks after everybody else does. They are down today, about 2.25%. And this rather sloppy topping pattern is still intact. Maybe it'll complete. I'd give it like a C- D+ in terms of quality and clarity. But yeah, NVIDIA for the moment is helping out one or two bears there with some weakness. And SMH, which is the general semiconductor ETF, is up. It's defying NVIDIA's weakness because most semiconductors are up on the day. But you'll note, and this is generally true with tech stocks, that the past few days have been a series of lower lows and lower highs. This may have exhausted itself on Thursday. Let's hope so. Yeah, the bulls are just definitely fighting back today against what had been a real big sell-off last night. We can see this reflected also in the cubes. We've broken the trend line with some gusto here, and red bar. Big old bullish engulfing pattern today on the candlestick. And so long as we stay under the trend line, things still look pretty decent in bear land. But yeah, the bulls are mounting a pretty nasty counter offense there. And they're really going to be dependent upon how does AMD do Tuesday? How does Amazon do on Thursday, I think? How does Alphabet do on Wednesday? And even Palantir this afternoon. There's a lot of big earnings that people will be watching. The small caps, IWM, are also up over 1%. They did a little bit of crack and just a teeny bit of splinter here and there of their own ascending trend line. So that's worth watching. This island reversal is held. But even at today's weakest, we weren't lower than Friday. And this shows just why it was so exciting to go into today, because it looked like this may well crack. It did nothing of the sort. It opened and then rallied higher from there. Emerging markets, EEM, are up just a little bit. The big excitement, I guess, for the big country stocks was Korea was down, I think, like 5% at one point during the session. Not our session, but their session. But that shook it off as well. Now let's talk quickly about precious metals. Silver continues to sink. And it can be confusing because, like, wait a second, there's a big green number there and a big red bar there. What's going on? I believe they've had a contract change on these. So I believe that the truth is that silver is sinking in spite of what appears to be a nominal rise there. You can see this reflected a little more honestly by way of SLV, the ETF, because that's down 3.2%. When will it be a good time to buy silver again? I don't know. Something like maybe as low as 50. It could be today. I mean, I think silver's got a great future ahead of it. But one giant day of selling, I don't think necessarily clears the bleachers of all risk. It's certainly less risky now than it was on Thursday. But I'm not so sure the selling is completely over. It'd be nice to see kind of a multi-week slog down and get some sentiment much lower before I get too excited about this. ZSL, the triple, I believe, leverage bearish against silver, is up for obvious reasons, almost 6%. Gold is down on the futures, $53. It got within spitting distance of what had been kind of its Christmas low, like so. Big reversal there. We're back down in the 4,000s now, after having gotten within the same zip code as the 6,000s. So major reversal on that. GLD is down about 3 2/3%. Again, we're approaching this level. Should we crack this level, ring the alarm bells. That's really bad for metals. It should stay well above the kind of support that we were challenging late last year, but we'll see. GDX, the gold miners, is down just a little bit. So those are holding up decently. And as far as the other precious metals, the kind of the lesser traded one, PALL, palladium, is actually up nearly 2%, kind of stabilizing from Friday's craziness. And then platinum is down just a little bit, but again, much more stable than it was on Friday. USO, and I just want to, sorry to go so quickly, I just want to get through all this stuff. There's so much to talk about. Oil's down sharply because of kind of calming things with Iran. And Boyle, which is the ultra bullish on natural gas, if I'm not mistaken, is down really hard. It's lost over half of its value since Friday. Just quite the wipeout there. Just eye-popping stuff. As far as ES goes, we are up on this, about 40 points. Basically hanging out where we were on Thursday and on Wednesday of last week. Big counter-trend push from the bulls. But the only really notable earnings this afternoon is Palantir. I was short Palantir. I use the past tense. I've covered Palantir. That may be a terrible mistake. This is a beautiful head and shoulders top. If this thing plunges after hours, shame on me, but it'll make sense. I'm just a little nervous about this because this is a long range. It's been in since last July. We're kind of at the bottom of it. I've got good profits on this. Just wanted to take them. I have no position. I think it's going to fall hard. How's that for a ridiculous point of view? So I'll leave it at that. It's good to see you again. Always enjoyed chatting with you, even if it's unidirectional. And good luck out there. I'll see you Tuesday. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was not a paid, you're not getting paid for this advertisement.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Oh, my friend, we are back for the last call, and we've got E-mini S&Ps just off the highs, pretty much near the all-time highs here. We're at 7,004, about 10 points off the high of the session. We were down about 90 in the after-hours trade after the open yesterday. They've reversed all of that and then some, a big old candle here when we scroll in a little bit. You got the NASDAQ up 188, the Dow up 519, and the Russell up 24, everything up about 0.5 to 1% here. The Dow and the Russell, the strongest of the group. NASDAQ and the E-minis taking the back seat to those two. Oil selling off a bit, /CL 62.20 down $3. Big move in oil. I guess we didn't get the Iran war to pop that up. You got vol futures down a full point, 18.05 here. They've rallied about 10 ticks in the last 30 minutes, but volatility got into the 21 handle last night, into the move lower. A massive, massive vol crush that has taken place throughout the session today. Bonds down 17. We're down at 114.18. It's pretty much the lows of the session. Gold and silver have been choppy. Gold was down 200 at one point in the after-hour session. It was up 150. It's at about a $500 intraday range today. It's down 57 right now at 46.85. You have silver futures sitting right at 80. They too have had about a $16 intraday range, including the Sunday session. It's just been an absolute wild ride in both the metals here. Bitcoin down about 5,500 or 5,500 here on the futures. Spot is actually up, so it's rallied about $2,000-ish from the start of the session here. Ethereum as well, just getting hammered in the overnight session, bouncing a little bit today. It's been a wild 24 hours. I texted my dad, I was like, E-mini's down 90. We're going to be taking calls all day. We're crashing. It's over. It's done. And here we are at all-time highs and volatility at 1805. The VIX at 1650.
It's been wild for someone like yourself who astutely paid attention. I didn't even know we were down like that overnight. I didn't even look at futures last night.
That's the better way to trade.
I mean,
you didn't need to know.
Well, I'll tell you what. I'll tell you what. I will tonight because, as you say it, you look back over the last couple of days just in the ES, and on the 29th we had a 131 point range. We had a 77 point range on Friday, which I don't think really speaks to how volatile Friday was. And then we had a 153 point range today. So that being said, the ranges are getting bigger. I mean, each one of those are over 1% move in either direction. So maybe, again, we all know, you and I know as professionals here, the markets do kind of cluster up these volatility situations. Maybe this is the beginning of something. Maybe we do get an overnight move. If we do again, then it could start to lead to something, I guess.
Yeah.
I'll just go ahead and say what everybody's thinking. The market is a lot more fun when silver's moving up 6% every day. I mean, it really is. I mean, other than that, again, like you said, all the action seemed to be was in the overnight. I will say, though, Bitcoin kind of started this off, right? Over the weekend, I was seeing different reports about Bitcoin hitting some lows. And it's not moving violently. It's not at all-time lows, but it's looking very weak. And weakness sometimes begets weakness. So it might be, I chipped at some Ether. Those Ether futures are really cheap to get into. I chipped at some of those, maybe some more at some point if you get to 2,000. Like Ryan said today when we were on the show, maybe if you leave orders out there, you can get filled at 2,100. I mean, over the weekend, it was like 2,100.
Oh, yeah, you get those little spikes where you get just a quick liquidation. Maybe you get filled on one of them,
Yeah. So outside of that, once the regular session today has been fairly blah, right?
Yeah.
Sure, silver and gold were pretty weak throughout the day. They looked pretty ugly. Silver finishing a little bit higher here and starting to. We'll see if this bounce really means something and where it goes from here. Who the hell knows? Honestly, at this point, I don't know what fair value for silver is at this point. I don't know if it's 70 something. I don't know if it's 80 or 90. I'm not sure. I have a feeling we're going to find out this week. The biggest news, it seems we found out today, is that we're not going to get the jobs report on Friday.
They lost the homework again. The dog ate the homework.
Well, I guess we're in a shutdown, I guess, which I don't know. Does that mean higher prices in the market? Maybe. I don't know. The earnings are the real deal this week, though, right? I mean, again, we got another week of a lot of earnings, probably over 100 names, I'm guessing. 80 to 100 names in earnings this week, a lot of which we will be talking about. We will be doing social stuff for those. We'll be doing write-ups, so there's going to be a lot going on there. So that should be the biggest thing. But yeah, I wonder if did you pay attention to the SPX move for the end of the week? I didn't really pay attention what it was. And I don't know if it changed.
Our segment today, we had 110 points.
For Friday, for Feb 6?
Yeah.
Well, so that's only 75 now.
Yeah, that's coming pretty significantly. And Kai puts that together at the end of last week. So, you had a little higher volatility. So that'll, obviously with the vol futures down to 18 right now, the VIX at 1659. Vol has come in significantly from Friday's sell-off, and you had a little bit of a pop in vol. So that did come in, but 100 points for the week, we're seeing that in a day. I think that was a kind of a good point that the ranges have been really wide. I was a little surprised today because the MO has felt like you've had, the buy the dip early in the session, and then towards the end of the day, you kind of get the selling into it. We didn't really have any sort of selling throughout the session. We were up 40 or 50 handles pretty much from the time I got off at 10 till just now, really the only sort of small pullback. We had that one little blip at 2 o'clock where, we sold off like 10 handles. We're kind of back to there, sitting right at 7,000. A little bit more volume coming in today, a little over 1 million contracts traded. I think a lot of that has to do with just kind of the volatility that you saw last night. So I think overall it still remains like a really kind of low volume session for most of the day today. I don't know. I don't know where to go from here. I've been leaning short. I've been scalping it good. I thought I was a genius last night. Now I think I'm the stupidest person ever. You have vol down. You have VVIX down. If you're a VVIX person, I like to look at this as well as kind of just a gauge of overall volatility. We had it spike into Friday. It's back down and dead. It just seems like everything's just a buy the dip. Like that's just the way to do it.
Yeah, it does. I mean, I thought, again, I think I said this pretty loudly and a lot of times about gold and silver. And when that correction happened, I thought the market would be down. The market was down. I thought it would be a little bit more scarier. It was in gold and silver, of course, not so much in markets, actually. No. And then you're seeing this bounce here again. So, I don't know.
Fear.
To your point about the volume, I mean, I was looking at it here. I mean, ES volume is creeping up. Again, when I look back on the 23rd,
Friday was the most activity we've had in some time. Like for most of the week, it was under 1 million contracts.
Right. Yeah.
Traded, and then you get a little bit of movement.
1.9 million on Friday.
Comes back and wakes up.
Yeah, 1.9 million on Friday. 1.8 million on Thursday. 1.1 on Wednesday, and again, you just said it. We got 1.28 today, so maybe I don't know. I think we got to pay attention to futures overnight. Volume might be really picking up here, and maybe something is brewing, but I don't know.
Maybe. Well, in the big name stocks leading the market, Apple was up like $10, $11 today. I don't know if there was any sort of news there, but that's a big move there. Google has continued to be super, super strong here. It's up $5 at new all-time highs. You're getting a bid back in some of the memory stocks. Micron up 20 and change. SanDisk has one of the wilder.
That's what I was going to ask you about.
It's one of the wilder charts I've seen. I mean, to up 120-ish after earnings to basically flat by the time we closed to now back to, up where it was.
Is this thing going to 1,000?
Probably.
Is it doing the NVIDIA move right now?
Why not?
Is it doing the 2-3 year NVIDIA? When the hell was the split? 2 years ago? Maybe 2022 NVIDIA move, 2023 NVIDIA move. Is it doing that right now?
It seems.
Oh my God.
To be doing that. But speaking of NVIDIA, nobody wants any part of that. It's down $5 today. It hasn't gone anywhere. I mean, this is kind of the weird part about this market is you're seeing some of the catch up on like the memory stocks, but the big boys have not participated here, which seems to be a bullish indicator, right? If you told me, okay, market's at all-time highs, NVIDIA is, 15% from all-time highs, Tesla is 20 or 30% from all-time highs, Apple is off the highs, Microsoft is down 30 or 40% from all-time highs, I would think that there'd be a lot more room to the upside for this market to go because you expect those to catch up with everything else, but it hasn't happened. It seems like it's still the rotation.
Like, am I supposed to be doing a 400 strike calendar call spread in WDC because it's going to play catch up?
Probably.
It's only $400.
Yeah.
Like, I mean, seriously, these two names, it's I just can't even believe it. We got to probably start talking about these moves more because gold and silver is fun to talk about, but these names have had crazy moves over the past year.
Crazy.
These things were like dead in the water, dude. Nobody even cared about these names anymore, and then all of a sudden. It's wild.
You blink and you miss it.
I mean, I remember holding things in my hand that said SanDisk on it. These big, huge hard drives. It was ridiculous. Yeah. It was stupid. And now I don't even. What are they? And now so is this just chips?
They're worth more than gold.
I mean, it's. They are. Yeah.
I saw some stat where it was like the SanDisk memory like sticks by weight are like worth more than gold in there because they're so small and they're like, I don't know.
I'm throwing on a calendar spread.
Do you have any interest in any of the earnings after the close today? We've got PLTR.
I already have a position on in PLTR.
How are you playing that one?
I got a crab. I'm long. I am long March 165, and I am short 2 of the Feb 185s and long one of the Feb 205s. So I got that going on.
Okay.
I've had that on. Actually, I had a different one on before the fall in stock more recently, and then I just restructured it late last week.
Closed it, rolled it.
Yeah, I just restructured it late last week. So that's what I got. That's what I'm sitting in. What else is tonight? Anything else?
So tonight there are a ton of other ones. Tomorrow morning you have like PayPal, Pfizer, Pepsi. I was looking at PayPal. That stock I don't think it goes up in any market. It's one of those stocks that just stays in the doghouse the entire time. It's trading at 52. You have a relatively high IV rank, but I don't know what to do there. Like
who do you know who uses PayPal?
Nobody. But they have Venmo.
Yeah.
I use Venmo a lot.
Yeah. I mean, there's a lot of transactions.
Mm-hmm.
There's the
interest
card
rates
now.
being high, gotta help.
Well, I don't know. The stock is saying that none of that matters.
It's true. It's true. It hasn't gone anywhere. I mean, I was looking at selling puts here or doing like a poor man's cover call. It's not the sexiest trade. Like, I don't know. Do I sell the 50 strike puts as like a wheel? If we get down there, I take stock and sell cover calls. I meing, this is
probably the best way to
that
do
makes
it.
me feel so gross, but
Venmo is
we're gonna do it.
They only account for 18% of PayPal's total payment volume.
Venmo.
That was in 2023. That's
okay.
No, Yeah, I'm just trying to figure it out. Yeah, I don't know. I don't know how big. I'm trying to see how big they are compared to the company. But yeah, I don't know. So that's a nice little trade.
Yeah, just
something to do.
It's an engagement trade, very small. In the weekly, I did the weekly just to get it over with. If we're below 50, I'll take stock, sell calls, and we'll try and wheel that one. Later this week, you have AMD. So you have the AMD after the close tomorrow. That'll be a big one. You got Uber, Eli Lilly, Novo Nordisk, if you're playing in some of those names, some of the healthcare stocks reporting this week. You have Google on Wednesday after the close. So that's probably the biggest one of the week. Qualcomm in there, ARM. You've got
Amazon as well.
Amazon
AMD.
on Thursday. Yep. Reddit is in there. Roblox. So definitely some big names reporting this week to keep the gravy train rolling.
You got anything going on in any of this Bitcoin related stuff? MicroStrategies, iBit?
Oh, I'm choking. I bought some more iBit
I am
today.
too.
I do think this is an interesting spot if you've somehow avoided the whole way down. We're back to, kind of like the blast off lows when Trump was elected. This was like kind of where we were at. I know you know the story because Ryan's in your ear as well.
Yeah.
So I think it's an interesting spot. I as a volatility play too, you expect, if we're going to blast off higher, you might have a little bit of extra catch up here, but it doesn't have the virality anymore. It's not being talked about. I'm not getting the texts about it anymore. It's kind of lost its luster.
Yeah, I mean that happens, right? In trades, I mean it's just not the time for it.
Yeah.
Truth be told, these are the times where you're supposed to scoop a little bit here and there, right? In these situations when it's ugly, nobody wants it. I always bring up Tesla from a couple of years ago, when it was $150 and nobody wanted to touch it. I think Tony points this out a lot. The psychology of people is like really interesting. When something is really down, nobody wants it. Nobody wants to touch it.
Exactly.
If iBit were trading $70, everybody would be all over it and buying it and tripping over themselves to get into it. We just saw that with metals. So, that's not a recommendation or endorsement, but if you're kind of interested, you should be probably doing a little something here because who knows where this is going to be in 6 months.
Yeah. One of the things in reference to metals that is probably helping a lot of people today and into Friday too. Obviously, a lot of people probably had some short delta into that huge move higher and you get the big move lower. That really bails you out. But volatility has come in pretty significantly. So you have an IV rank of 72, which is still very high. Implied volatility, 95% in February, 79% in March, and it's kind of in the mid-70s in the back, which is still high. Obviously, the IV rank tells you it's high. But this was in the 100 handle just last week. So, you've taken a lot of that volatility premium out of silver, and gold is the same way. GLD, IV rank of 71 right now, implied volatility about 34. I think that was in a 40 or 50 handle in the middle of last week. But it gives you the opportunity, if you've been short delta and short volatility here, you got kind of as good as you can expect on a 2-day trading time frame. You got a huge move on Friday. That's your delta of your position. You're getting bailed out on the delta. Today, you're getting the vol crush. So now you're getting both kind of sides working in your favor. So if you had strangles or really wide iron condors, even if you're tested on the put side, you're probably a scratch, potentially profitable on those trades when you were 30 points in the money on the upside. Just a couple sessions ago, you might have been down, $500, $600, $700, $1,000, and now you're a scratch. You got to start looking at these positions. You got 18 days in February. You're looking at March with 46 days until expiration. You got to be looking at your positions today. Like, this is the spot. Can vol come in more? Sure. Can prices go down more? Sure. Yeah. But this was like a gift of gifts over the last 2 sessions.
Yeah, a really good trader friend of mine who I thought was one of the best vol sellers in the world. He would always sell vol around these times in a name like this. And most of us are like, why? Like, hell no. Like, I'm scared. Like, this is actually the time where you really want to sell the vol in this SLV. In SLV, for example.
Yeah.
Like, not just about anything, but SLV, first of all, it's very liquid. And we've already seen kind of a big price correction. I could be wrong. There's accounts where I would like to be right. in this what I'm about to say, but I don't think this is going back to 100 right now. I mean, this is not. I don't think there's no chance it's going back to 100. It could go back to 80 plus, but I think you're going to see these expected moves collapse as they should. I mean, right now, if you look at the expected moves in this, the 9-day was like a 15% 15% move, like in either direction, average range. It was crazy just because of the huge move that we've had over the last couple of days. That's going to calm down. Nothing moves that huge for longer periods of time. Only a few days, and then it starts to calm down. So my point is like, yeah, we've had a 15% expected range over the last 9 days. I think you're going to start to see that calm down to like 8%, then 6%, then 5%. Like it's going to calm down some.
Yeah, for sure. As we get into the last couple minutes here, E-minis have been chopping around here. 7,000, 705 is where we're at right now. NASDAQ kind of same spot here. Nothing really moving all that much. Silver's remained at 80 here. It's been a little choppy couple minutes here, but this range we've been in has been pretty tight. It feels like we're between 69 and 7,000 for the better part of the last couple months. 69.50 has kind of been my little magnet spot. I've been kind of trading towards that spot. Do you think the next big move is higher or lower from here? I lean lower, but that's my positions talking.
I mean, I would, absent of any crazy news, I'd say higher.
It's probably the smart. That's the smart.
I mean, you know, I thought I would have, if you'd asked me this a week ago, I would have said lower. Yeah. Because I was banking on the idea that this silver and gold collapse was going to take the market down. Totally. I'm really surprised that it didn't, honestly. Totally. I thought the market would have been down way more when those collapsed.
Yeah, totally.
Really surprised. Oh, nat gas. We didn't talk about that today. First of all, I'm glad I don't have a nat gas position anymore. Sorry if you do. But huge move to the downside with a little bit of a break in the weather here that we've had.
Yeah, natty gas, that was another, it's like all these, come on, even oil. You know,
as soon as they stop talking about snow in New York, you have to know that you have to plan for a nat gas fall. Because as soon as there's not a bad weather situation going in New York, that's all that really matters. Nat gas is going to make a move from there.
Yeah, natty gas down 25% today, and that was after the roll. So you're down, almost a full point here.
Oh, and one other thing we didn't touch on. This is 4 days in a row up for the dollar.
Yes, the dollar has been strong. Still not back to where it was prior to Trump's, I'm not watching the dollar tweet or whatever that was.
Yeah.
Really nice bounce, bailing me out on some of my FX positions, but I still need a little bit more to the upside. But yeah, the dollar has been strong here. I mean, the euro is at 21 just
it was,
middle of last week.
Isn't that funny how he said he's not watching a dollar? Powell says in the statement they're not paying attention to gold and silver. And
who's
look what
watching any of this shit? Y'all flying blind here.
And look what happened. How crazy is that? A coincidence or what?
Oh, amazing. E-minis up 38 here. Have you been trading any of the micro, like gold futures, silver futures? I've been scalping a little bit of micro gold today. It's been, I will say, like we mentioned at the start of this segment, $500 intraday range in gold, absolutely unheard of.
Yeah.
From my perspective, from trading this, it's been one where because there's so much volatility, you got to put your price in and kind of sit and figure out where your spots are. So I've been trading around like 4,700. I was buying them and then I was selling them out at 4,725, and I was putting my order to get filled at 4,700 to be long. I was putting that in, waiting for it to get hit, and then go put in my closing order. These moves, like we've been seeing 10-point rips in either direction on a 1 second basis. If you're trading these things, that's how you got to do it because it's moving very, very quick.
Yeah, no, I had an MGC. So I have an MGC call spread. Okay. Put this on with Chris. I mean, this was like a month and change ago. Like before the
hit that one.
I know. I should have closed it, honestly. I asked him one day. I was like, "What do we do? We should." I was like, "Tell me." And you know what? It was we were up like maybe $6,000 on. I was like, tell me why I shouldn't close this. And he gave, a classic good Chris answer. And I'm like, all right, fine. You're still in. I'm still in it. Now, I'm still up on it. I'm just not nearly as much as I was a week ago, of course. But but my point is like when that initially, it's the 5,000, 5,100. It's in April. So whatever. It's further out.
Mm-hmm.
When it got to 5,000 initially, like before the recent move, when it first got to 5,000, I actually got short an MGC contract thinking, okay, I got a little hedge.
Hedge it out.
Then it went up another 200. I was like, okay, I'm out of here. And so I just closed it. So I, lost 200 points on that. That's the only MGC contract I've had. Ever since then, I haven't done anything. I still have this call spread, and I'm just going to sit in it, see if gold eventually kind of settles down and maybe resumes a higher move. We'll see.
I know that skew and volatility on the upside, I think we'll remember forever.
No doubt. To people, you can put that on your resume, man.
Oh, yeah.
That goes on the resume.
If you traded silver and survived,
that,
and gold too.
Yeah.
Put gold in that. I mean, that's a once in a generation type move.
No doubt. These are the things that go on the resume for sure.
As we get into the close here, we got a minute left here. You got E-minis, same spot as they have been, 38 points to the upside. NASDAQ up 185. Got the Dow up 530. The Russell up 25. Oil down $2.93. Volatility futures 17.90. They actually just smacked them a little bit right there. Even lower. Incredible move in volatility today. Bonds down 19. They're at kind of the lows of the session here. A couple ticks off the lows. Gold and silver both selling off here. Gold's down $73, just moved about 20 handles. Silver down below the 80 strike here. Bitcoin continues to be weak.
It's a good question about direction in these futures, man. This is like we keep bumping up against the 7,000 and then we lose it. I mean, are we gonna?
It's been the spot. You've been had multiple times to sell 7,000, buy them at 69.
It's a good question. Where do we go higher? Do we go low? I mean, you just a lot of times we punch through. It takes a catalyst. Sometimes without the catalyst, a good catalyst, we sit there, we keep bumping up against it, and then they fade them.
There's our bell, my friend. You got Palantir earnings here coming up. Let me give you a time just so everybody has it. Coming up 5 minutes after the close here, so you'll get that shortly. E-minis up 35 here, 7,000 on the mark. We're going to take a quick little 90-second break, though, and come back. You got more Tasty Live coming up next with Chris and Ilya for overtime. We'll see you all tomorrow in the morning. Peace.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Stocks bounce back as the war trade comes to an end again. It's Monday, February 2nd, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down this trading session. If you're watching us on the platform, thanks for coming. Join us on YouTube. Join the chat. Tell us what you're trading, what you think of this reversal here in stocks today, where, Josh, we can go to the charts. The S&P 500 on pretty decent volume, over 1.4 million contracts traded, puts in a bullish reversal. So much for the soft open yesterday on first call. Volatility is crushed across the curve. The VIX losing about $1.25 here. Well, actually only down $1 now, but still 5.5%, 16.5 across the curve. VXG is now down 1.13, and VXH, the March expiry, that's off by 90 cents. So there's a big reversal here in vol, Ilya. Stocks are able to climb. The Russell is able to bounce back up over 1% and gets through that former December high. Mm-hmm. Good news there, but it's really a war trade coming to an end kind of day insofar as we likewise see gold continue to suffer following last week's historic pullback. We see that bonds are weakening at the long end of the curve still. We also see that, of course, our oil positions not doing so hot with a 4.5% loss as the U.S. and Iran go to the negotiating table. There are some things we have to talk about for the economy here, but I want to continue on with a conversation about Kevin Warsh, which we've been banding on about a little bit here. I couldn't help but notice that 2-year yield basically erased all of its gains from Thursday last week. And Thursday last week is when Kevin Warsh's odds on Polymarket started to skyrocket. So who knew what and when did they know it? Ilya, if the market was convinced a Kevin Warsh-led Fed was about to usher in a series of rate cuts, wouldn't we be looking at a 2-year yield that would have behaved a little bit differently today? Is the market reconsidering how it feels about the nomination of Kevin Warsh?
Well, let's just consider for a second who the market thinks Kevin Warsh is. Kevin Warsh has come out and said all kinds of things around wanting to cut rates now because he thinks we can have an economy driven by productivity. The AI crowd loves Kevin Warsh. He's a fellow at Stanford, so he's very much in that space. And he believes from that perch that we can have efficiencies driving non-inflationary growth and that we can cut rates to speed things along and make this a boom that isn't inflationary. Okay, but that's now. What do we know about Kevin Warsh at any time before he was going to be the next Fed chair for a president that wants a dovish Fed chair? He's been a hawk for decades. And a loud one in the media all the time. And so what we get in the response from gold, I think, in the selection of Kevin Warsh is maybe something like, oh, this is not a Kevin Hassett pick. This is a Fed veteran who's been at the Fed, who knows the machinery at the Fed, who has respect for the institution of the Fed as such. Okay. But also, this is not a dove. When the announcement came, it was metals that were flushed. It was the dollar that went higher. This is not a response to a dovish person coming to the helm of the Fed. So from the market's perspective, it's actually the opposite, seemingly. Or at least somebody not so blindly dovish that they would just do the White House's bidding. Not that that's even possible, because it's a 12-person committee that votes and a broader committee that discusses everything. And of course, that all shows up in the minutes. So even if you could somehow get a majority of the 12 to play the White House's tune, not possible in the current circumstances. They're going to struggle to get even Kevin Warsh on the committee. That aside, even if you could do that, even if you could get 7 of them to vote one way, you would still read the minutes and see that if that were not the majority of policymakers, never mind voters, you'd know. So this is not one of those things where it seems like the moves we're seeing today are reflective of, oh, the president got his guy, risk on. Gold, for what it's worth, was a lot weaker earlier when Asia and Europe were reckoning with Friday's action in U.S. hours. It has come back a long way and is now stabilizing. Silver maybe looks a little bit soggier.
Before we get into the metals, we did have Palantir come out just a few minutes ago. Share prices are up. They closed at 147, now at 159 and change here after hours. They beat on the actual 25 cents versus 23 expected on the EPS, 9% beat there. Revenues 1.407 billion versus 1.34 billion, so a beat by 5%. Revenues are up 70% year over year, 19% quarter over quarter. It's a good set of numbers, strong guidance. They're looking at 61% growth moving forward. So not really sure what to dislike here. Back to 160 for Palantir, and Ilya warding off what could have been a little bit more of a dangerous looking chart there with a potential head and shoulders-ish type of pattern that may have been coming together.
I don't know. My macro head has a tough time imagining that in this world of deglobalization, Palantir isn't going to do well.
I understand that completely. Ilya, with
just in terms of the headline flavor.
You know, one of the reasons why I point to this market reaction, you look to the Treasury market today and thinking about what may have transpired here in oil, lower oil prices would, on paper, theoretically, right, according to the textbook, should pass through to lead to lower Treasury yields. If for the inflation impulse, or you could even read through on growth is going to be weaker. So the fact that it's a day where oil prices are 4.5% and we see yields move up across the curve, that to me says war trade coming off and a market that cares more short-term positioning wise about what was happening around the weekend's news with Iran than really what may have been happening with Kevin Warsh. And the Kevin Warsh nomination is a convenient excuse for why the market is doing what it was doing. I would point to, oil obviously not having a good day today. We're talking about the U.S. putting more pressure on Iran to reach some sort of deal. For what outcome? Who knows? It seems like regime change is the course that the administration's on. We also did get a tariff announcement today, Ilya, with respect to India. The U.S. and India, the U.S. is lowering tariff rates in India from 50 to 15%, from what I see here.
Phenomenal.
Which coincides with a move for India to stop buying Russian oil.
We'll notice,
buy much more from the United States and potentially Venezuela.
We'll notice, by the way, it's not just us in the tanker capturing business. The French captured a shadow fleet tanker called the Grinch, and apparently, fun times. And apparently, it's one of those rare instances. So the tankers we've captured so far have been linked to Venezuela and are operations there, or have presented some sort of clear things that we were concerned about, like, let's say, drone batteries or broke some sort of rule. This tanker, its main sin was that it was a Russian shadow fleet tanker. And so this is a new front, perhaps, in this story. Let's point out here, we've seen this movie a mere weeks ago. The breakout in crude oil has not been overturned. It's retesting the former swing high as support. What happened when we didn't attack Iran that one weekend where we thought we would? Came back, retested former resistance as support. And what did we do after that? Rallied. What are we seeing here? Another stair step. Now, maybe it's not another stair step, but it sure looks like one until it isn't. And so for me, just looking at the price action here, I don't think the trend in crude oil is at all changed. It's pointing higher. This is one of those times where trend followers go, oh, look, a pullback to the trend. Maybe I should be adding to my positions here. And that's certainly my mindset.
Do see oil even out over the past few hours. IVR is still in 50, so it's not like this is a total collapse, and the market is completely telling us that this whatever around Iran is finished, I would.
Oh, it's not
point
finished
to-
by a long shot. But that's
I would point to the
exactly the
volatility.
thing.
Well, the volatility here is what informs us of that, because if we think about where we were, a little bit over a week ago, Ilya, we're talking about a market that's 2 weeks ago, in fact, gearing up for, guess this is really happening, right? And IVRs jumped from the 20s, which was fairly consistent with where we had been throughout early January, December, November. IVRs in the 20s to this new higher regime where it starts. Okay, Maduro's the first kick to get us out of the vol lull, and then now we have our second kick with Iran. If this was really the end of the road, we would be looking at IVRs probably back in the teens or 20s again, as opposed to just leveling out in the 50s. So feels like short-term repositioning. People were getting jazzed up by the rumor at the end of last week. We have a sell the news here at the start of the week. Sell the news. Again, if it's a war trade going on, it's going to be treasuries down, oil down, gold down, stocks up, and you get the 4-for-4 flush in terms of that thematic view. I'm curious because while, you and I have had different experiences in silver recently, good for the first half of January, bad for the past few days for me. You've had quite the little run here. What's the plan on how you are addressing this short silver position that you've been working on for the past week or two?
I'm not touching the short silver position, but I have started to dip a toe back on the long side with gold. I sold puts today in GLD. I think volatility coming out of that market and things settling would be good enough for me, but I want to have that exposure with a bullish bias, because just like in crude oil, the story is not over by a long shot. Neither is the story in gold. The story in crude oil is about loss of supply to China if all of this clamping down on shadow fleet activity continues, not just capturing the tankers, but certainly that in conjunction with Venezuela, in conjunction with there being something like a popular revolution in various stages of development in Iran. That's why it's not over by a long shot, because it's the people of Iran that want this revolution. It's not being imposed from the outside. So whether we get involved or we don't, the revolution is something that's occurring. And the uncertainty around Iranian supply is something that's there. All of that comes together to a China that's going to have to go elsewhere for crude at market prices. So the oil story isn't going away. The gold story is much the same. It is an alternative way to transfer value in a world where the US and China have set a stage for deglobalization pretty much across the board. This is not just a US-China thing either. Other countries are taking their cues. They're starting to have some trade tensions amongst themselves because the norms are breaking down and the enforcement that typically came from the US isn't there. On the contrary, the US is going the opposite direction. So the story in gold isn't going away just because we have a new Fed chair. In fact, the story in gold hasn't been about the Fed for a year and some change. It's completely decoupled. It's now its own speculative narrative about the state of the world. And so when we look at what's going on here next, if there's going to be some sort of settling of volatility and we're going to digest this Warsh news and think about, oh, well, he can't be that much of a hawk. It's the president who's nominating him. And surely he has extracted some level of promises to at least advocate the dovish view. Surely the president will be upset if that isn't the case. Let's not forget, Jay Powell was nominated by this president. So when we look at then what's going on, if I'm going to do anything like look for the dust to settle in gold, that is, to be short volatility, then I'm going to do it with a bullish bias because perhaps we're finding some support here. Certainly the price action seems to suggest that gold has found a former resistance come support at a swing top and a series of them going back to December there. And perhaps we're finding our support there. Perhaps the correction is already complete. But I just want the volatility to settle. Silver, I'm not so sure I'm ready to abandon yet. It needs to cross some more Rubicons on the upside for me to pull the plug on it and go the other way.
Yeah, silver here. I like always throwing the 618 Fibonacci retracement. In this case, we got to go 38.2 for that just because of how I have it measured. But a trend isn't dead until it crosses phi. And so the inverse of phi, excuse me. So we want to, if I had drawn this from top to bottom, right, it would give us a little bit of a different measure. But the point here is that where do we find support? We retrace about 61.8% of the rally, and then that's where the retracement ends. So technically speaking, the bull isn't dead yet. It's close.
Right.
It's close. It's on life support.
Yeah,
but technically this move isn't dead yet. So we'll have to keep a pin in there. Hey, Ilya, I was looking at stock market action today over the course of the day, and I couldn't help but notice that there was one sector sticking out more than everything else. Thematically, transportation and logistics. There's a lot of good things that are going on in terms of like gaming hardware, for example, or PC and devices. Same thing for semiconductors. Memory, like Micron and Seagate, had fantastic days. Micron itself, as we continue this ever unyielding search for memory, up 5.5%. But we haven't really talked about what's happening economically, how that's filtering into the stock market, just generally, oh, growth is this and unemployment that, inflation's here, so the Fed's not going to cut rates.
Right.
But I couldn't help but notice, even after today's Atlanta Fed GDP Now growth update with Friday's New York Fed Nowcast update, we're looking at a 2.74 to 4.2% Q4 GDP range right now as we get ever closer to that official first release later on this month. I bring that up because I saw that the Dow Jones Transports Index today, DJT, the original DJT, that's up 3.15%. Dow Jones Transports are breaking out to fresh all-time highs right now. Individually here, it's air cargo and trucking that are leading the way. Names like FedEx, for example, pushing to the upside in dramatic fashion, up 4% today. Or over in the trucking space, we can go to ARCB, ArcBest, again, surging up 10.6% today.
Mm-hmm.
I know oil coming in is usually good for companies involved in transportation and logistics, but rallies like this with the transports moving up to such strength, Dow theory stipulates when transports are leading like this, it's difficult to get too bared up on equities at all. So how do you parse this? How do you make sense of the fact that we have some of these transportation and logistics names absolutely lifting off and surging ahead right now when there are so many other concerns in like software, for example?
We'll take a look at what we saw from the economic data today. The ISM manufacturing PMI came out, and I think we get a sense of exactly what's going on here. The expectation was that we were going to get another contraction. In fact, the manufacturing sector had 10 months, consecutive months of contraction last year. Well, January, we get the strongest reading for U.S. manufacturing growth in quite a long time. I mean, we'd have to go back to August 2022 to get something that's similar. And when you look at the numbers, new orders surging, just absolutely off the charts, actually. New orders here at the strongest since February 2022. The employment index is still in contraction, but less so. A slowdown in the pace at which that sector is shedding jobs. In fact, the slowest shedding of jobs since January last year. The price component, a little bit hot, but not really accelerating in a very scary way. So,
did you see this chart from Nick Timmeros just now? He tweeted this like an hour ago. You mentioned that the new orders index was surging.
Yeah.
Adobe's, this is from UBS. The Adobe Digital Price Index, which covers prices of items sold online, rose in January by the most in its 12-year history.
Right.
So we have that data point. We have the data point of new orders.
I mean, manufacturing is surging. So I think, according to the ISM data,
anyway. Well.
So yeah, right. So if you look at things like a UPS, you look at all of these transport names and you go, well, surging manufacturing is about goods. these are who move goods. So when you see the outperformance in DJT, the original DJT, you look at it and you go, okay, so why is the transport component outperforming? Is this a story about the business cycle? Certainly seems to be. And if it's a story about the business cycle, then what rates are we cutting exactly and when? And so, but the markets want those cuts because, again, the markets don't want the cuts for economic reasons. They want them for policy volatility makes people uncomfortable reasons. And that's been a story we've seen all year last year and again this year. The markets aren't happy when the Fed doesn't cut, but the economy says maybe this isn't the time. In fact, crude oil is up. The economy seems to be doing okay. You mentioned the Atlanta Fed GDP now. It was revised down recently.
Look at Caterpillar, 5% today.
Right. This is not an environment where it's easy for a Fed to go, yeah, let's cut rates. Clearly something is soggy here. Moreover, cutting rates in this environment isn't something that's necessarily going to give you more jobs. We got that story from Chris Waller saying, oh, we have to cut rates because there's been zero jobs growth. Yeah, but there's also not been layoffs. The absence of jobs growth is not about companies saying, we don't have demand. It's about companies saying we are uncertain because of the policy environment and because demographic change from baby boomers to smaller generations was put on steroids basically after COVID. Sure. And so you take all this together and you go, well, you cut rates, fine. And how is that going to give you any more jobs? No, it's just going to turn into inflation. And that's precisely the concern.
Well, I think we have to look at this market today and we see how trucking, air travel, like air cargo as a sector is up 4.18%. Trucking up 6.76%, air travel 2.69%, warehousing 2.64%, infrastructure 2.16%. Next gen logistics and transport, which has names like Google, Lucid, Lyft, Mobileye, NVIDIA, Rivian, Tesla, Uber, that was down 1.03%. So I found space tech as a group was down 5.47% today. EVs were off 3.1% thematically. So you can almost see like atoms over bits, right? There's a desire for, even in the equity market space, this ongoing desire for assets that have real tangible things attached to them and not that aren't just pure AI plays. Although when I think about this market, Elio, when I think about the fact that the Dow transports are leading, when we look at the semis, your analog, your memory and storage chips, and analog 3.1% today, memory up 4.9% today. A lot of the stuff that is overvalued, that's connected with debt, not doing too hot, but the things that are responsive to U.S. economic growth and this earnings cycle, they're holding their head above water. So I don't want to discount the fact that today S&P 500, for all of the hand gnashing, what do we see here? Teeth gnashing. We do close above Friday's high, which having moved below Friday's low, that gives us a bullish key reversal or engulfing bar of sorts. I don't know if this is technically after a little bit of a pullback and it does occur at the low. SPX, for what it's worth, that's not quite there. 69.70, 644, but second highest close in history for SPX. Although if you look at SPX versus ESH6, SPX is a little bit more daunting than ESH6. I'm betting on the ascending triangle. But I think about it, put this full picture together, Ilya. The decline in vol, the sector rotation here today, semi still holding up, transport logistics holding up, hardware actually holding up. I think we're going to try at least once more to the highs. We're going to make an attempt. Maybe this is the attempt.
I think in order to have that conviction, I want to see the market have it first. And everything we have seen since October has been no dice. we're still looking at those October highs where the Fed chair chastised markets, and we still can't break them. NASDAQ tried and failed. Russell is perhaps the closest to having actually secured a breakout, but it's pulled back basically to where that breakout occurred and is trying to hold there. So, and that's the one that's the most sensitive to the economy rather than sentiment and all of these things that seem to want protection from policy uncertainty and so want rate cuts. If the S&P actually breaks out, okay, let's go. I will happily flip to the long side. It's digested in time for months now. Valuation has been meaningfully reset relative to speculative appetite. Unless this cracks, because the price action says, whatever good news you got for me, you got supportive fiscal policy, supportive monetary policy, all manner of things going for the markets. Nope, don't want to rally. I think you have to respect that price action.
Ilya, final closing thought here. Palantir with a 149 PE, as someone noted in the chat. The fact that it's able to continue to rally here, I think this is a good litmus test for how appetite will be going into this week. Maybe no non-farm payrolls report because Trump's saying that he's working with Speaker Johnson on avoiding a government shutdown, and Minority House Leader Jeffries is saying that he doesn't foresee Democrats lending Republicans any votes to get this bill passed through. So, Ilya, I'm sure we'll find out more as the time goes on today, tomorrow. But for now, overtime is out of time for this Monday. We'll be back, same time, same place tomorrow afternoon, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Stick around, though. Ilya's sticking around. He's here for Macro Money. Up next.
Hey there, everybody.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk.
What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We are back to economic data after last week's impressively volatile market activity. Looks like things are settling a bit, and we are going to try to figure out where we go now that the dust is maybe starting to level out. And as the focus comes back to the economic calendar after that interesting Fed policy announcement and a new Fed chair bit of news last week. This is Macro Money. I'm Ilias Pivac, head of global macro here at Tasty Live. And what we're going to do here first and foremost, as we always do, is take a look at the way that the markets performed last week, what the data means for sort of how we are set staging-wise for this week, and then see if we can't make some sense out of what could come next. So if we look at the breakdown for stock market performance, it really wasn't all that impressive. We have a net gain of 0.3% for the S&P 500. That's after a 0.4% decline the prior week. The NASDAQ is the inverse picture, down 0.3% after a gain of 0.2% the prior week. So stocks on a weekly basis have basically gone nowhere for 2 weeks. There's a little bit of shuffling in yields. The 10-year up 0.2% last week after a 0.1% rise the prior week. So a little bit of a nudging higher. At the front end, things are a little bit soggier. That's ostensibly after the Fed said that even with seemingly ample evidence that the economy is doing better, that concerns around employment are fading, they're still in a mood whereby rate cuts are the path of least resistance, albeit not soon. So the key comment there from Fed Chair Powell was nobody on the committee expects that this is the time to be hiking rates, and that the base case is still that there's some amount of easing that's on the menu for this year. So the situation at the front end, a little bit mobile here, down 2.1%, but ultimately not the biggest of deals. Crude oil, of course, continued to march higher, and with emphasis. We had a little bit of a pullback here to start the new week, but last week a jump of 6.8%. That's after the preceding week's rise of 2.9. So there's a trend that's developing here in crude oil, and we've talked about it at length. Of course, the idea that what you're seeing is a set of circumstances that's coming together to disrupt illicit oil supplies to China. That is to say, sanctions busting oil from Iran, from Russia, from Venezuela. Whether the U.S. becomes involved in Iran or doesn't, Armada in the Persian Gulf notwithstanding, the key question here is Iranian crude supply as reliable today as it was some weeks back? Of course, the answer is seemingly obvious, no, because as of December the 28th and running for a month now, there seems to be a popular uprising ongoing in Iran. It looks to be off the streets for the moment after a brutal crackdown. Tens of thousands of people allegedly killed in these crackdowns. But revolutions don't happen overnight, and the situation continues to teeter. Tehran is scrambling to have a conversation with the U.S., lest Washington decides to get involved. So this is all still very much in flux at the same time that the U.S. and now France are hunting Russian Shadow Fleet tankers. Now, France has seized one. The U.S. has already seized 6. There's still, of course, quite a few of them out there, but the message is clear. Moreover, we also have, of course, the decapitation in Venezuela. And the Trump administration saying, oh, sure, China can have Venezuelan crude, but they got to buy it at market prices. Now, sanctions-busting crude, of course, is sold at a steep discount because it can't come onto the open market. So we have a situation here where, let's say something like a fifth of global supply is this shadow fleet supply. That's at least according to the numbers quoted by The Economist. And there's really only one buyer large enough to consume that much oil. And that's, of course, China. If China has to then replace this supply, or a big chunk of it, by going to its other non-sanctions buying suppliers like Saudi Arabia, like the rest of the Gulf, like Iraq, like Brazil, like Guyana even, well, then they're going to have to buy at market prices, and they're going to have to tap supplies that we're not expecting them to be there. And for that supply to meet this extra demand. So until output catches up, there's, of course, all this talk about an oil glut this year. Well, certainly the markets aren't behaving that way, and it's because maybe we don't have a glut if, in fact, China is forced to do this. And that's not a story about whether the U.S. will or won't get involved in Iran over this weekend or that. It's a much larger narrative. It's a similar story in gold, where we get a pullback last week after an explosive push to the top side. The prior week, of course, was a rise of 8.4%. Here we have a decline of 4.7%. Almost all of it happens on Friday, when we get a historic sell-off after the news that U.S. President Donald Trump is going to nominate Kevin Warsh, former Fed Governor Kevin Warsh, to be the next chair of the Fed. Ostensibly, the way that this is going to work is the place being kept warm by Stephen Meehan is the vacancy on the board into which the nomination would advance. So Stephen Meehan would go back to the White House, and Kevin Warsh would be nominated into that vacancy on the board because, of course, although Fed Chair Powell's spot as chair is up in May, his tenure on the board continues until 2028. Unless, of course, he chooses to resign. Under the circumstances, that seems unlikely. So we look at the situation here and say, okay, who is Kevin Warsh? Well, the tumble in precious metals and the rebound in the U.S. dollar on Friday would suggest that the markets are paying much more attention to what Kevin Warsh has said over the decades since the 2008 financial crisis when he was a Fed governor, rather than what he's been saying most recently, which is making the case for the president's dovish instincts. Because Kevin Warsh is a loud and on-the-record hawk for decades until his recent change of mind. And so what we have here is perhaps the expectation that, sure, we could have nominally lower interest rates in the short term to placate the White House, which is what, of course, the president wants and what he's made the litmus test for who he's going to nominate to Fed chair. But Kevin Warsh has been arguing for ages that the Fed's bloated balance sheet since the 2008 financial crisis is a mistake, that there is way too much QE, and that that balance sheet needs to shrink. It seems to want lower rates in the short term, but also balance sheet reduction at speed. And the markets seem to clearly look at this and go, okay, well, so we're going to have liquidity contraction. We're going to have a stronger dollar. We're going to have weaker precious metals. At least that was the knee-jerk reaction. Now, of course, as with oil, the story in gold is much longer term. It is really more about a third non-sovereign way to transfer wealth and just move value in a world where the dollar is increasingly seen, along with a lot of the other fiat currencies and alongside the Chinese yuan, as another element of sovereign power in a deglobalizing world, where currencies are, and monetary policy is to some extent, a function of governments introducing sanctions on each other, introducing tariffs that block each other's market access, and otherwise compete in ways that didn't occur before, when there was a respect for the World Trade Organization and for norms that were enforced largely by the U.S., having been created by the U.S. for the most part. Well, with the U.S. seeming to go the other way, all of those norms are breaking down. Gold is then emerging as a necessary non-sovereign way to transfer value that doesn't have to rely necessarily on settlement in this sovereign set of rules or that. And that story probably continues despite this pullback. Dollar a little bit weaker last week. The euro up 0.5%, the yen up 0.8%, largely earlier in the week. But of course, the greenback goes a long way to trimming earlier losses around this same Kevin Warsh news. Bitcoin showing it is neither risky asset nor some sort of a digital gold anti-risk animal. It just continues to sink. After a week down 6.4%, this time it is down 6%. And with this, we look ahead to the coming week, where we have quite the assortment of event risk. And of course, on the US front is where we look first, but there's a ton of news even outside of the US. We're going to get the RBA monetary policy announcement due today, just in a matter of hours. The expectation is that we're going to get a rate hike from 3.6 to 3.85%. The economy in Australia has been impressively buoyant recently, and the story here seems to be one where inflationary pressure is building. We'll see what that does for the RBA's guidance. As it stands, we are looking at an outlook for this year where this is not the last rate hike that we are expecting to see out of Australia. As a matter of fact, on the menu for this year, 45 basis points in tightening, of which this will be the first. So at least one more rate hike seemingly in the cards at some point this year after this one. So watching what's going on here, reading the tea leaves of when that rate cut might be coming in, whether that rate cut still makes sense. Of course, Australia is very sensitive to all things China. That is its largest export market. And all of this tension with the U.S. is surely not helpful. So as we look at all of this, the question becomes, well, is it still one more rate cut that's a rate hike rather that's coming or not? And that'll be an interesting point to consider, and an interesting question for the Australian dollar, no doubt. Also, we're going to have monetary policy announcements from the Bank of England and the ECB. Looking at the ECB here, or the Bank of England here, rather. First, we're looking at 37 basis points in rate cuts this year. That's at least one cut and approaching better than even odds for a second. We'll see what the conversation at the Bank of England is, and most importantly, the voting pattern on the Monetary Policy Committee to see how this breaks down. And then for the ECB, nothing as far as the eye can see. The markets don't expect interest rates to change at all at the ECB this year. We'll see what the guidance ends up sounding like. But of course, the main story isn't the Bank of England or the ECB as far as central banks go. It is still, shock of shocks, the Fed. And that's what we're going to be most interested in from this week's economic data. We've got the ISM manufacturing numbers out today. They end up looking explosively better than expected. Taking a look here, we have a surge in manufacturing. In fact, this is actually the strongest that we've seen manufacturing since the middle of 2022. And it's coming without a tremendous pickup in inflation. The prices component here still relatively elevated, but we can see it isn't going too far in the wrong direction. We can see we've gone to 59 on the price index here. So a little bit higher from 58.5, but lower than expected, which was 60.5. So all of this buoyancy isn't translating into inflation pressure quite yet, but neither is it really going the other way. New orders in the meantime surging, employment contracting again, but at a slower rate. And so you have a story here of a manufacturing sector that looks much, much stronger than anticipated. Markets were looking at 48.5, which in the logic of PMIs would be another contraction. 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And here we have a manufacturing sector that is roaring back to life after 10 consecutive months in contraction territory. Services are expected to cool a little bit when those numbers come out later in the week. And of course, that's the most important number because something like 80% of U.S. employment is in services and close to 70% of the overall economy's output is services, whereas manufacturing is somewhere in the area of 20, maybe a little bit more. And so as we look at all of that, it seems like the case for rate cuts at the Fed might be weakened. Later on in the week, and of course, the capstone on our U.S. data for the week, coming Friday, is the U.S. jobs report from the BLS. The expectation is that we're going to get a 70K rise in jobs, in non-farm payrolls. That'll be a little bit of a pickup from the 50K in the prior month. The jobless rate seen holding unchanged at 4.4%. And the most interesting thing here then starts being, well, what does this mean for policy? Well, if we look at the sort of Powell haircut model that the Fed chair has introduced to us late last year, where he said, look, NFP is overcounting by something to the tune of 60K. So if we have a number that's 70K in the forecast, it's a 10K number actual. Now, that would still be better than what the Fed chair said was about the trend average that they were observing. Fed Chair Powell was saying we have a average for NFP running at about 40K a month, minus 60 is a loss of about 20K on average. Well, this would be a positive number that would reverse some of the concerns about the labor market that you saw right here. Of course, the Fed was starting to cut rates as you started to dip into here in the fourth quarter of last year, and these adjusted numbers started to look negative, largely because we had the government shutdown in here. We saw this particularly aggressive spike, but at this point, we would be back to positive territory and better than the Fed's sort of adjusted baseline, all of which seems to suggest that we could be in a situation where the Fed is inspired against cutting rates. Meanwhile, the markets still want their rate cuts. They've got 48 basis points on the menu for this year. That's very much erring on the side of 2 cuts. We can see in the layout here for when those cuts are arriving. The first one is expected by June. You can see that right here. And the next one by October. Meanwhile, the Fed's forecasting still calls for just 1 cut this year. So the Fed and markets agree that there's 50 basis points on the board between now and the end of 2027, but the Fed wants to give us 1 cut this year, 1 cut next. The markets want their cuts now. And with the economy as buoyant as this data seems to suggest, the question then becomes, well, why? Why is it that the markets want rate cuts when the economy seems to be doing relatively well? And this latest set of manufacturing PMI data certainly seems to suggest as much. Now, we've argued that the reason that the markets are so concerned is in fact this: dramatic volatility in economic policymaking. This is the Economic Policy Uncertainty Index. It was put together by Fed economists and takes in mentions of economic uncertainty in the news, takes in high-frequency indicators from the markets, and looks at the overall sense of uncertainty. And, of course, we can see we are at this point the most elevated, give or take, as far as the environment, since COVID, which was itself the most elevated since 1985. So this is clearly a very significant level of policy uncertainty. Even on trade policy, where, of course, the big kerfuffle was last year in April around the Liberation Day tariffs, we can see we've come down on the overall average for the trade policy uncertainty index. The 30-day we can see here are down, but the amount of volatility around that average is unheard of since perhaps the last time that the first Trump administration started to shake the apple cart of trade policy norms. And we haven't really had to have a lot of negative outcome on the actual tariff rates as such in order for all of this uncertainty to put pressure on global trade volumes, just on sheer people don't want to get involved because things are too rocky grounds. This level of uncertainty is, of course, a cooling effect on activity. So in 2025, we had the largest decline in global trade volumes since the 2008 financial crisis and the first negative reading since COVID. So we're looking at a situation that then necessarily puts what has been a near 3-year AI-driven narrative in stock markets in question, because that AI narrative depends for its very existence on frictionless global trade. 38% of the supply chain here is in North America. That makes sense. All the big models are still in North America. But there are single points of failure all around the world. 24% of the supply chain is Europe. And of course, unique players like lithography out of the Netherlands stand out. 26% is APAC. And of course, then the eye goes to Taiwan, to Korea, to Japan, to China, each of which control individual portions of the supply chain and have to be connected, have to have goods and intermediate inputs moving across borders seamlessly in order for the thing to work. in order for there to be an AI narrative. And all of this trade uncertainty is threatening precisely that. So, not surprisingly, the markets have struggled to rise. The S&P 500 hasn't managed a higher high since October last year, which was in the wake of the Fed chastising investors for over-extrapolating dovish expectations. So if we get economic data this week that isn't terrible, isn't amazing, but enough to sustain the environment, whereby it seems like rate cuts aren't going to be easily justified on economic grounds, but the markets still want them on hedging policy uncertainty grounds, then the markets aren't going to be happy because they want the cuts. And a buoyant economy doesn't dissuade them, seemingly. With that in mind, exposure-wise, I've still got some bets here on the short side of the US dollar against the pound, the euro, and the Canadian dollar, because it does look like, at least for now, the story is still of a dollar that's weaker, certainly a dollar that's rebounded on Friday. But as the Kevin Walsh story kind of washes out of the immediate focus, the larger issue still becomes all that deglobalization, as well as, of course, the idea that the Fed is still dovishly minded, whereas perhaps the story is not quite so clear-cut for these other central banks. I've got a bit of new exposure in gold here, short the puts, so looking for volatility to come out of the market and for the dust to settle a little bit, but with a bullish bias, because, again, the deglobalization story is not one that goes away with a new Fed chair. It's probably something that's got at least a few more years to go, best case. And so I want to have a bullish bias if I'm going to look for volatility to contract here. Still short Bitcoin, which continues to sink via a put vertical. Still short the bonds, both in the belly of the curve and at the long end via put verticals, looking for yields to resolve higher as all this inflationary pressure from the buoyant economy and from rising oil prices presents itself into expectations. Short risk both NASDAQ and the S&P, and long oil, essentially around all of these same ideas. More inflation, fewer rate cuts, markets don't like. And that is Macro Money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat.